Good morning, everyone. Welcome back.
Good morning.
Let me just turn down that volume. I don't know how Hardy gets it so quiet. But yeah, I just
Good morning.
wanted to say thanks for everyone who stuck around for so many hours that we talked yesterday. And thank you to everyone who reached out to me looking to help out more with the sub. If there's anyone else, feel free to shoot me a message as I'm still going through those. The sub or the talks. But anyways, I guess what I really want to hear about is thoughts on the Fed. They've got their talk later today. Yep, sorry.
Yeah, I just want to say Hardy's got the rundown on that. I believe he's the go-to man. I heard him speak about it earlier, and I think he's well advised over it. So I look forward to hearing him speak in a moment. I just wanted to give my... Yep, go ahead. Sorry, Hardy.
All right, so for those who are here, Fed is currently expected to raise rates by 50 basis points. That's 0.5%. And if that's true, still relatively flat to bearish on the market. According to Jay Powell's previous statements, there is no reason for rates to be increased by no less than 75 basis points because inflation hasn't yet come down to 2% and unemployment hasn't gone up in any meaningful way. For some bizarre reason, the market is pricing in the 50 basis point number. So if 75 basis points comes in, it's going to be a huge gap down. In terms of how I intend to play this, the Fed funds rate announcement comes out at 2 o'clock. I want to try to be in a 20 to 30 delta put position, 0 DTE on SPY, by around 145 or 150, because there is a chance, however small, that the markets will be halted ahead of the announcement. After the initial move, Jay Powell, and before Jay Powell's press conference at, I believe, 2:30, I intend to look into buying a strangle on SPY, again 0 DTE, buy a 5 cent per share call and a 5 cent per share put. Jay Powell's comments have a tendency to move the markets far enough that either side should be able to double relatively easily and relatively quickly. I'll be able to confirm this later in the day. So to summarize for those who want the play, SPY 20 to 30 delta puts at 1:45 p.m. today, and then a SPY 5 cent premium strangle, whatever contract is 5 cents, 0 DTE, at 2:20-ish.
Do you think this is the beginning of the Fed pivot or them starting to talk?
Okay, what are the circumstances under which a pivot is favorable? Do you know?
Inflation is down, unemployment still in good numbers.
Inflation needs to go down, and they're targeting 2%. That hasn't happened. It's decelerating if you trust the CPI numbers to not be manipulated. But unemployment hasn't gone up, which can bring inflation back down to 2%. So, assuming Jay Powell keeps his word and his track record stays pristine, that 75 basis point increase is a real possibility.
My understanding is that they're not so much worried about unemployment as much as they're worried about wage growth. Do you have a different opinion on that? Because I don't think the two are similarly correlated, but not exactly.
The stated goal was to increase unemployment. As for wage growth, that's unavoidable because of all the money they printed.
To some degree, yes, but in theory, that's the cause of inflation. The circular world of inflation is wage growth. You have higher wages, which means you have to raise prices, which means more people, which means people can't afford, which people need to hire. That's the wage growth, from my understanding, is the crux of the actual issue. Although, yes, they have talked about specific things like that. I just was curious if you believe it.
I disagree that inflation is tied to wage growth, because as a manager, and I don't claim any special knowledge,
the other way around.
Yeah, I'm not going to raise wages for my employees unless it directly affects their performance. They stop performing because they need to be paid more. They need higher compensation. Well, then I'm going to look at how much I can afford to pay them, and I'm going to raise their rates so that I'm still comfortable with the profit that I'm making.
Mm-hmm. But don't they force you to at points? Like, I mean, here in Canada, for instance, I'm not comparing it, but they in certain states they could force you to raise it. I don't know what state you're in, but they could force you to raise it no matter like it or not. And
let me clarify that a little bit more, because Hardy said the reason we have wage growth is because we printed all that money, and that's the problem, is that we have caused the wage growth. It's not so much a naturally organic market, development, as we've seen. Unfortunately,
it's like it's this, like he says, like, old man, it's just fucking nothing, right? We're created out of nothing.
Now,
Yeah,
I want to clarify. This
Well,
is
no,
my
hold on,
thesis.
hold on.
I don't claim to be I don't claim to know everything about the markets, but this is my personal perspective. If
Yeah,
you
so-
agree, the
well-
plays are in the comments. If you
Yeah,
disagree,
I like
I'd
it,
love to
Hardy,
hear
by
your
the way.
counterpoint.
Yeah, I think if you're bearish on the market, essentially that's a phenomenal play if you're going to get the move. I don't know what a 30 delta move requires, what percentage move in the underlying to be in the money. Do you know, Hardy?
But that's a double though, Hardy. So you're saying pick the fives on either side at around that time?
Pick the lotto ticket on both sides. So whichever strike is 5 cents on either side, buy each. So effectively, it's $10 per contract, and you're expecting the market to move a large amount as JPow's talking. And the
Okay.
last, 4 rate hikes, it's done exactly that. They're always, for those who were on the talks that I hosted, we would always bemoan after the fact the possibility of having had a 20 bagger. So now's a good chance to
Goodness.
potentially take advantage of that.
So is there another possibility, like with that, when you're saying that, it's like you look at it and say there's the like the implied volatility, like, or the that's in there. Should you be looking at the amount that there is in any of those ones that you're looking all the way down?
The open interest.
Yes, thank you very much. I'm a little bit right now, kind of working on no sleep here, but yeah. So like on the open interest, if I'm looking at that, like, should I be looking at that all the way down the chain, in any parameter on either side that might angle me to want to maybe go a little bit more on one side than the other, hypothetically speaking, on that
Can
lottery ticket?
someone please summarize Lockstar's question? I
Yeah.
lost
So
track.
basically, he's asking, okay, so when you look at the open interest and something about the implied volatility, I think what you're trying to say, and just keep some housekeeping rules, guys. Let's just kind of keep it short and sweet on here. What he's trying to say is like, hey, should I go on both sides? I get what you're saying, but at the end of the day, should I be looking at the open interest and something to do with implied volatility? Guys,
but-
pretty simple. What do you got?
Oh yeah, but over
Excuse me.
should I be going over on one side, like you said, go 50-50?
Yeah, he's saying
Just play
take
that way.
it. Yeah, Lockstar. He's just saying take it on both sides. He's saying, look, I can't tell you if it's going to go
Oh,
left
no.
or go right, But at the same time, he's saying, guys, just put $10 on one side, $10 on the other side. You can't go wrong. You're going to lose $10 either way. And if
Not
there's
quite
a big move,
Each strangle costs $10 plus commission because you're only paying 5 cents a share for each contract, which is $5.
okay,
Make sense?
does. So, guys, just a little housekeeping. Let's keep it to the point and short and sweet. Let's not step over anybody. I do hear some stepping over. Just kind of keep it simple and cordial, and have at it.
Whoa, not everyone all at once.
Well, I think
All right.
generally
Go ahead, talk everybody.
there's interest in having a conversation about economic conditions more than there's interest in discussing specific plays.
That's fine. Go
I
ahead.
do want to point out that SPY has crossed slightly over delta neutral. And let's see. Last time it did that with any meaning was November 9, and it stayed above delta neutral following that, which was kind of a small rally. So,
Hardy, would you be willing to explain how you track the delta of the price on an
so
underlying?
so I specifically say delta neutral, not delta, because delta means something else. But for those who are unfamiliar, delta neutral is the price of a stock where a hypothetical portfolio made up of the entire options open interest has a portfolio level delta of 0.
Wouldn't that be at the current market price or no?
No, sometimes it's as far away as 80%.
You can have bullish or
Wow.
bearish sentiment on the underlying through the
Well,
options market, correct?
position relative to delta neutral doesn't automatically mean bullish or bearish. What matters more is the reaction of the underlying stock price relative to that delta neutral line. So the delta neutral could be 7 and the price could be pi. It doesn't really matter unless the price routinely reacts off of delta neutral.
How does delta neutral relate to max pain?
It doesn't. Max pain is the price where the most options by open interest expires. My problem with max pain, just in general, it's still a good directional indicator. My problem with max pain is it doesn't necessarily take into account the premium that was sold to open those contracts in the first place.
Right. Yeah.
So back to the guy who was talking about, and I do apologize for getting. I think it was Monster about you being. I think it was you that said you're a manager. Is that correct?
Yes.
Yeah. So what were you stating earlier before that
Well,
situation?
I think Crazy had mentioned that he was thinking wage growth is upstream of inflation, or the money printing was not the cause of wage growth. And I'm saying very clearly, it's very simple. As a manager, someone who's responsible for looking at my employees and saying, how am I going to generate the most revenue for the company so that we can expand the company, so that we can, in the management and for the ownership, collect the most dividends, the most compensation that we can, for the company to be healthy. And we're not a public company. We're not traded on the stock market or anything, but I'm looking at each employee that I employ, what work they do, and I pay them as little as possible. Right. And I have a relationship with them. I sit down, I set guideposts for them so that we're going to, hey, we're going to, every 3 months, we're going to sit down, we're going to talk about what you've done, what you're doing, and what you can do so that you understand your position with the company. And then I'm going to get a feel for what I have to pay them. I'm going to check with my competitors to see what they're paying so I don't get blindsided and surprised when half my workforce walks off because there's a better rate somewhere else. And it's on an employee by employee basis, but the general rule is you don't pay more than you have to. So you don't look at economic conditions and say, hey, I have all of these guys, this huge labor pool that is willing to work for $15 an hour, and say, but hell, because there's so much money available, I'm just going to, out of the kindness of my heart, pay them $17 an hour. I couldn't operate like that because my competitors certainly aren't going to do that. So the wage growth is not driven by the amount of money that's available in the market. I mean, for me, it was specifically driven by, what do I have to pay people for them to come to work on time in uniform, ready to do their job, and to do that job competently enough that I can stay in business?
Let me stop you right. What changed to cause that mentality?
All of the money that was coming into the market and the compensation people were receiving for not working, the excuses they were able to make was COVID. So they didn't have to come to work. Not only that, but still at this time, every company that I'm aware of is still hurting for competent employees. People do not want to come to work. And now I'm speculating, but there is a generation, a cohort I couldn't tell you the specific age, but that was just supposed to be entering into the market around 2019, 2020, 2021. And because of the COVID nonsense, they have a completely different idea about what is acceptable for employment. I'm not sure what programs still exist that are enabling them not to come to work. And we have seen a lot more interest in working, but it isn't sufficient, and it isn't the kind of people we'd want to employ.
So with that being said, do you have a higher turnover rate now with your employees post-COVID because of the incompetence? And are you completely filled in all your positions, or are you finding that hard to fill because of the wage? People are just wanting to get paid a lot more.
So right now we're comfortable. We're not comfortable in the sense that we're paying them what we'd like to pay them. We're overpaying them. They're being overpaid for the work that they do.
So you're overpaying for incompetent workers.
You can't say no. We're overpaying for basic competence.
What business are you? What's your industry, Monster, if I may ask?
It's transportation. It's nothing special. It's very simple. Household goods moving.
So the Fed had a whole spiel about this. I don't know if it was last week or the week before. And they talked about labor markets. They talked about people exiting the workforce, and their commentary wasn't at least very focused on like the next generation not entering the workforce. It's a fairly interesting talk, so like recommend go in and listening to it. But the big thing was early retirements, given the large bull rally that we had essentially right after we got through the first few months of COVID. COVID directly kind of encouraged some older workers to exit the workforce. And then thirdly, we basically shut down the borders for all immigration, or for large portions of the immigration numbers that we would normally have.
I don't
like
employ...
all in all, that was 5 million workers that exited the
I think we've covered enough on this topic. What other plays do we have to share?
Well, even if ticker BYDDY, I've been talking about it this week. I came across it. It's Build Your Dream EV company. Buffett came out, withdrew, don't know the exact $1 million amount, but he's still long on the company.
It's like 34. Yeah. I remember 34. Yeah.
And this is just me thinking, and I was like, maybe he's just making the price more appealing to perhaps a Saudi investment. But I am still going to use this opportunity to build my position there.
He reduced his stake by about like 12 basis points, so 0.12% from 15.07. So I think that's particularly material. Is there anything else you see in the company?
I mentioned, I think, a couple of days ago about just their price points and their expansion, and how they're in 2023, they're looking to expand in not just one market, but several different markets. I was watching their reviews, and their cars are just like outstanding. And, you know, compared to original company I was looking at, Lucid. But yeah, I just see them growing really big in 2023. Just they're going to be able to meet the demand, and they're meeting the price point, you know, especially in this economy. I think their lowest priced vehicle brand new is $10,000. Not the most appealing vehicle, but it's a complete EV. And then their more, I guess, Tesla rival would be their Seal or their Dolphin models. And those price points are way below Tesla. So once they just start producing in America, and I think they're just going to really take over, especially now with Tesla's problems.
Have you listened to any of their earnings calls? Just curious. Do they give a breakdown of like what they're selling? I mean, I see here they do trucks, they do forklifts, they do buses, they do sky rails. Are they actually selling all of these yet? Or are they is this kind of their whole growth story?
No, they are selling a lot of them. I'm still new to this, and I'm still learning how to kind of evaluate a company and whatnot.
The ticker, by the way, for people in the comments is BYDDY. And on the note of figuring out how to evaluate companies, is price point really the best strategy? Because at the end of the day, it all boils down to, earnings. So if companies can maintain a higher price point and still sell a significant volume, that's even better.
Are they going to be allowed to sell in the United States? I mean, if so, right now, and I misspoke yesterday. I didn't realize there was another article that came out about outright banning TikTok in the United States because of the data that they gather. If this is an automobile company and they start gathering the same amount of data that Teslas gather, are they going to be even allowed to sell those cars in the U.S. for fear of Chinese companies getting access to the data that they can share with the Chinese government?
I mean, they're already manufacturing in China. In the United California, it looks like. Sorry, their manufacturing facility is in Lancaster, California. So I would assume that, yes, they're producing them in the United States.
Thanks, Denny. Monster, did you have something you want to ask?
Is being banned in the United States, or that's just, I mean, I've heard that speculation going back at least 2 years. And as far as I know, I can still go download TikTok. At least I know my mom's using TikTok.
Well, there was something yesterday. Or the day before.
It's a bipartisan bill. So the irony of the whole thing is we can't agree on fucking anything, but we can agree on we don't want TikTok as a government.
So I haven't seen Meta's shares really react to that. I mean, it's pretty much flat since the announcement came out. So does that signify that it's unlikely to make it through, or that it won't actually have a huge impact? Yep.
Just before we take off down that road, I have been watching a show called War of the Worlds on Epix. They had a fucking Hyundai electric vehicle on that thing last night, season 3, like episode 2. So it's 2022. This thing was sexy, and I want one. And I completely forgot what Tesla was all of a sudden.
All right. Well, you and your Hyundai fan. All right.
Hold on. Did
Short
you say
Tesla.
that a dream car starts from $10,000? Did you say? Is that what I heard you say?
I didn't say $10,000. Who said what?
What did you say the lowest car cost? How much was the lowest cost of the electric vehicle?
Oh, fuck out. Are you talking to me? I didn't say shit about
whoever said it previously.
I said what?
Cost of vehicles. He's asking about someone who said cost of vehicle.
I believe you actually did say something about $10,000. It sounded like you were talking about.
Pretty sure I did. I didn't mean to. There was a Hyundai electric vehicle on a television show from 2022 that was sexy as fuck, is what I'm saying. And so all of a sudden, I'm very interested in other vehicles besides Tesla.
Yeah, saying short Tesla, and I was gonna let's talk about that play, can we? I see speculation from some of my Twitter feeds saying Elon Musk has said, "Hey, look, I'm not going to sell any more shares. I'm not going to sell any more shares." He's done it 3 times. He's constantly dumping the shares. If you look at the last several days, even the last 2 days, where most of the market seemed to be trending upwards, Tesla was still down like what, a couple of percentage each day.
Speaking of bearish, Mast, is that why your avatar is the way it is? Are you starting to feel bearish?
Man, it's unfortunate, but the entire EV market is in a bear market right now. It's not going to turn around until Elon gets off of his ass and actually does something right. And if he keeps making these mistakes, the entire EV market is going to fucking suffer.
BYD is the entire EV market. The U.S.
I don't know if it's Elon needing to get off of his butt as much as it is him needing to get off Twitter.
I think that.
You think that? What?
I have
I don't think at all.
I have strike price of 155 puts on Tesla expiring beginning of the year, January 6th. And I've held those for like 2 weeks now.
You're gonna make a payday.
Yeah. So I mean, I'm gonna hold those out until the new year. I mean, I don't see them going up anytime soon.
Could I clarify? Because I'm new to this. A lot of the verbiage that's being used is foreign to me. You're basically saying you're going to defend your ownership of shorts, basically shorts, in Tesla stock. So expecting that it's going to close below 106, or what is it, below what?
Oh, I'm saying it's going to go below, like, my break-even price is 147. So I'm seeing it just going down by the new year more and more. I mean, news just came out that he was selling furniture at Twitter, and I know, like, I can differentiate two companies, but I mean, he's needing to get money from everywhere he can. He just donated money to his own charity. I mean, I'm pretty sure that's going to just be put back into Twitter or into another company. But yeah, it's going down.
So yeah, it's going down, and buying Twitter is his escape hatch.
Yeah,
I think you guys are definitely doing some great drugs this morning.
I think
you're not.
We have to be realistic about Tesla. It's not going to fucking die, right? So yeah, it's going to go down. I think it's all going to normalize, and not that I'm trying to pump another company or anything.
Okay, well,
like
hey,
that.
wait. Hold on, though. Is it fair to say that it's not going to die? I mean,
yes,
why
would
it? It could be
die.
positioned to
It's
die.
established company. It's an established EV company. And we discussed this, I think, yesterday. It's not going to die away, but with all the competition that's coming in, it's definitely not going to be what it was at the 400 trading days. Definitely never going to see those days again. I mean, that's just me thinking.
I think the immediate fear is that Elon is very over leveraged. I think his position gets liquidated somewhere around $120, $130, which is significantly lower than your 147 break even. But as you approach that, I think he's going to be trying to do more and more, stunts to keep the price up. And we're basically already seeing that. Yeah.
But like he's saying about the Hyundai that he's seeing rolling around on new television shows, all of the other car manufacturers are now going full speed. They've been in the game making vehicles much longer than Tesla has.
But they don't have the software.
Tesla rose to prominence.
They don't have the software. I just shopped Rivian and decided on a Tesla myself because they don't have the
they
I think
don't have the supply chain locked in. They don't have the batteries. They don't have the gigafactories. They're not gonna. Tesla's exploding in Australia right now, China, Europe. He's got some of the best-selling cars in the rest of the world. They don't
When you
care
say
about
exploding, do you mean that in the literal sense or exploding in popularity?
I wish they would explode.
You can take it both ways, but the EV growth is on an S curve.
They have an inverse relationship, let's be clear.
And Tesla can't get enough of that growth.
They're not growing in China. They're actually shutting down.
They might be losing EV market share, but they're selling more and more cars, as many as they can make.
For the consumer.
Because the EV market is growing. Now BYD is probably bigger or as big as Tesla, and that would be if you're wondering what's going to compete with Tesla, it's not going to be Hyundai or Ford. It'll be BYD. You need to look at it as a global market. They don't care about Twitter, and the U.S. is a small country.
So an alternative play, to go back to a play, there's a company that I played last year in this market, ticker Apple Spain Potato Nancy, called Aspen Aerogels.
It was perfect.
They manufacture aerogels, and they have a product that they are now selling into the EV market, which is an extremely light but high heat. What would you call that? Just like there's no transfer of heat, and they typically sell them into
insulator.
Yeah, thermal insulator. And so they had a huge run up last year that I rode between the middle from like 16 to 25 or something, 16 to 30, and it continued to skyrocket, but then tank down. And it might be an interesting opportunity to get back in. They are trying to pivot, I guess you would say, away from sort of the industrials where they typically sell into this EV market. And I'm sure there's competition that I don't know about. I didn't do a ton of DD. Somebody might know more about it, but it's just a kind of an alternative play on just the growing EV market in general.
I mean, the way I see Tesla is for a long time, for 100 years, the American automobile industry has been baking apple pies, and people loved it. The people love that apple pie in the United States and globally. Along comes Elon. He says, "Hey, I've got a blueberry pie. I want you guys to try." And everyone said, "Yeah, we want blueberry pie." And like these electric cars come out, and everybody loved them. Now all the other car companies are saying, "Hey, we're going to bake some blueberry pies too." So the pie for electric cars is getting bigger because of the acceptance that Tesla ushered in. But there's going to be other people that are going to be getting pieces of that pie now. It's not going to be all Tesla.
Yes.
But
And to stay within that metaphor, the companies that have been making the apple pies for the 100 years know how to make a pie much better than the guy who just started making blueberry pie. So while the flavor
they don't know how to write
might have been enticing,
they don't know how to write
now the competence as they start to crowd it. I'm sorry.
Well, the Fords, the GMs, and some of these other companies, one of the advantages that they have that Tesla does not have is they have a legacy of automobile designs that were very, very popular. That they can take the chassis of an old like a 69 Ford Mustang or any of the old looking cars like the muscle cars, take that chassis and toss it onto an electric frame. And I think people would be nuts over that stuff. And it doesn't take much. It doesn't require a lot of investment to do that.
That's a good point.
If you have an electric platform, you don't have things that are tightly integrated in that platform like you do with transmission and oil and coolant and size of the engine, all that kind of stuff. With an electric car, you got a handful of electric motors that are directly mounted onto the wheel. The rest of it can be custom fit on top of that frame. So these old car companies, like they have the old Thunderbirds, the classic cars like the muscle cars, you could take any of those designs that they own the rights to, and you can pop it onto an electric carriage, and I think people would go nuts over that. Like you could have a 57 Chevy electric, and I think people would go crazy
going
over
nuts
that.
just thinking about it right now. I'm like, oh hell yeah, it would be kind of cool to drive around, classic model,
an old Stinger.
All right, guys. What are we talking about here?
He's right.
Hey,
Yeah,
so
I agree.
I got a
Let's try to tie it back to how does this affect the economics or the underlying value of a company. I think the argument is ultimately other car manufacturers like the Fords, GMs, and even some of these newer manufacturers like Hyundai, Kia, all these other companies that are ultimately going to get into producing electronic vehicles, not just because it's what, quote, unquote, consumers want, but also because governments across the world are almost mandating it. We can expect that they're going to mandate it. And while I've seen speculation, there's not enough rare earth metals to ensure that we can produce the number of EVs that these governments are demanding. I know California's got some crazy laws about all the cars got to be EVs by 2030 or something like that. And so they're going to make EVs. There's going to be demand that is going to be forced. Who's going to profit the most from this? Tesla, if I understand correctly, has had massive subsidies. And if I have a choice between investing in a company that is almost a circus act with a cult following that was a flavor of the month, which is now going to go out of style as, the owner is having a fire sale, kind of almost like Carvana's owner.
Tesla has zero debt.
off of speculation.
All right. No more car talk. We've done this to death. Let's move on.
Then Yada had a question. Would you like to share with us, please?
Hello, good afternoon. It's afternoon in my country anyway. So what do you think about the outcomes of the Powell speech today? What happens if the rate hike is below 50 base points, which is my prediction anyways? It counts nothing, but my prediction is it's going to be below 50 base points. What do you guys think is going to happen?
So if you think
market would explode.
hold on. If you think the Fed's fund rate is below 50 basis points, let's say 25.0 or anything below that, then bullish. You should buy calls.
Okay, I will do. Also, I'm very bullish on SPY because I think that USD economy is strong and inflation will come down sooner or later.
All right. Well, thank you for sharing, Zenyatta.
I just posted a poll to Twitter asking what people think the interest rate hikes are going to be. The options are 50 basis points, 75 basis points, and I'm an idiot. If you look in the comments, there's the Fed Watch tool offers the probabilities of what the market is pricing in, and so far it's 4-1 for 50 basis points. So that's 80%, 50 basis points, with the remaining being 75 basis points. But if you're right, it's a big payout that it's less than 50 basis points.
I think there's a 1% chance of less than 50 basis point, because I think they've already overstepped with the interest rate hikes.
Jay Powell would have prepped the market if it was going to be below 50. He's already in many ways prepped the market that it's going to be 50 to begin with, because he doesn't want things getting out of control and getting euphoric. There would have been a ton of prep if they were planning to do below 50. And there really hasn't been. It's not happening.
Yeah.
Having said that, I'm
If
still going to
we-
vote I'm an idiot, because I am an idiot. But yeah.
He literally said that he won't jump over hikes, so we're not going from 0.75 to 0.25. That's a fact.
Yeah. I think you would see a smaller rate hike if we had seen like sub 6.5% inflation. If we had seen a huge drop, yeah, I could see him not raising the interest rates as much. But we had a 2-point decline in inflation or it was 2 points below what was expected. So we're definitely going to have the 50.
I personally think it's going to be another 0.75. And then once spending organically slows down after Christmas, that's when we're going to start seeing drops. Well, one drop.
personally my agreement. Yeah, I think there are a lot of global economists that agree with that. Well, that the Fed are in a position where they cannot slow down rate hikes.
I agree.
They're
I
basically
agree
looking down the
100%.
barrel of a gun.
I've been saying
Do
this
you
for
think-
about a month now. I think that it's going to be another 7.5. It's going to hurt. It's going to fucking suck. But I think it's
7.5?
going to be another 0.75.
Okay.
Do you think yesterday's CPI rally, do you think that's going to really affect like how he comes and approaches his press conference?
It
Is
only
he gonna
ended
try
the
to throw
day up, like 3 points? Like it basically came all the way back down almost, did it not? It wasn't much of a rally. It was a pop and a drop.
Yeah.
Yeah. What
It
did
was like a woohoo. Well, wait a minute. Inflation's still an issue.
what
But, I
did
mean-
Biden talk about? I missed that whole thing. Like, what was Biden's speech all about?
bunch of old man nonsense?
Hey, scenario here.
No politics.
If we do get a 75 basis point hike, which is a slight possibility, but we also get a strong indication that the rate cycle is ending, can we rally off that?
Yes.
Yeah.
Any tone toward no more rate hikes, and I think money starts flowing back into the markets.
And I
Go ahead, Hoof. Did you have something to say, Hoof-hearted? Go ahead.
Yeah, guys. Hi, everybody.
Morning.
Hope everybody's doing well. I've had some real life crap to deal with, so I haven't been able to get on. But my question is, what are the indicators that the rate hikes are stopping?
Jay Powell doesn't raise them anymore.
But are there other indicators that we can look for to try to predict when it will
job
stop?
The stated indicator that Jay Powell and the Fed will use is the inflation rate falls back to 2%. One lever that they are using to move the inflation rate back to 2% is increasing unemployment. So theoretically, you can use either of those metrics as a signal or indicator that the rate hikes will slow down or decelerate.
Okay, thank you.
But we have to remember, sorry, I want to add something. The rate hikes, there's a delay between rate hikes and inflation going down, and they know it. Do you think that this will affect today's decision or future decisions? I mean, we cannot think day to day, right? If the rate rises, then there is a big delay for the inflation to come down. Is that correct?
I wouldn't call it a big delay, but the inflation needs to come down. And if it doesn't come down fast enough, the Fed may be forced to accelerate the rate hikes.
So there is a thought that, and you may not know American history, and I don't really know it well, but I believe it was Volcker who previously essentially raised rates to a certain point, thought that he had calmed inflation, started to back down, and that's when inflation absolutely skyrocketed to 20% or whatever it was at the time. And so I think there is a fear internally in the Fed that we will not repeat history and take our foot off the neck of the economy too early, because if we do and inflation comes back, that scenario is a hell of a lot worse than just continuing to slowly put pressure on the neck of the economy.
Yeah,
Does
the thing is that
Thanks.
is coming currently.
I want to share that I think the focus would be on the February hike, because yesterday after the CPI announced the rate of being 450 and 475 raised 20%. I think that caused the rally, but after that the stock came down. But the bond is still reflecting in the Fed like voting in this. The data provided by CME is the data hasn't changed. So I think maybe the focus should not be on the December one, rather than should focus on the February one.
It's possible. Is anybody playing other stocks? I mean, assuming they can get a bigger move, like some of the more tech volatile names, like, I don't know, Cloudflare or other things that will probably move in conjunction with this, obviously, that might move at a greater percentage. So your potential gains there might be higher. Just curious.
I think Amazon, if the market pumps, I'm ready with Amazon.
Hadi, quick question about the SPY play, the 25 to 30 delta put. So what's going to be the expiration on those?
0 DTE for both plays.
Today.
To explain for everyone else, the purpose is to take advantage of the change in price of SPY because of these announcements. That catalyst is unknown, so we're effectively gambling on the outcome. If we're right, tendies. If we're wrong, ramen.
And Hadi, another question: is the Home Depot play still on?
Yes, I'm still holding back some capital to buy Home Depot puts closer to earnings, but the fact that they haven't announced Q4 in like celebrating, hey, we grew our Q4 holiday sales faster than expected prior to the actual Q4 announcement suggests to me, is confirming some of the friendly stories that I've heard.
Gotcha. Thank you.
And this isn't so much of a Powell play, but I think Titty was the one that brought this one to the attention of people. If you're holding Dole calls, you might want to and they're in the money, you might want to consider exercising those. That way you get to take advantage of the dividend that they're going to be, I think Friday's the ex-dividend date. So if you exercise those calls, if you can exercise those calls before the ex-dividend date, then you can take the dividend on those as well as get your gains on the calls being in the money.
Has anybody been looking into airlines?
No, tell us about it.
No, I kind of threw out China Airway earlier this week, and I was kind of redirected to other airlines that might do better, and I was looking at those. I just didn't know if anyone had any particular plays they had been working on. I haven't figured out a play yet. I'm still trying to read up on these airlines. I know initially for me, Air New Zealand, I mean, the only reason why that got me kind of interested was because the CEO came from Walmart. He did really great at Walmart, and he's from New Zealand, so I think there's a lot of pride that he has trying to turn around that company. And then with just such a solid foundation at Walmart, I mean, leadership could do wonders for a company, or horrible.
Are airlines really even good businesses though? Like, isn't that what sort of is coming out?
Understand that most airlines today make 50% of their revenue from the various points and miles and rewards programs. They make their money because they're fundamentally fintech companies.
That was
They
kind of
don't
my
really
understanding as well, is that I would steer far away from it just seems like a very strange business model and sort of propped up by just I don't even know. I mean, it's a strange business model that it's turned into.
How does that work? Getting money from miles.
So when an airline partners with a bank for the mileage program, typically they have some sort of arrangement to receive some of the interchange revenue. When you swipe your credit card at some merchant, typically that merchant pays anywhere from 2.25% to 3% of the swipe value to the interchange network. The interchange bank takes a slice of that. The bank that's lending the money takes a slice of that, and the remaining interchange goes, in this case, to the airline. So let's say, hypothetical numbers, 1% of all card swipes that are paid on the various branded credit cards flows through as revenue to the airline. It's in the airline's interest then to allow people to redeem miles for less than the 1% of spend that the airline's receiving as revenue in order to realize some margin on top of their operating expense of actually being an airline. It's a way that airlines have been able to smooth over their monthly revenue and avoid some of the seasonality in the travel business.
I have a question about a completely unrelated stock if we're ready to change gears.
Go ahead.
So I'm looking for a job. I'm a software engineer, and I interviewed with Clayton Holmes yesterday. And in doing that, I learned a lot about that company. I don't know anything about the financials of it or anything like that, but I've tried, like they told me that they were manufacturing, I guess, modular shit for the military. And so I got really interested all of a sudden in their stock, but I went to look it up and all I could find is Berkshire Hathaway. So
They own it.
Yeah. So it looks like the only way that I could invest in Clayton Holmes is Berkshire, right?
You would have to long Berkshire and then short everything in Berkshire's portfolio that isn't Clayton Holmes.
Yeah. Okay. Thank you.
Can I ask that question? You said that they're modular.
Yeah, I haven't done enough research on it, but if I had to assume, I think what they're doing is they're just like standing up bases really fast, which makes sense.
I'm sorry, I didn't mean to interrupt
No,
you. Go ahead.
no, you go ahead.
So, how does everybody feel about modular being the future of home building? I've heard it, I've seen it, I've read it. What do you guys think about modular companies like down the line in the future,
The fact
including
that
this
it's
place?
still more expensive per square foot to ship assembled homes to the construction site versus building on site. Some good evidence for this is to look at the major home builders. Think the likes of Toll Brothers and their competitors. They're still building stick frame houses on site. They're not really using much in the way of prefab.
Okay.
Now that might change with the market, with supplies going up or down. You know, prefabbed houses might. That all depends on the market. Again, currently we're still in an economic state where the supplies to build a house right now are more expensive than building a house that's already been built for years.
I think another way to think about that is I'm going into a recession where people don't have a lot of money. They're going to do a lot of stuff themselves. And if you're in DIY, you're going to want a house that was built with sticks, not a modular thing. I don't know if you guys have tried to do construction on like trailers and shit before, but it's stupid. It is the dumbest shit.
Great. I appreciate everybody's input on that.
I've got a question on 0 day. Hardy, it seems like you do these 0 days a lot. I'm looking at just like the at the money puts and calls for today, 0. Do you think there's an opportunity just to sell either side of this and just reap, assuming the market's not going to move up or down very much? What do you think? What kind of move would you
Of
get
course you
between
can, but
9:30
you
to
need
noon
I
on the
mean, just
on the
look what
theta?
happened yesterday. Look what happened yesterday.
Yeah, well, I'm just thinking the theta. I mean, the drop in theta between 9:30 and 12 should be what, maybe 15 or 20% of the time value, maybe.
Depends on what the we'll say. So let's look at the money put the 401 Delta SPY, December 14 401 puts Currently have a theta of -2, and they last traded for $3. So that's yesterday's price. It's not linear. It's part of the problem. So you can't assume the theta loss will be linear between 9 and 12, and then between 12 and 3. The expectation is that the decrease due to theta will accelerate between 12 and 3, and it's on some curve that's constantly changing.
Very interesting.
Can you guys trade options before the market opens?
If you find a willing buyer or seller, yes.
Oh.
But the options pricing is whacked out a lot of times.
That's only because there's no liquidity.
Correct.
So I've got a play, folks. Sorry I wasn't here this morning. I had lost power at my house. Looks like my heaters kicked on and kicked off breakers, so I had no power this morning when I woke up. Had to fix it. So sorry I was late. However, the play is on BUD, ticker BUD. Bearish, $60 puts expiring Friday. Just looking for BUD to snap back down to its previous range. I've compared this with TAP and SAM, two competitors, and I've also looked at a few other technicals on BUD. I don't think it's going to maintain its current price action. So if you can pick up these $60 puts for 30 cents or less, that's what I'm going to be doing. If it's over 30 cents, it becomes a little too high risk. I don't think they're going to get much farther down past 59.70 by Friday. They're pretty cheap because it's a low implied volatility. That's the play. BUD, $60 puts Friday.
All right, Denny, you were looking for a theta play on the broad market based on FOMC.
Yeah.
Yes. Yesterday, I opened a one-day condor short the 4160 and 4000 on the SPX. Let that ride overnight. I'm looking to sell at open. Probably going to split up the wings because one side is obviously much more profitable than the other right now, but the markets get wide at open. Then I'm going to wait for the FOMC numbers to come out and watch for a real high swing or a real low swing beyond past couple days worth of resistance. When it gets high, I'm going to then sell the 20 delta call spread, and then I'll wait for it to swing back low and sell the 20 delta put spread for tomorrow. And so that's my super short term theta decay plays and volatility contraction plays for dealing with FOMC is you basically cut FOMC out of your risk factors. And then hopefully what I'll end up with is the market settling somewhere in between my two super wide wings that I got way more premium than necessary for.
I have a quick question regarding the Buffett play on BYDDY. Did he buy the BYDDY shares or the BYDDF shares? One is an ADR, the other one it seems like they're the direct shares. If someone knows.
Are you talking about that EV company, BY?
Yeah, BYDDY, Build Your Dream Car Company. They have an ADR and the ticker symbol is BYDDY, and then there's also ordinary shares, and that ticker symbol is BYDDF as in Foxtrot.
No, I was looking at BYD company, and I'm just I'm going to pick up some shares now that Buffett he got disclosed that Buffett took out some money. Yeah. So I'm just going to pick up some shares now that it drops with that news, and then with the hopes that we're going that company's going to get another investor and then just really blow up in a good way.
But which ticker are you buying shares of?
BYDDY.
Okay.
BYDDY.
Roger. Okay.
Hey,
Grinder is under $6. I think it's a good buy right now.
Hey, Hardy, I have a pen and paper. I didn't have one before because I'm at work. Can you talk about that SPY play again? The FOMC again, real quick.
The FOMC plays? It's in the comments.
Yeah. Oh, it is? Okay.
Good morning, everybody. I had a quick question for you. I'm fairly unfamiliar to this this market, but on the news of the nuclear fusion breakthrough yesterday, are there any tickers or companies for the short-term news or long-term plays?
Nope.
No. ENPH.
I mean, hydrogen, right? Because doesn't fission take hydrogen?
Yeah, but the hydrogen companies use a methane breakdown process to create the hydrogen used in their hydrogen economy.
Well, there you go.
That fusion's still a lab experiment. It's not coming to market anytime soon.
It's also not self-sustaining.
Yeah, long term.
Yeah, it could take decades for that to reach production.
It's been 10 years away from production for the last 50 years.
Most importantly, that experiment hasn't yet been reproduced. Until someone can reproduce the experiment, I'm not going to hold any faith in it.
If you want to look at energy, the IEA just upgraded its renewable energy targets 30%. That's the same amount of energy that India uses in the next 5 years. They said we're going to build as much solar and wind in the next 5 years as we have in the last 20 years. And they're getting this from interconnect queues. So that's going to happen. So if you want to look at energy, look to solar. They just upgraded that. That's big fusion news. That's fusion from the sky coming down.
Yeah, I own.
What's the ticker
Also,
leaping
I
with?
would look at
Enphase, ENPH.
All right, cool. Thank you, General.
any thoughts on Moderna's cancer research coming out yesterday as well, showing that they're negating about 40% of skin cell melanoma with their vaccine trials. Thoughts on that?
Looked at the chart.
I'm interested in that from a health perspective as a cancer fighter.
Yeah, I believe didn't they go up 30 points yesterday on that news?
Oh yeah, they went up bigly.
Yeah, I think that's price dead. I mean, but it's good news, especially for anyone who lives in an area with high UV exposure that doesn't like sunscreen. Probably should get vaccinated then if you're not going to protect your skin other ways.
I think that's the most common form of cancer as well, so that's pretty good.
It's really it's an aggressive form of cancer too, and you also have
Not any real firmly established replicated studies showing that UV exposure, pure UV exposure, is tied to skin cancer. So let's stop that assumption.
Wait, what? I'm sorry, I didn't hear everything that you
If
said.
someone wants to provide evidence, I'd like to review it. I've researched skin cancer and its relation to UV exposure,
Monster,
and I'm
I
talking
appreciate you,
raw.
but we're 1 minute to open. Can you save it for after open?
Absolutely.
Please, anybody. Last minute.
Let's go spy puts.
Okay, we have spy puts. Anybody else?
Yeah, Hardy. Earlier in the week you mentioned Chevron. It looks like oil is really on the bounce here. Are you still behind that play?
1 minute till open.
0.5% what I put into that play, and it looks like it's going to pay off.
What time does Powell speak at?
2:30.
Information released at 2, so you'll see market move.
Everybody.
All right, there's the bell.
Feel free to continue, but I'm going to go ahead.
Try not
and
to
start
lose
the day.
too much money.
I'll back up. I'll be back around 1:30 ahead of the announcement, so we can go over it.
Thank you, Hardy.
Just
Buy
Chris,
stocks.
when he says back, where is that a new hosted talk, or is that like in Discord?
No, I think he's going to come back into this Discord, this Reddit talk, especially if we keep going until the FOMC. But you should also check out our Discord.
If we don't,
I'm in it, but I haven't really done much of it.
If we don't, I was going to stream that opinion later today. I was going to do the Twitch stream and a Reddit talk.
Oh, yeah. Oh, I'm going to try and stream it directly to this Reddit talk. So I'm going to try and figure that out. I've got it's interesting. I've got literally a 3-hour deadline to figure it out. So God be with me. I'm so fucked. Also, for whoever said they don't post enough in Discord, you now have a 20 message per day quota, and I will be watching you very closely, whoever that was. What was the play we were saving until after market open?
We were discussing about skin cancer and whether or not there's a correlation between UV exposure and skin cancer.
Says there's a
That's
pretty
tied to Moderna. He was saying Moderna has released some data showing that they have a vaccine that has 40% efficacy in preventing the development of melanoma. I mean, I would imagine that before you took that as anything other than a chance to take advantage of people who don't understand the research, you actually dig into it and find out what they're actually saying, or you're going to end up in a situation similar to everything that happened with Moderna and Pfizer and the mRNA vaccines, where you had people going on saying, look, it's going to prevent transmission. You're never going to get it, and then look through the research and find out, well, they didn't actually ever test that.
Can I correct you? I'm seeing recurrence. I'm not seeing prevention. So it reduces the return. I don't know if it's reducing the actual chance of getting it, which could which would create a different environment, because there are other companies that are doing that are
So
reducing the risk of it coming back, which is different than preventing.
So they're not even treating it to get it in remission. They're just, once like chemo or some other process gets it in remission, then if you take that Moderna thing, you're likely to not get it again. Is that correct?
44%, that's correct. So I am actually a science experiment just like that. I went through all of that, and now I'm taking a drug that I see on TV that is supposed to reduce my recurrence because I had markers for a higher chance. So I imagine that this is the same type of situation. And when melanoma comes back, it's obviously incredibly aggressive. So
the trial was 157 patients.
Cheers, don't drink that.
Don't they have chemo pills that are similar to that? Like you go into remission.
I
and
take
then...
one. Yeah,
Okay.
I'm taking
Gotcha.
one right now. Mm-hmm. Yep.
I had a question. Anybody playing the used car market? Tickers SAH, LED, AN, the bubble.
Carvana.
Not this again.
Carvana's been beaten to death. I made some money in Carvana, but I was looking at the bigger dealership companies.
All right. I'm gonna have to stop you. Everyone's giving me downvotes. I don't know what that's about, but you guys don't want to hear about used car sales?
Not for the 50th time.
All right, well, there you have it. I'm so sorry.
No worries.
Do you know about anything else other than car sales, though?
I've just been playing Spy.
Hey, is Scald still in here? Is he still?
I'm still here.
Scald, what do you got regarding what's happening in the world of crypto right now? We're looking at Bitcoin going up, carried by what, do you think? I know Binance, there's speculation Binance is in trouble, and
Bitcoin's just the nearest I can tell is, crypto has been highly correlated with the movements of the NASDAQ since 2020, and it has never broke this correlation. Historically, before China left the crypto market, you would occasionally see crypto decorrelate from the US stock market. But since China has left the crypto markets, I've noticed that they have been highly correlated. So what the NASDAQ does, right, or like SPY does and things like that, is what Bitcoin does and other cryptos. So barring some major news piece that I missed, which I think I would have seen it, I believe that this little rally is just based on the positive movement in the stock market yesterday. We'll see if it sustains, because there's certainly not any major positive news in crypto.
what are your thoughts on whether or not this is correlated with the news about Binance and the likelihood that they are in fact insolvent and have been engaging in unsound business practices like so many of the other crypto exchanges?
Well, I think, if you take the face value audit of Binance, which Binance actually controlled the accounts which were audited, so that's sort of a red flag. They had enough in the in-scope accounts to cover 97% of customer deposits. In the out-of-scope accounts, they had enough to cover 101% of customer deposits.
I agree. Like, yeah, that's all that needs to be said. Like, they are very well positioned to, as long as the liquidity is there, the money's there.
I mean, so they performed an audit, and I'm not looking at any of the specific information about how that audit was conducted, but I don't think that it's that simple. I don't think it's as simple as, hey, look, some accounts were audited and they had values. Those values are determined by what? I would expect do you have insight into, specifically how sound that audit was? I don't think it was a sound audit, is what I'm saying. And a lot of people I follow on Twitter, the FinTwit guys, they are very skeptical that audit was a sound audit, that it was rigorously conducted and did in fact show that if you deposited something on that exchange at any point in time, you wanted to pull it off the exchange, you could do that. I was using Binance when it first started. And there was a lot of, they would do a lot of things where they'd open up a crypto, you'd make deposits, and suddenly it'd be locked down, right? You couldn't deposit, you couldn't withdraw. Now, obviously, you can make whatever explanation you like for that as the owner of the exchange who's making the decision. But fundamentally, if you're a sound exchange and there's not a problem with your software, you should be able to deposit and withdraw infinitely, right? So I just want to know if anyone can provide insight into why we should take what they're producing as an audit at face value as proof of solvency, because it doesn't seem like it was a rigorous, fully fleshed out, come in and check everything out. I mean, from what I understand, the company that performed the audit said we didn't do an audit. That's Binance that's saying we did an audit and here's what they found. And am I wrong?
Well, we have no way of knowing.
You
have no way of knowing.
Oh, okay. Firstly, you're correct. There were several red flags in the Mazars report, including the one where they said they didn't do a full audit. They did a limited scope AUP audit, right? So they were directed by Binance to audit specific places. However, one of those specific places is the Bitcoin address that I put below. If you go and look and take that address, you put it into anything that allows you to scan the blockchain, you'll see it has 252,000 Bitcoins in it. That is Binance's cold wallet. And there are several others. Now, another thing that made me sort of suspicious when doing some chain peeling and chain analysis on it is the fact that directly before the audit, a bunch of crypto was moved into wallets. And after the audit was complete, the crypto was moved back out of those wallets. And on face value, that doesn't make a whole lot of sense. I mean, if I was a company being audited, I wouldn't move a bunch of money between my bank accounts right before the audit starts. I mean, that seems bizarre, like some bizarre behavior. There may have been reasons that I don't know, but to me, that was another red flag, right?
Are those their cold wallets? Like, can you move money in and out of cold wallets like that if they're off chain?
Mm-hmm. Yeah, you can.
Oh, I didn't know that they were that liquid, or I don't know what the opposite would be. When
So a cold wallet just means, I mean, so first of all, you have a wallet, it's on the network, it's online. You're not, you don't ever take your money off the network, right? The network, the whole cryptocurrency functions by knowing what's where. So the cold wallet just means that it is not being stored somewhere. And I'm blanking on this right now.
I thought that's a hardware wallet. I thought hardware wallets were cold storage off chain.
So no, you can have a cold wallet in a number of different ways, but they're always a part of the network, or they no longer exist. I mean, the only way to take you can't take it off the network. You can't take so crypto is a cryptographic code that you have the key to. and you have a public key and a private key, right? Now, obviously, there's a lot of different permutations of this, but that's the basic part of it. And you signal your value by releasing your public key that matches with what the network says that private key contained. So when you say cold wallet, what you're saying is it's not being stored in a wallet controlled by somebody else. It's not, so that would call into question the entire.
It's just like self-custody, though. So
yeah, you shouldn't trust. To trust Binance right now, based on what Scald is saying about the way they're moving money around, you'd have to say, well, imagine that I'm CZ, I'm the guy in charge of Binance in the same way SBF is in charge of FTX. And I know that I need to, my customers are concerned about my solvency. In order to prove my solvency, I am instructing a company that I'm paying and I'm limiting what they're allowed to view. Not only am I limiting what they're allowed to view, but I could take my own personal funds, which I have no intent to ever distribute to depositors in the event that it would be required, or call my friends who are also involved in, interested in convincing the depositors that we're solvent. And we send all of our money to the central location so that we can say, hey, look, we have enough money that if everybody came to take it, we would pay them back. That doesn't in any way mean that they would do that. It's the whole fundamental concept of cryptocurrency is that it is decentralized, it is trustless. But when you use an exchange as that's a hot wallet, right? Because it's a wallet they control, not you. When you say, I want my money out of your exchange, you have to trust that they have an incentive to give it to you. When you have it in a cold wallet, that's yours. You have the keys to it.
Would you consider MetaMask, Phantom?
No, those are cold wallets. Those are cold wallets because so you control the keys.
Yeah, I just would call those self-custodied wallets,
those are self-custody hot wallets. They're not like a hardware wallet that you can take offline air gap.
Okay, so hold on. So if I'm using MetaMask, okay, it is not a hardware wallet, right? Understood. So, but you have to understand the code. The code doesn't care if you consider it a hot or a cold wallet. What MetaMask is doing when you make a account, you make a wallet with MetaMask, your risks here are that it's connected to the internet. If you have fishers on your browser or something like that, that's not a secure browser, or MetaMask is compromised. They still don't have access to what your seed, right? It's going to give you your seed. It's going to give you your keys. It is. Am I wrong here? Is there some difference that I'm not aware of?
Quick explanation. All Bitcoin, for example, is stored on the Bitcoin blockchain.
Yes.
Okay. Now you can't take it off of there. It doesn't come into your wallet. It doesn't go into MetaMask. It doesn't go into any ledger, like a cold ledger hardware device. All Bitcoin is stored on the Bitcoin blockchain.
Now, information, yes.
Yeah. When you have a wallet, the way that you identify which of those Bitcoins on the Bitcoin blockchain are yours is that your wallet has a cryptographic key. Yeah. And part of that key is a public key and part of the key is a private key. Now, cold storage are devices like Ledger and Cold Card and some of these other hardware devices that are not directly connected to the internet. That's cold storage. There's no way that somebody can hack into, unless they have physical access to that device. There's no way that a hacker in Botswana can access your Ledger cold storage wallet with your cold cryptographic keys and access that information.
Right.
That's self-custodial. Then you have things like MetaMask, and you can have your own node on the Bitcoin blockchain, and you have things like MetaMask that are wallets that are connected to the internet. So somebody could, like the hacker in Botswana could theoretically hack into your MetaMask account and steal all your crypto once they have access to your cryptographic keys. So that's the difference between hot storage and cold storage. So if you're somebody like a Binance and you're holding custodial coins for your customers, you want to put them into a cold storage wallet. That way you're not subject to these hacking events that have allegedly occurred. Now, some of them have been exit scams, but there have been legitimate hacks of online hot wallets that exchanges have had.
Right.
So
can I ask a clarifying question?
Yeah.
I want to clarify. But at the point where I take my money or I take my cryptocurrency and I transfer it to a cold wallet, the network has now become aware of that wallet's existence.
Oh yeah.
So the only added protection from a cold wallet and a hot wallet is that you hope no one else has access to your seed keys, right? Because I mean, your private key. Because in essence, it's the same as a hot wallet. Because you've created at the point that you've created a wallet, the network has to see that it exists for anything to be transferred to it. It knows it exists, and you take your cold wallet and say, "Oh, it's a cold wallet, so now I'm safer." I mean,
the big difference is that on your computer with MetaMask, you have other apps, and you're downloading
that's
other
right. Right. That's exactly. That's the risk. The
can
risk is that you have your ability to ensure that the environment you're acting in is completely free from other interference. But in essence, it's the same thing. At the point that you transfer the funds, the network knows that it exists. Someone could still theoretically arrive at your key and take it out of your cold wallet. If I'm sitting here and I'm trying to brute force access to a cold wallet, it'd be the same difficulty if I was not using other tools like Fisher, trying to get onto your web browser, check your keystrokes, check the communications between your computer or your browser or whatever device was connected to the internet.
For example, if you have a Ledger device, if you take a photo of your 24 phrase key that created the encryption, the private encryption key for that Ledger device, if you take a picture of those 24 phrases and you post them or save them in your phone or you post them online, then you've essentially subverted the security feature of your Ledger device.
Your wallet.
Now someone can take over
right.
control of your wallet.
And that's what I'm trying to make sure is clear, is that it's a false sense of security to believe that the essential component is protecting your seed phrase, your key, protecting your key. And any way your key becomes publicized, even if you think your funds are safe because they're on a ledger or some other hardware device, that's foolishness. One of the original values that was seen in cryptocurrencies was that I could leave everything on the network and I didn't have to worry about it. All I needed to do was take a business card or something even smaller than that, or memorize the mnemonic seed phrase, and I would always have access if I ever found an internet connected device. So I could go right now, and if I remembered my 24 or 12, depending on the whatever key, however the key is presented, if I memorize it, I can drop all of my life right here, right now. Drop all of my electronic devices. I don't need to take any of them with me. No hardware wallets, nothing. I can go to Botswana with nothing but my seed phrase, jack in to the network, enter my seed phrase, and have access to all of my funds.
That's correct. That's correct. But
I just want to make sure that's clear, because people throw around this idea of cold wallet and they have an overinflated sense of security. Like, well, I put it on a cold wallet, so I've got extra security. The only thing you've done is bought into the marketing from these companies that want to sell hardware wallets, because it has always been
realistically,
there's an additional level of security there. It's just like I mean, you have an additional level because somebody would have to break into your home or get access to the, you need to understand what you're doing when you're getting one of these devices. But it does add an additional layer of security that you don't have with online internet connected wallets, because somebody has to obtain access to something physical. And normally in the security sphere, like in the areas of cybersecurity, there's usually a couple of different ways you approach things. You want to have physical security, you want to have data security, you want to have operational security, right? And a Ledger wallet gives you an additional level of security that you don't have with internet connected wallets, because you have an additional level of operational security in that somebody would have to somehow physically access the phrases that you have for your wallet, or they have to access the device. So there is an additional level there, but you need to understand what you have. I mean, it's not going to prevent anyone anytime from doing that, because you could have somebody break into your home and they can get your seed phrases and you're done. Boom.
All right, so let's talk about stocks.
Hey, let the market dictate where we go. No Fed intervention.
Well, just one last thing. I mean, back to Binance. I mean, if all we have is what people are telling us, and then you have to choose if you want to believe the information or not. But like Scald said, if Binance does in fact have 97% of the Bitcoin that they claim to have, the deposits that they claim to have, then that actually makes them more secure in terms of deposits than a traditional bank. You know, because banks have like less than 1% of the funds on hand because they could do fractional banking. But all you can do is either believe what you're told or you don't, and then you have to act on it.
You could also say, I think that's how the market reacted. The Bitcoin market saw that when that came out, and that's when Bitcoin jumped, because I think it's like you still have it. That's a lot of money tied up in Bitcoin being held as essentially a gold type store of value type asset. That, listen, this is in a cold wallet. We don't have no plans of getting rid of it. This is how we're backing our value of essentially your deposits.
Yeah.
Well, Bitcoin jumped. Hold on. Bitcoin jumped because Binance halted, withdrawals of USDC. So people who were worried about getting stuck on Binance took their USDC, bought Bitcoin, and then withdrew that.
Yeah, I wanted to offer that as a counter argument. Yeah,
okay,
because I wanted to explore that.
If they're pairing that together.
That's what I think is happening, and that's ultimately what I wanted to see if there's any support for that theory. Because my personal understanding of this is that we're seeing Bitcoin jump because people are trying to get out of the market, and that's bidding up the price. So, their trust in the cryptocurrency sphere on the whole and in Binance is decreasing.
Interesting. What would also be interesting is not talking about crypto. I
second.
I don't know. I think we're losing a lot of people. I know it's interesting for you guys to talk about it.
Guys,
but
why
yes.
was I muted?
I muted everyone so that we could continue moving on to another topic. Sorry that.
Okay, sorry. If we're talking about like crazy good crypto wallets, I use Valor. So
We are not talking about crazy good wallets. Thank you.
How big? We're trying to get away from crypto talk.
We've lost about 150 listeners since you guys started talking. So
I'm here today.
That's just normal theta decay.
Wait, let's talk about what
S&P 500 sitting up 16, 17 bucks.
I'm trying to buy these.
What's the Fed gonna do today, guys? Come on, what are they gonna do?
Fuck shit up.
I'm really hoping that it drops when he starts speaking, because these puts are going to be worthless.
50 basis points.
Who thinks 100 basis points? I think 100.
I think a 1% chance of a 0.25 basis point, 75% chance of a 0.5 basis point, 15% chance of a 0.75 basis point, and a 1% chance of a 1.
You're the 1%.
I don't think that was 100.
What about 200? What about 200 basis?
No. If you legitimately think 100, I have some lakeside property in some oceanside property in Kansas. I would love to sell you. Just contact me.
Okay.
I have some in Arizona too.
I just think it should be 100. That's what I was trying to say. It should.
Yeah,
That's what he should do.
Yeah.
No way.
I might jump on some calls or puts before Powell speaks. Just.
If you listen to what the Fed's been saying, they've been saying they're going to raise 0.5 percentage point. So they're not going to deviate from what they're saying.
I mean, I think that's why Hardy's play is so good, right? I mean, you buy right before right before you buy on either side. If it goes up, all you're playing is the volatility of whatever jump. You're going to lose it on the one side, but you'll make it on the other. I mean, it's a good play as long as the market moves, 1.5% probably, give or take, on a 30 delta.
Well, the problem is the market needs to move in one direction. If it goes up and comes right back down where it started, the play loses.
Yeah, or you just got to get out. You got to time it so you make your money and get out.
So when I enter the play, I intend to have exit orders in place so that I lock in my original principal after one side doubles.
Here's a question for you. How do you size? How do you pick your position sizing risk-free reward?
So in this case,
like
because of the nature of the move and the fact that this is highly speculative, I'm not putting any more than 0.1% of my capital into either trade.
Yeah, so very minimal. Just trying
But
to make
if for example, if the strangle works out beautifully and it turns out to be a 20 bagger, my 0.1% becomes 2% of my capital. You see what I'm saying? And there are funds who would kill for a 2% increase this year. So my risk is very well managed.
Yeah, but it just gives a good idea of how. I mean, are you, am I putting $500 down? Are you putting $100? Putting $50? You putting 5,000? I mean,
I don't know what $500 means to you, but for
that's what I'm
me, putting
saying.
down
That's why I
0.1%.
asked specifically for you how you kind of position size it, not monetarily specifically, but more based on what your portfolio looks like.
He already explained.
Yeah, it's good.
Position
I
size
agreed.
based
I was
on
saying I like it. Yeah, it's good. It's good to understand.
Hey, who was the guy that had plug puts yesterday? Because I see plugs running, and there was a report putting a price target at like $26 for them.
That was Sad Molasses. I have the notes here from yesterday. He had selling puts on plug, so that would have been bullish to neutral.
And Kramer confirmed that last night on his show by saying stay away from plug power.
Very nice. Well done, Sad Molasses. He's not in here right now.
So I
Is
actually got
the FOMC in their notes or anything? Are they going to get?
Let the lady speak.
I really appreciate that. Thank you. So I got into GitLab last week. What are we thinking is happening with that?
Can you give a little more background? Did you buy long shares? Did you buy options?
Yes, I bought long shares of GitLab and it's been running. Is it
Ticker?
still GTLB?
What'd you buy at?
So
40.
Oh, you got some nice profit.
Nice.
Yeah.
Yeah. I don't know. I would.
Are we?
Do you have a little
are
bit
we
more
really long
insight?
on that?
Do you have a little bit more insight in that company? Can you explain what they do to us?
So we had talked about it last week, but a lot of the time when I'm listening, I'm like getting my breakfast in the morning, so I'm not writing anything down. But they were like, oh, and then they had really good reasons why, so I bought it. But now I'm looking at it and I'm like, oh, okay, it's doing well. I don't want to lose anything here.
Well, the tech services
So
company.
I didn't know if anybody had some background information on it because we had been talking about it, and that's why I'm asking.
GitLab is basically a way for companies to host their code or their code bases and do it in a way that allows engineers to better coordinate and collaborate with each other. And I'm sure they're offering more what's called continuous improvement or continuous delivery type services in order to push that code to production. It's a fancy way of saying release a code update faster and more efficiently.
Yeah.
In terms of the pricing, the options market for GitLab appears to be setting a ceiling at $55 today and a floor at $40.77. So make of that what you will.
Okay.
The numbers will probably change when market closes.
Got it. Thank you.
The news is mentioning on the 7th that the RFA maintained the target at $70 because they have about $928 million in net cash, which is about 15% of their market cap. So that made them look stronger, I believe, for the last week. So that did lead to some buying.
They also just appointed Mark Porter to the board of directors. I don't know who that guy is or what that may mean to somebody who's in the company. But that just happened as of yesterday.
Yeah. Okay. Great. Thanks, guys.
I wanted to say something more on Powell speaking today. I'm actually going to watch it, the news conference, because realistically, it all depends on his tone, on which way it goes. He will be hawkish, but if he at all goes into his dovish tone after it, that will cause us to, go back up. And there's an outside chance of looking at everything that by Friday or before Friday, we actually go up into the 420 range from what I'm looking at. But at the same time, I'm still of the opinion that he will be hawkish, staying with the same comments and the same tone he's had through every speak that he's done through Brookings and Jackson Howe and all of the other press conferences. So it's really going to determine his tone and his answers as to which way it goes. I'm still going to be playing the opposite. What happens is if it goes down when they release the press release, which I don't believe it will, I'll be playing $2 up from where it was before it went down. So if it's at 405 when they release the press release, I'll be playing 407 calls by the time he talks. If it's at 405 and it goes up, I'll be paying 403 puts by the time he talks, just to try to maximize the gain. So that sounds crazy. It could go up or it could go down. I know we say that a lot, but it all depends on how he says what he says. And the answers to the questions are always very important. It's going to be 0.5. There's no way around it. It's just the future outlook that they have and how he expresses it. He doesn't want to control the markets, but at the same time, he has two tools to fight everything. One is by increasing the interest rate, or to fight inflation. One is by increasing the interest rate, and the other is how he controls quantitative tightening or easing. That's the only way they can really help to
money printer go on, money printer go off.
Well, you have to keep in mind the federal government's interest rate is affected. So there will be pressure, even though technically the Federal Reserve is supposed to be independent, there will be pressure to not overburden the government with interest payments.
I personally went all in on SPY calls today. I'm already up 60%.
I'm considering locking in profits for UUP. What do we think?
I just want to say first,
I feel the danger. Oh, sorry, go ahead.
Okay, some of my people I interact with agree with you. They did 403 calls today at open. They also did 405 calls for Friday, anticipating an upward trend today after he speaks tomorrow and beginning of Friday before the sell-off. But Friday there will be a sell-off as well. Remember, it's a quadruple witching week, so they have all the tools at their disposal. Okay, back to UUP. Sorry.
Yeah, so looking at UUP, I just think the dollar will react, of course, to the interest rate. And it fell off a cliff recently. I had UUP puts on the anticipation that the US dollar would start to come in line with other currencies eventually. So I'm thinking about locking in that profit now and not exposing myself to whatever the Fed minutes does to this. I think
it's never a bad idea, right?
Yeah, I think, I'm just going to take it.
How much profits you got on them, Scald?
Hey, Scald, is it good enough to take a photo of?
No, it's not great, but I'm up a little more than 20%. How about you, Titty? You're in the same play. I don't know about your timing.
I'm holding on to them.
I mean,
what are you up currently?
So probably close to 45%. I'd have to check because I exited my 31 strikes, and those pretty much bought me 4 of the 28s further out. So I'd have to go back and do some math. Give me a minute. I can figure it out.
Yeah, I went ahead and took those, closed out the position. I'll probably jump back in again though. I still like puts on UUP. I just
well, if he continues to raise interest rates, in theory, it's going to put pressure on outside commodity markets, which would, in my opinion, put pressure to the dollar on the upside, given that it's going to put more financial strain on on global markets.
Yeah, I think your intuition there is correct. Which is why I think that's why I've sold. And if this interest rate comes in at like 75, then I'll be able to buy the same position back in for cheaper, probably.
SoFi, which is one of my bag holders, almost up 9% today. Really no news. I guess he had the CEO, I guess, insider buying, but that's a big move on insider buying.
I'm holding 1,500 shares, so hopefully to the moon.
You're in 1,500 in SoFi?
Yes, sir. Had averaged out from 22.75.
Yeah, I'm in at 800 shares, and I have some quality 25 calls that expire in 30 days. Pretty
I got
much.
some 12.5s all the way out for January 20th, 2024.
Yeah, those are much better shape. I need a 2,000% move here in the next 30 days. Now, but I have been selling calls on the way up, which has been nice. So on these bumps like this, just because it has been still trending down, making $150 a month roughly, hasn't been terrible. Trying to just get that cost basis lower from a total perspective. I'm at 18. What am I at? $18 cost basis. So yeah, got a long way to go.
So about crypto. No.
Oh no. No.
Hey, it got a reaction. I'm not going to talk about it.
We just lost 3 members. We were at 573 and we went down to 570. Just saying the word, which I'm not going to say.
The C word.
Hey,
who should not be named.
Hey, Scald Crypto.
How's the Dole play going?
Very well. Scald Crypto on the UUP, the position as a whole, I'm up just under 74%.
Oh yeah, I had taken profit on those previous puts that we had bought a few months back. So I guess on the total trade, I would be up more than the 20%.
Because
this is my second time playing this exact same thing.
I exited those 31 strikes that I bought at 175 a piece, and when I exited those, I was able to buy 4 further dated 28 strikes.
Hey, did you hear that if you go into a dark bathroom and stare at the mirror and say crypto 3 times, Sam Bankman-Fried shows up?
I don't think that's true anymore ever since he got arrested.
I like that.
He's been replaced with Kevin O'Leary.
He'd show up and then dart for the fucking door.
I like that meme that was posted to WallStreetBets where it was like Bahamas is like the #1 tax haven, but it's one of the 5th worst prisons in the world. Like, oh, rough.
Is he being held in a Bohemian prison or is he just under arrest?
He was denied bail, although I think he's going to be extradited fairly quickly. He might be in the process of being extradited, so he never actually spends any time in a Bohemian prison.
And I would guess he's probably being detained in a not a prison. Prison is where you go after you've been sentenced.
Oh yeah, yeah. He's probably never going to actually get behind bars in the Bahamas.
Don't ask me how I know.
He'll probably just get house arrest, and then he'll end up like the other guy, Epstein.
Isn't this still considered crypto talk?
Guilty.
Yes.
Hopefully,
SBF.
the Department of Justice actually sees their way through with it and doesn't just extradite him like the U.S. government extradited the vice president of Huawei from Canada and then sent her just to China, even though she was definitely committing.
Do your own DD, but if somebody's looking for a cheaper way of playing SPY today, Class A Google shares recently have been following the S&P 500 pretty close.
I just realized with the Huawei comment that I don't think, other than Apple, we've ever talked about like mobile phones.
Are you saying we've never talked about Nokia on Wall Street Bets? I'm pretty sure we have.
Oh, right. Never mind. I forget that those are mobile phones and not just bricks.
I am holding a note.
Those bricks would last through like a nuclear blast.
That's because they're made out of irradiated material.
There's a thought.
Yes.
Use Nokia phones to build a bomb shelter.
Sales
So
to
you can get
Ukraine are
killed from
through
the
the roof.
inside rather than the out.
Isn't this
All right.
Isn't this the whole like, why don't they build the plane out of the black box material? Isn't that a
Is
thing?
it like, is it too heavy? Is that why they don't do it?
Too expensive.
Listen, I'd like to go back to Mitt Romney asking why you can't roll down the windows on airplanes.
To whom it may concern, Carvana is on a bit of a tear this morning.
Oh no, that means Jim Cramer was right.
Oh,
Yeah,
God.
who was it that wanted to talk about used cars?
That means my degenerate buy rights expiring Friday should be called away.
Yeah, if you had any profits, you were still holding bags in Carvana, I would take this as an opportunity to jettison them, because I'm pretty sure that the owner and his father are selling their shares and getting out of town. I don't think that's a profitable company. I think it's going to zero.
So why is it rallying?
Because it's Carvana. It just does that.
Up 60 cents.
Yeah, it has incredibly high short interest. So on green days, it is very sensitive. So it's very volatile.
So going to come back
So
down, buy some puts.
Yeah, it's coming back down. Did you hear the news? Basically, the father had been engaged in some very seedy business dealings, lost his company. Then he had his son start Carvana. He was one of the primary shareholders. Him and his son together owned controlling interest in the company, and they have just been selling like you wouldn't believe.
The dad still owns Drive Time.
And they share the same office building for the two companies. And Drive Time provides Carvana, or sells Carvana, all the warranties and gap insurance. They underwrite them and even underwrite some of the loans for Carvana. So it's amazing how much money can be taken out of one company and put in the other one.
Yeah, it
I've heard
seems like those
anecdotal.
would be the highest margin products, right? I mean, I don't know, but it seems like those would be the highest margin products.
Yeah, and that might have been the intent all along, because anecdotally, I've heard from several different people, including some family members, that they were selling cars to Carvana at ridiculous prices, and that's borne out by what news articles I've read have confirmed. Yeah, there's no way they could keep this up.
Well, I
But
mean,
to their credit, they were doing that during the pandemic.
yeah, that's what I was actually just gonna say. You know, used car lot or any car lots really had such a shortage that people had no choice but to go to Carvana. And not only that, but because you were getting the absolute highest price for vehicles that, you know, just months before you wouldn't have gotten nearly as much. Carvana, of course, is going to ride the wave of that. And now they're coming down and we're seeing all of the bullshit that actually went on.
Carvana had offered me a hefty price for my car, but I told them to fuck off.
I locked in some puts for Carvana expiring the 16th.
I think with Carvana, it's just like, because there was a bunch of them up here in Canada. It was just a shuffle scam. Because I've said this one many times before. I sold my car back in July, and it was a 2016 Volkswagen e-Golf. I basically sold it. I bought it for $30,000 back 3 years ago or whatever, as of like July or whatever it was when I sold it this year. I sold it for like $4,000 less than what I bought it for. And they came, picked it up from my house, and had it sold literally 2 days before I even had them come to pick it up from my driveway. So it's a shuffle that there's already somebody that's bought it ahead of time. Like, how much due diligence have those fuckers done? Well, I get the whole thing. Everybody wants to save money on it. My car could only go like 140K on a good day on the battery. You know what I mean? Wintertime, you're lucky if you got 100K.
Well, isn't that what I forget? I don't know who said it. I wasn't paying attention, but somebody said like a drive time is selling the high margin products for Carvana. So the whole scam is, just keep the cars moving because you're taking profits on all the other stuff you're selling, right? It's like an inversion of the dealership model.
Mm-hmm. And I was supposed to talk back with the dealer that was going to sell it to me, right? And because he goes, I'll get you the paperwork on this, because like I was more interested in seeing what the background of it was. And this is before I even started talking. We started talking about Carvana and everything, but it really got me intrigued about it because I was like, fuck, if this is how bad it is for just these guys, right? I know a lot about the industry in certain senses. I'm not deep in indulged in it, but that really intrigued me because it was an aspect that it was like, how do you have rid of my car already within fucking, like, I hadn't even given it to you, signed the papers or nothing, and it's already gone. Buddy already told me that it was gone. And I go, I want to know how much money they resold it for, right? Over and above. But that's just what keeps the money flowing. It's not real money, though. It's not really there.
They're
right?
running
I
right
mean,
now.
that's the car market, buddy. You know,
yes.
give your car to the dealership, they're going to make a profit. Bet your
Of
dollar
course
on
they
that.
are. They put butts in seats, but it's like,
What he's saying is, he's saying that they didn't. Their model is theoretically not to sell a car and then to take some margin on that sale. It's to just keep moving the cars. So they're never saying, hey, look, we're gonna have our bank account.
we got business. We got business.
Yeah.
We gotta pay employees because, like, I don't know. Every time I called down there, I could never get a hold of somebody, and I was always wondering, like, how could they be in such a high commercialized building that I know costs a lot of money for rent? And is that just are they really out of there, or is that just a secretary? You know what I mean? Because you could never really go down there. I could have got a meeting down there. Like, I can get a meeting down in any of these buildings if I really wanted to go investigate them. But is it really worth my time? When I already know.
I think in addition to all of that about Carvana, I think that it's a fundamentally foolish proposition that they never intended to be successful. How could you be successful? It just strikes me as impossible to buy cars sight unseen.
I think they all know that FTX was coming down. Because guess what? Guess what? They're going to be so fucking busy with that shit. How do they flow some of their money around? God forbid that they ever did it and turned it into Bitcoin or whatever the hell. Fucking
so you IPO into a stock market that is overwhelmingly it's bursting with money coming from everywhere. People don't know what to do with it, so they're putting it
your
in the
grandma
stock market.
and grandpa, and that's where they want it. They wanted all that money.
Yeah, and so you IPO, sell the shares, and you're on your way out the door. Company goes bankrupt, and hopefully you don't get caught for having committed fraud.
Yep, and then they just hope that they got Gramps and Grams, because that was one of their trusted fucking nephews of fucking one of their fucking old business partners or one of their old friends that they did trust, and that was one of their sons. So it had to be a fucking good kid. You know what I mean? Any single pry. This is the way I've always been saying it, and I've been saying it for the last 20 years, ever since WorldCom and Enron, is any fucking way fucking possible they can get their teeth. They want to pull those fucking teeth out of your grandparents, man. Because they won't die. There's a lot of strong ones out there that are still smart, strong in the head.
This is straight up bit off topic, eh?
I'm sorry.
Yeah.
I'm just sorry. I'm sorry. I have to say it the way it is because it's true. And
I
it's
just like how we
disgusting.
somehow made it back to FTX.
How do we make money with this information, Luxor?
You don't.
I think you should know. I think you short Carvana. You short Carvana because they have an unsound business model. There's
saying how
reasons to believe that they never really intended to create a productive business model, and there's got to be a reason why you, as the owner of a company, have decided you're going to sell a massive portion of your shares in that company. You don't do that because you think they're going to continue to appreciate.
Well, he dumped the shit out, but he had to call that quite a few days ahead of time, didn't he, Hardy?
What is Lockstar's point?
I have
I'm
never
confused.
figured that out.
I'm not even really sure where the fuck I am anymore.
Well,
is this WallStreetBets?
I just stepped in there a bit. I
think it might be time.
Was I supposed to have a point totally there?
Yes.
This isn't a soapbox for you to lecture us.
No, I'm not trying to lecture anybody. All I was trying to say is that overall, when it came to just the whole car industry in general, when I sold my car like that, and I could see them just shuffling, that's just one company up here that's like Carvana. It wasn't exactly Carvana, but it was a company, and there's about 10 of them up here in BC alone, okay? And this was one of the better companies, but they came right to your house, picked up your car, you drove it onto the trailer, and that was it. It was gone. And they gave you way more than they should have for your car, and so if they were doing that in the middle of this summer.
Not to interrupt you, but I've got some pending orders that are being filled on the high side here. I'm getting about
I got to get back to this too.
I don't know. I'm selling calls at the top here. And I just got 2 fills at about, I don't know. This one was $1.35 and the average was $1.20. So I don't know. There's some buying going on the call side here. I literally back to back, ding ding on 2 separate stocks. They both went above asking by about, I don't know how you would qualify it, but kind of just interesting. There's some call buying going on.
On what ticker?
I got them on GDS, which is one that I play here and there. I'm selling calls on, and I also got it on SoFi, and I've got 2 others sitting out there, both on called Outset Medical, which is one that I own shares on. I'm just trying to sell puts and calls at different points. I'm assuming we're going to have a short little rollover today, and if you can catch the top here, you might just be able to make a little bit more money here in the next, I don't know, you get a little bit more money for them if there's some speculative buying.
In other news, you can get Grindr for $5.99 a share.
Man, that is like 90% down.
Yeah.
For just one easy payment of $5.99 a share, nonetheless. Truly a bargain.
What a steal. It's under $6.
In similar fashion, did anybody ever get into Match when they had their huge run up and then now they've been kind of dying? Well, slowly.
It's cuffing season. You really think they're going to make new connections?
Hardy's right on that one. It's cuffing season.
Is the online dating season, is the online dating fad, do you think that's kind of gone out the window a little bit?
No. Cuffing season
No, it
basically
hasn't.
means you find someone to partner with so that you can cuddle up over winter. There's no new dating. There's no new going out because it's cold, right? You're not going to dress up and look all fancy wearing virtually nothing. And
exactly.
Is that the mutually agreed you don't like
yourself.
presents to each other?
Wait a minute. It
this
is
summer-
tax time, gentlemen. This is the time to where you get with a big chick, and you get that tax refund up out of her. You know what I mean? This is that time. Then it's cuddle season.
See, the
So
summer.
someone was okay with cold winter weather and short dresses.
This summer is hot girl summer for those dating apps.
Bro, I
Where do you
swear to
live?
God, I flipped over like 20 different tax returns in my entire lifetime. Women will swing it to you if they think you know what you're doing.
I'm trying to tell you, bro. This is tax time. This is when you get
When
with
you-
an ugly
Bro,
chick
I'm
who has a
telling you,
couple of kids. She's getting a
man's
big tax return.
my man's is from the streets. He runs the same place that I run. You know what I'm saying? You're gonna get a lot of money during tax season if you go with your wares with the ladies.
What the fuck? Is there like legit a baby in one of your microphones while you're telling us to financially abuse women? Seriously.
I never said financially abuse.
Bruh.
Yeah.
I think it was more of a manipulation tactic than an abuse tactic, which technically is abuse.
Boo this man.
About manipulation or abuse. I said.
I'm just
All
saying,
right, I think
you know, play your
we've
own
done
game,
enough
but if
here.
you got a baby in your lap while you're giving us advice, maybe rethink your shit.
You could give me 1,000. Give you 1,000.
I'm sorry that I can have
Can we
kids,
talk?
buddy. Sorry.
Can
I
we
think
talk?
we're done on this topic. Let's move on to another one.
Just an update on S&P 500. Anyone have it?
It went up. Okay, moving on.
Well, I did want to say that after the Fed talk, I think AI is going to very generously stream that to this call. Maybe we'll wrap up like, an hour after it starts, get some discussion in, and then head on over to the Discord to stream the FIFA World Cup semifinals between France and Morocco.
Yeah.
Apologies, Hardy, that it's not stock related, but I think it's some good community building.
Opinion, when does Canada play?
I don't want to. What? Why would you say that?
Is it after the US plays? I can't remember.
I didn't come here to be attacked, personally.
I think the next match in the World Cup is 2026.
Going back to what somebody said a while back about energy plays, I don't know how you guys are playing them long term, but I bought BEPC, beta. I hate this BEPC, but I'm playing the infrastructure kind of larger players that are buying these assets and then just printing money on them. I don't know if people are actually buying. Enphase obviously has had a ridiculous run up. I was afraid to jump on that train. But ticker AY and ticker BEPC are both kind of money managers that are buying essentially green renewable assets from manufacturers and then reselling obviously the energy and reaping the cash flow.
I'm looking at some long plays on some mining stocks, BHP and Rio Tinto. I did a little bit of DD on them, and they seem like pretty solid companies. Their enterprise value to EBITDA is 4 and 6 respectively, and 10 is considered good. So their value is pretty nice. They pay a decent dividend, around 10% dividend yield. Longer term plays on those, so I'm just slowly acquiring those stocks.
What do they mine?
Everything. The metals, like copper, iron, aluminum. They're very large companies, and if especially with China planning to come out of their COVID lockdowns, the demand for raw materials, the raw metal materials, are going to go up. They're, like I said, they're just solid companies, and I'm pretty much looking at just collecting the dividend on those and then having some peace of mind, I guess. Again, the ticker symbols are BHP, Bravo, Hotel Papa, and Rio Tinto, Romeo, India, Oscar.
Yeah, that's a big dividend.
Those are two of the biggest diversified miners out there. They're quite large, and like Human Genome said, if it's a metal, they're probably pulling it out of the ground somewhere, and probably in a significant amount.
Yeah, my dividend play is Horizon, HRZN. They're sitting at a 10% yield as well, and they're more on the private. I don't know what you would call them, like a private loan. They give. They're not a bank, but they give out high interest loans.
All right, everybody, I got real world stuff to do now. So it was really great chatting with you as usual, and I appreciate all of the ways that you guys are teaching me about this stuff. So thanks. Have a good day, everybody.
Come back
Sorry, keep
anytime.
getting cut off.
I got a bank for you guys. It's Bank of Nova Scotia, BNS, up in Canada. It yields about just over 6% yield, a PE of 8.5. I bought some shares Canadian at 67.30, 500 shares.
I see BMS.
BNS, sorry. Bravo, November, Sierra.
Roger, thanks.
How did the Canadian banks do during their earnings week? I actually didn't pay attention at all. Banks are boring.
It went down a bit. I think they had more put aside for loan loss provisions, so that took some bite out of their margins.
I also see the verboten stock. GameStop is up 3.5% after some pretty heavy losses this week. So some much needed respite. I don't know if anyone is still playing that, you guys, because we had talked a lot about trading options around the earnings date. And then it did some really weird things around earnings where like after earnings it went up like 13%, then down like 10%, then another 10%.
What's the ticker?
GME.
Yeah.
I thought we
still
didn't talk
holding.
about GME no more.
Can we get the military lettering for that one? What was that? GMV? What are we talking about?
Golf Mike Echo.
I'm joking. I'm joking.
Listen, I'm still bag holding my.
Or if we do sad
shares.
molasses, censored.
I believe someone mentioned GME taking over Bed Bath and Beyond.
I said that as a joke.
No, but it's been this
In
perennial
all
like
seriousness,
idea.
I kind of looked
Here's the
into
real
it.
one. Does
No,
Disney
I looked
buy
into it.
Apple? Is there a Disney Apple merger that you create the largest company ever created?
Yeah,
Well,
enjoy those
That would
antitrust.
definitely.
Enjoy that
Yeah,
antitrust
I don't think that's
lawsuit.
going to get through antitrust.
Apple's
Well,
got its
hold
own
on.
issues
Why?
with antitrust on its own. Good luck merging with
What if
Disney.
they
Why would it
divest?
be
Just
antitrust?
yeah, hold on. Why if they just divested the entertainment portion of it? They just buy Apple TV.
Wait, are we talking about Disney buying Apple or vice versa? Because
I would think
imagine
Disney would buy Apple TV, specifically Apple TV. I don't think Disney has no value buying a tech company necessarily. They want the content, and Apple's that has done a pretty good job. They're still losing money on it. The only profitable web is Netflix at the moment, and so I think there's going to be some consolidation in this area at some point because they're all losing money.
I agree with that. And the way that cable has gone so far, it's like it's not even good competition with everyone having their plus services and having to subscribe to different services. It's more aggravation than competition. There has to be some solution to this because it is just ridiculous.
I don't think that Apple invested in the creation of Apple TV to sell it off. I think Apple has much bigger aspirations than to sell off that division to anyone, even if there was an incredible offer.
Even if it's just a losing. What if there's no
I mean,
way to make
I
money?
expect that they engaged in this knowing that it's going to be a lost leader for a while to try and compete, so that you're going to see the quality of the shows are going to develop. They're either going to find their footing or they're not. But right now, I still think we're in the generative stages where they're trying to develop a market share, and I don't think that they're going to sell that. I find that really unlikely unless something happens, something very seriously damages Apple's reputation or, their success, their share price, that they'd ever sell. But on the same note, is Microsoft's acquisition of Activision going to get through antitrust?
They'll do some type of concessions, but yeah, it'll get through. They knew that was coming the second that they put in that offer.
Well, yeah, somebody's got to go make money being lawyers.
Now, if you want to talk about potential acquisitions for streaming services, I'll continue to say I think someone at some point is going to buy WWE and put that content on their streaming service, because that comes with all of WWE and WCW's entire catalog, and that's a lot. And that's something that like Disney could potentially want to add into ESPN
That's
Plus.
Peacock. I just had a coincidence on Peacock. I was going through their shows, and they have a lot of wrestling stuff. So I wouldn't be surprised if Peacock took over WWE and kind of just
Peacock's losing subscribers, or losing money. I think what's come out over the last, I don't know, year, is that people are buying their subscription for a month. They're watching the content that they want to watch, and they're on these ancillaries, the Peacocks, the Apple TVs, all these little ancillaries that are one show wonders, and they don't have a wealth of content that people watch. They buy their subscription, they watch it for a month, and then they're done. And there's no stickiness in this market, which is making it extremely hard. And you can only lose money for so long before shareholders are like, listen, cut it off. And so Peacock, I don't know how much more money they're going to invest in trying to get content to their platform if they continue to just not be able to retain viewers.
So I think that's why I plugged Amazon Prime a minute ago, because I've got, I pay for Prime like everybody, but I watch TV there, and I think I'm paying a subscription to Epix, Discovery, maybe History, Stars.
Damn.
Yeah, it's a lot. And so I've started to clean that up, but I didn't realize how deep I had gotten. But it's really nice because it's all packaged into the same thing. The Amazon Prime application's kind of shit and it's a little slow, but the one source of truth is definitely there. And so last I heard, that's backed up by the numbers. I think Amazon Prime's video subscription is beating out Netflix and Hulu both. I think that's what I read.
You mean by what people are spending, time watch?
Just like, yeah. Where people are watching their shit.
And didn't they started broadcasting Thursday night football games for the NFL as well? So I think that's a big they're dipping their toe into sports. I think that'll be huge if they follow through on that. I have an interesting play on Mullen Automotive. So I bought 500 shares at an average cost of 22 cents a share. So it cost me about $109 for the 500 shares. And I'm selling covered calls dated April 21st, 2023 at 6 cents, an average cost of 6 cents a share. So I'm getting a 30% return over a 5-month period on those 500 shares. I'm just going to keep wash, rinse, and repeat on that one, because that annualized, that's like a 60% return.
That's assuming the shares, the underlying, doesn't continue to fall.
Well, no. What can happen? Yeah, true. I mean, if the company stays in business for the next 5 months, then it's a 30% return. These are 50-cent calls. So if the price does go up and the shares get called away, I'm doubling my profit on the shares plus the 30% return on the original selling the calls. I don't know. It's looking good so far. We'll see what happens over the next 5 months.
Hi, guys.
Hello.
First time participant. I've been listening for quite a while now. Just haven't heard anyone mention anything about fast food. What do we think about that sector?
What are your thoughts on fast food?
Yeah. Reasoning?
Buy Chipotle. They're the best operator in the country.
Okay. I know we have like a running joke in the community about Wendy's, but I've been looking at them. They're somewhat recovered and they have not high, but medium expectations for themselves. And they're
Personally, I've played Yum brands. I prefer like the more conglomerate, just because it's more like I don't know. I think there's less of an opportunity to just fail miserably and more of an opportunity to find little nuggets of gold that people will jump on. And Yum Brands has been a decent one for me over the course of time.
Understood. Okay. Well, I have a call for 2024 for Wendy's. My reasoning behind it is they're slowly chipping away at market share. They're starting to expand in the UK. They have 2 or 3 stores, and it's looking like people want more. So I don't know. What's your opinion on that? I'm only up 15%. I've only been in it for 2 weeks. Should I keep taking profit as it comes, or
Profit
just
is profit, but there's for 2024, you got time on them. What's the macroeconomic headwinds that are facing Wendy's right now?
I will also say they're coming up against massive resistance going back. I mean, if you look at the charts, like this range of like 23 to 25, holy moly. They've hit it 1, 2, 3, 4, 5, 6, almost 7, I guess 6 times in the last
they
3
tend to
years.
trade sideways a lot. If you like zoom out and you look at total chart throughout the years, they trade sideways quite a bit, but then they
I would look
eventually
at selling call spreads on the top of like around 25. If it gets up there, look to sell call spreads up above it.
Okay, sounds good. Appreciate the advice. Thank you.
What is Musk's strike price for Tesla? Is it, you said 140, 135? What was it?
Oh, for his liquidation?
Yeah, his liquidation.
I think it's 120 to 130. Let me take a quick look. But again, like this is all speculation because we don't necessarily know like the inner workings of the deals that he's made at Twitter and what sweeteners he's offered his Saudi partners to roll over their equity into the new Musk-controlled Twitter. So really, people are just grasping at straws, and there's limited information. Even though a lot of stuff gets leaked out of Twitter, not too much has been leaked out of like the finance side, because I think there's way bigger penalties if you were to do that. And also much fewer people who actually have visibility into that. But I'll look up at least what people are saying on when they'll get liquidated, or he could potentially get liquidated. I mean, the interesting idea is like, remember, Bill Gates is short Tesla to the tune of what, like 500 million, I think, or maybe it's $1 billion. Someone correct me if I'm wrong.
So do you think Microsoft will try to come out with their own car, or are they just going to stick in the software then?
No, I think Bill Gates just knows that Musk is like, he just realized that Musk was going to go down in flames. Not necessarily a fraud, but that maybe he didn't have the temperament for the long haul, right? Because I mean, I'm sure Bill Gates has met plenty of CEOs, so he probably foresaw that maybe he didn't have the temperament to keep this going for a long time.
I would think that less than a judgment of temperament, he would be making a judgment with knowledge of the financial underpinnings and inner workings that Opinion was referencing that we don't necessarily have the visibility on. But I want to know, Opinion, what do you think happens if 125, 130 is the liquidation point, theoretically, and the Saudi partners don't roll over equity? What's the outcome? How does that affect share price? Is that massive pressure downwards because he's got to sell the shares?
Well, so the Saudis have already rolled over their Twitter equity, right, from when it was a public company to now that is private. I guess what I'm talking about is more like, if he was to get closer to that liquidation price, you'll just see more and more of him like selling either into the open market, or maybe he'll make deals to sell like block shares, like big blocks of shares to banks who will then syndicate it out, or just hold it on their books and try and wait for it to pump a little bit again to sell it. And then so he might take like a hit selling it a little bit lower to the banks so that they can make some money. Really not sure what it would look like, but it would be interesting. I'm kind of having a hard time wrapping my head around thinking of like a similar example, just because like the money at stake here is so large that I can't. Maybe, what is it? When Huang was liquidating one of his positions, I think he was shopping around a deal. Skull, do you know what I'm talking about? I think it was Discovery or Viacom.
Do keep in mind the banks also aren't if the position's being secured by Tesla, the banks aren't going to want a giant position to just be thrown into the market and secure less capital as the stock dumps. So they'll work out ways to secure that while maintaining the value of their payback.
Well, they smell blood. There's blood in the water. That's what. Yeah.
I mean, look at we're opening right now, and the last 3 days now, if we include today, Tesla has been down while the rest of the market has generally been maintaining kind of stability, probably awaiting the FOMC meeting to kind of get further guidance. But Tesla is consistently down, and who knows how far down it'll go. So I'm really smelling the blood in the water, and I'm wondering, what are the speculative outcomes? What are the worst case scenarios? I understand the best case scenario is the financial parties involved do everything they can. But what is the worst case scenario? If he's already sold a massive number of shares, he's got to go even further. What does that look like for Tesla? I mean, can Tesla go to zero?
Well,
No, they have assets.
no, they can't go to zero. They're not insolvent at the moment.
Anything is possible.
Well,
I don't think people thought FTX was insolvent. I mean, you had massive celebrities. I think we all generally assume that people are more knowledgeable than they are, that the market has more intelligence than it has, and that it is absolutely susceptible to manipulation. And I know they have assets. Obviously, they have factories that are producing vehicles. They do have technology, regardless of how you feel about how developed it is or about the promises that have been made. But is there a scenario where they go down so that they're decreasing in value so quickly that they've got to come to some kind of agreement to sell out? And I'm sorry, I don't mean to cut anyone off.
But the value of the company doesn't match the value of the stock. I mean, if you want people to stop buying cars, then the value of the company goes down. But for the stock, it's just people selling it. So you have to separate the value of the stock from the value of the company. And people are still buying Teslas.
Their PE is still 50. So it's like they still have a long way to come down and be fine. I mean, like they're just incredibly, they have incredibly high multiples.
So they're overvalued according to P&E.
I'm not here to say that whether or not. That depends on how you choose to value companies. But I'm just saying, as a general rule, they still have a long way to go from a stock price standpoint. I mean, the stock price isn't correlated necessarily to the actual fundamentals of the business.
Right. I agree. Like I said, I understand they've got assets. They have employees. They are producing vehicles. People are buying those vehicles. People are interested in buying those vehicles, and they've got skin in they've got knowledge on how to produce these vehicles. I don't think, but I would imagine, and please interrupt me if anyone else has anything to add or has something else to say. I would imagine that because of how many shares are personally tied up by the owner in his acquisition of Twitter, that liquidation price is a factor here. If it starts to become a fire sale, there's a scenario where people see it dropping and understand that according to the P&E, you said something like 50. It is, if that's the way you're establishing value, it is massively overvalued at 153. So, or 157 now. So if that starts a downward trend and the cultists get off the train, is there a scenario where, regardless of what the P&E actually is, that the best option for Tesla is to sell? And I've obviously heard tinfoil hat theories that Tesla's going to, Solar City is going to buy Tesla, or Twitter is going to buy Tesla, and that's he's seeding the fields for that with his
Yesterday, there was that story about SpaceX offering the tender offer for their shares. I'm wondering if that could be a way for Musk to liquidate some of his equity in SpaceX to save, Tesla in the catastrophic event of like what you're suggesting.
So, from a fundamental standpoint, if we're looking at enterprise value to EBITDA, if Tesla were to drop down to $50 a share, $50 a share, it would bring their enterprise multiple to around 15. Now, to put that in comparison, General Motors right now is at an enterprise multiple of 16.
Yeah.
And they're trading at $39.75 a share. So Tesla could fall down to $50 a share. It would suck for Musk, but for Tesla and for other investors. But Tesla could drop down to $50 a share, and then at that point they would be on par with what GM is doing today.
But
And
my
Is it
argument,
fair? Is it fair to put the premier EV vehicle company on a similar level comparison to GM? Is a great company, don't get me wrong, but they're producing different type of vehicles
yeah,
for a
but
different
please,
market, right?
Well, I'm
yeah,
not
but I
saying.
want to keep in mind.
I'm just saying from
GM
the
doesn't lead the industry in anything.
But I want to keep in mind, guys, please.
from
I want to keep in mind that the whole premise for this debate is that unlike GM or some other, companies, the CEO of Tesla, the person who has controlling interest in Tesla, if I understand correctly, is out there leveraging Tesla's overvaluation, right? So that's
But
so
that's
they
on him. That's on him. That's not on Tesla.
Yeah,
Do
that's
you
And
know
the
not.
other
that? I mean,
thing,
how many shares are we talking about? How much do we know?
Let's compare Tesla with Tesla.
That's speculation.
Let's compare Tesla with Tesla itself. The last low it had was in March 2020.
He owns 445 million shares as of November. So
and there's 3.1 billion shares outstanding.
yeah.
So how much is he using for the Twitter deal?
He's financing a fair portion of it. Hasn't he already come out and said, given that kind of breakdown of what he's financing and then what he's paying out of Tesla shares? I think that's been reported. Like he's come out and said that. I thought
he tweeted that Tesla shareholders will benefit from Twitter. He promised.
Either way,
valuation of
I
Tesla
mean, you
versus
can't
the
get
20 billion Twitter. And he's got partners. I don't think he's got a lot of skin out of Tesla into Twitter.
no, yeah. I'm not sure what. Like, obviously, there's doomsday scenarios on any stock. Like, shit could hit the fan. But realistically, like this, Tesla as a company is not going anywhere. They're
No, the only doomsday scenario for Tesla is if Elon Musk hits the fan. Right now, it's like his
then he gets
persona.
voted out of the board, right? They just
then
vote
the
him out.
stock goes up. It becomes a value stock and a growth stock, and the Saudis will buy it, and the Russians will buy it, and the Chinese will buy it. Anybody who doesn't watch Twitter will buy it. The stock's going to go up.
Yeah, I agree.
With a cancel culture, all it takes is him to say something anti-Semitic or something, and wow, there goes Tesla.
Those sales are on the margin, though. I mean, as more of those sales go, there's less left, except for people. I mean, people hold their nose and they buy oil. People that hate climate change buy oil stocks.
Yeah, I mean, the only way Tesla would go down is if he painted a swastika on the side of each car when they come off the line. The other thing with Tesla is that their debt is a lot lower than some of the other car manufacturers. So they have a lot less debt than like a Ford or a GM does.
But they have no debt. That's an understatement. And their margins are higher than every other car company, and their profit margins on sales. And they have the largest charger network that they could monetize by opening it up right now to like the tune of 20 billion or more.
Yeah, and the Twitter thing actually plays well into the Tesla thing, because what I've always held is that because like Tesla doesn't do a lot of advertising and marketing the way that the other car companies do. I mean, for crying out loud, during prime time, I mean, you see like 5 or 10 different GM and Ford commercials, and the other car companies as well. And Tesla has not had to incur that sales and the marketing costs for doing that kind of stuff up until now, because Elon Musk has been getting so much free publicity that they haven't had to do it. Now with Twitter, if they do have to get into a situation because of competition to do some advertising, Elon Musk has one of the best advertising, like Twitter or not, it's still one of the best, good advertising platform for all the people that are on there for Tesla cars. So if they need to get into advertising, he prepaid $44 billion for some great advertising that he's going to do over the next 5 to 10 years is how I look at it with Twitter.
Yeah, and he's being a complete ass, right? The same kind of ass that drives those giant trucks that blow coal. Well, he's about to sell a bunch of trucks maybe to these jerks. I mean, we don't like what he's doing, but half of America might love
Yep.
this and buy the shit out of
Yep.
his trucks because of the
And
asshole
there's
he's
two,
becoming.
and there's two kinds of guys that get chicks: really funny guys or real dickheads. Those are the ones that always get the chicks. And Elon Musk is he's not too funny, so he's being a dick, and then he's still getting a lot of publicity and all that kind of stuff. So what are you gonna do?
He's appealing to a lot of people, even if we don't agree with what he's doing. He's appealing to a bunch of jerks, and he may be selling trucks. I don't know. We'll see. I haven't seen the
Of those,
Cybertruck, so I don't know. But
of those two guys in your example, only one of them end up getting divorced and left with no money. And usually it's not.
That's true.
Yeah, it's not the funny guy.
Yeah.
they keep the
I
truck.
mean,
It's usually the
don't
dick
most
because he always
celebrities
had
get
it coming.
divorced?
The guy
Don't
always
most rich celebrities get divorced? Like, it's hard to avoid that, but
No, that's a great point he's making though about the guy who's rolling coal is he's going to become an abusive father, have a couple of marriages, and I mean I just can tell you anecdotally, having known those people and knowing those people now, they don't have stable families, stable marriages, and they're not people that you want to be around. They become alcoholics. But how that ties into Tesla is, do the chickens ever come home to roost? Because the promises that Musk has been making about what can be have absolutely been lies again and again and again, provably lies. One of the big ones that just came out was Tesla announced, I don't know who specifically announced this, but it was an official Tesla information. It was saying, look, all of these vehicles that we said we're going to be shipped as fully self-driving capable, that's not actually true. We're going to actually have to go back and add some more sensory equipment to them so that they will be able to act as they were sold. So you've just been, that's an admission that if you listen to the promotional materials Tesla was putting out, when they said, look, all of the vehicles sold after 2013 are going to be full self-driving capable, we actually lied about that. There actually aren't, because we've gone ahead and we've tried the optical solution. It doesn't work. We actually realized LiDAR or something like that is going to be necessary. Okay, so do the chickens come home to roost for this guy? Because he's told lie after lie after lie after lie. You can go back and watch his interviews. This common sense skeptic on YouTube absolutely hates Elon Musk. And he's going in on Kevin O'Leary now. But great series of videos just using things Musk has said when he's said them to prove that he's rolling coal all the time. He's all talk. And
Well, his marketing strategy is basically, I am one of the top 5 richest individuals in the world. Listen to me, and maybe your wealth might improve. You won't be the richest person in the world, but your wealth might improve. But
right,
you listen,
and with that,
my wealth improves, and then more people listen to me.
But that's what I'm saying. What you're talking about is essentially that's a pyramid scheme, right? It's a confidence game, and that's what I'm saying about Tesla is when the confidence game starts to fail, just like FTX, everybody goes for the exit. You and I can have a conversation and say that they have real assets, but so do all the other companies who are now producing electric vehicles. They have real assets, and they haven't engaged in confidence games. They haven't engaged in trying to flourish their wealth and make displays of power, roll coal to sell products.
Yeah,
Well,
so
if I'm trading in my coal roller, it's not going to be for a Tesla.
a big thing here too is majority of these EVs are in California and in more liberal states, and so
China and the Europe and Australia and
yeah, true, but the F-150 Lightning just won Truck of the Year. I don't see.
the Ford
they're not buying
F-150
those in
wins
China.
Truck of the Year every
They're
year.
not buying it in Europe.
So something to consider, and this is a Hardy point, so I'm going to give credit where credit's due. This was a Hardy point. Tesla has, what is it, like a 20-30% market share right now, and we've got Chevy coming out with an EV, or with a bunch of different EVs. We've got Ford doing it. We've got Nissan expanding into it. So all these different companies, right, all these legacy automotives are now coming into this market that Tesla's had a very large market share of. And you've got to ask yourself, as you look at this current stock price, are they going to maintain or grow that market share with all these legacy dealers now coming in with comparable EVs that can actually go over 200 miles?
Yeah, and I think the answer is
Those legacies are going to undercut all of those margins too. I mean, Hyundai is offering a 10-year, 100,000-mile warranty on the battery alone, whereas Tesla's 3 years, 36,000, and their cars are awesome. and they're $20,000 less. I
I
But
thought
there,
Tesla's
what?
battery is 8 years, 100,000. Are you sure
And
about that? Only 3 years?
there's still room for Tesla to pivot. They haven't come out with a new car in fucking 10 years or so. So they can come out with a new car. They can start advertising. They can keep up. You know, they're already ahead of everybody else, and everybody else is getting into the
Well,
game
I would
now.
argue.
If this
That's a
recession
great
hits,
point.
the ICE cars are going to hurt, and a lot of these, I mean, they're going to need a little bit more momentum to catch up to Tesla because the recession will.
Yeah, I
I
think
think the next round of earning reports are going to show big earnings for Tesla and losses for a lot of, or less of a gain for all these other companies if this recession rolls in.
Well, to the point about the ability of Tesla to pivot, that's a great point. They still do have the ability to use whatever assets they have, whatever liquid capital they have, to try and become a more traditional car company. But I think a huge part of the overvaluation is tied to there not being a traditional car company. So if they did decide they're going to make the shift, I still think that affects the P&E and brings it closer to parity. I think it brings it closer to the 50, so I think there's a good argument throughout all of this that you should short Tesla if you want to take the risk, knowing that there's a lot of reasons why you should expect that stock to decline to at least parity, at least something reasonable like you see with GM, Ford, and other traditional automakers, because really, as we were discussing here, it seems like the only thing they can do, and there's a lot of pressure to do this, is to become a traditional automaker, to no longer derive most of their value and their overvaluation, I would argue, from their cult of personality led by their CEO.
I wouldn't say the cult following really drives it. I would say the new "ooh, I got this and you don't" following kind of drives Tesla. And when Tesla was coming out and they had all these new functions, cameras on your car, your door opens, such and such, people love those things. And now, some of the other car manufacturers are coming along and doing the same things. I think it's time for Tesla to start bringing in some of those newer things that drove in those customers in the first place. And I think they can do that.
And
They
10
have
years,
to.
if you
They
remember
have
10
to.
years ago, 10 years ago, everyone was betting against Tesla because they're like, well, you can't, there's never been like somebody that's been successful at challenging the automobile industry, and especially in the United States, the leading country with automobiles. I mean, Tesla and Elon Musk, they ushered in an era of electric vehicles, no question about it. And now all of the other car companies they're no longer betting against him being able to do that. Right now, they're saying, okay, we realize that you can do it, and we want to compete with you. And what's happening is the electric pie market, or the electric car pie, is growing bigger. So even though Tesla might have a smaller percentage of that market, the pie, it's a smaller percentage, still means more auto sales for Tesla.
But by that same argument, the increase in the size of the pie, regardless of how fast the pie increases, it becomes a more direct competition, which is why Tesla is not going to enjoy its first to market advantage anymore. So I'm bearish on Tesla, and I wonder, top possibility, are you bearish? I mean, I would think,
my average cost in Tesla, I hold shares long. My average cost in Tesla right now is $118 a share. I sold a bunch at $240 a share. I kept some at with an average cost of $118 a share. And if it goes down to $118 a share, I think I would buy more. Like, I don't think it's going down to 118, but I hope it does so I can buy more. I don't want to buy any now because I don't want to increase my average cost.
Is it just me, or do you guys have this same exact debate about Tesla like every other day? Is anybody here actually holding puts on Tesla more than like a month out?
I have puts, and I've been holding them since 2 weeks. I have them expiring in January. Strike price at 150, break even price I got 147. But on that point, I am waiting to buy Tesla long term. Like someone just made a point, hopefully they do go down to 114. I don't see it, but yeah, I'll pick up some shares. I'm looking to pick up long term, but I'm definitely
have puts on them short term.
And to answer that guy's question, I'm actually bullish. I'm holding shares. Long term, my average is 150, and I've been holding for about 2 years.
That's a great average.
I used to have my position in Tesla. I sold all my shares a few years ago, and I have no desire to enter back into Tesla.
Ever?
For the next 2 years at least, yeah. Knowing that there is an actual department within Tesla that is in charge of handling Elon, the management just does not seem to be there, and it seems to be way too toxic for the company. The reason why
I'm staying away too from Tesla.
The reason why Elon's been able to use Twitter as his free speech outlet is because that department in Tesla does not have any handling control over what he says. Like, he's got the megaphone now, and he's inadvertently affecting Tesla with it, which to me, that moat for EV vehicles is getting smaller and smaller for Tesla, and I don't see any huge innovation for alternative energy vehicles coming from Tesla, coming from the pipeline.
A part of me, I'm sorry.
And really, it's just bells and whistle vehicles that are going to make the difference. And you look at the vehicle companies that have been doing that, which is GM. GM always throws in the newest technology, bells and whistle, in-cabin vehicles. That said, once you got the same tech as Tesla for EV capabilities, you might as well just go with the guy who's also able to sell you on bells and whistles.
Hey, let's not forget that Tesla is not just a car company. Every time I hear the same talk, we always talk about which car is better. But at the end of the day, Tesla develops technology for energy storage and use. So they've got not just a vehicle market share, but they've got market share in the tech sector. So yeah, when we talk,
Are we
share
talking
trading,
about Samsung's solar paneled shingles with Tesla's logo on them?
no, we're
That we're
talking
going to be
about
on every home in
Tesla's.
America.
We're talking about Tesla's Powerwall. Tesla
Yeah,
makes
I've actually seen
their own battery storage solutions.
But
Okay.
If you eliminate cars, are they profitable?
No.
Very
And
good question.
somebody brought up a good argument that was Tesla. I forget who said it, but Tesla was riding very high and achieved the valuation that it had at its heyday, which I think is, we're on the decline, because it was a car for tech people. There was not a car that was plugged in, and there's a whole, I think many of us right now on Reddit, and Reddit in its heyday was a bunch of tech people. It was a bunch of people who wanted to have the newest tech all the time, who were really enmeshed, engrossed, and titillated by all of the things that technology was going to do. And that was played on by Tesla. They knew that their market was those people who didn't have a car that catered to their interests. And so they focused on the bells and whistles. They took technologies that already existed, they repackaged them, they put bells and whistles on them, and they were, for a long time, really the only established game in town. They enjoyed the benefit of government subsidies. And I really think I'm bearish. I don't see any way that you could be bullish on Tesla, especially.
It makes kind of sense, but I would wait until the recession is over. GM had to be bailed out in 2008, and just having models doesn't mean you have the volume. Different models to choose from doesn't mean you have the volume of sales that Tesla has.
I'm curious to see how many cancellations there's been recently, too. Because there's been like a trend on Twitter to people post screenshots that they canceled something. Who knows if they're real? But I'm curious how many people canceled that had pre-ordered the Cybertruck or things like that.
When's the next wave of earnings reports for quarter 4?
I canceled my pre-order for the Cybertruck.
Yeah, but Tesla didn't cancel, right? So people are still just canceling their pre-orders, but it could happen to where Tesla releases the truck and you're asked out, right?
No, I won't be asked out because I'm not going to do business with someone who constantly lies about the product that they're going to deliver. Now, I had not really looked into Elon Musk, Tesla, or anything like that with any specificity. I knew Tesla, I knew the cars, I was interested in them, I liked them. If I could afford one at that time, I would have bought one. I couldn't. When they announced the Cybertruck, I was interested. I put my deposit in. I wanted to get the best model, and I started saving money for it. And then I found out, hey, look, we're just going to push the timeline back, that gaff where he breaks the window on stage and then acts like it's all just part of the game. Ha ha, so funny. And so I started looking into this and I was like, this is all cloak and mirrors. This guy, this is what he does. This is the modus operandi of this entire company. And it's fooling people into believing that, hey, look, we made this promise, but we're just going to push it back. And it's taking advantage of people's goodwill. Again and again and again. Sometimes they do develop the technologies. They do it by crunch. Elon Musk himself has testified to that fact. We had to work, 70-hour weeks and I had to live in the office. Well, you're the one who's making these completely unsubstantiated promises. And when you look at the track record for things that have been promised and things that have been delivered, the percentage of promises delivered on, I would never do business with someone like this. Why would you?
100%. The Cybertruck is what I was totally interested in Tesla, and I didn't put any deposit down, but the Cybertruck for me, I was like, oh, this dude's like a fraud. And then he topped it with the Dogecoin stuff, and I just have no interest in buying one. It's a cool car. I'm sure somebody else can make a cool car though.
And they're going to. And that's the argument, right? Is that all of these other companies now realize that the governments around the world are going to be all collectively subsidizing and requiring these electronic vehicles. So they're all like, well, this is where everything's going with vehicles. We're all going to get in on board. Ford already put out an electric truck, and everybody's going to start putting out electric trucks.
While Tesla's going to do nothing, right?
Tesla is kind of like the hero
I don't think Tesla's going to do nothing, but I think that fundamentally the crows are coming home to roost. The chickens are coming home to roost because he promised us this wonderful truck, which I believed was going to be produced, was going to be delivered as promised. I put my deposit down, and I find out Rivian's already brought an electric truck to the market. Ford's already brought an electric truck to the market, and I'm like, what? So I think it's over. I really think
they're gonna be there's gonna be one Tesla, and every other car is there's gonna be a small percentage of Teslas on the road, in my opinion. I'm not into it. Sorry, Elon.
They don't have the manufacturing that these other companies are going into it with. F-150, they could produce 1 million of those things.
I think he pivoted from the truck when he saw the demand for the Model 3 and the Model Y and focused on that for growth. So it would have slowed things down to go for the truck. But yeah, he promised it, but he didn't do it. But he went for the huge growth that he's getting with the Y and the 3. He made a business decision there and exploded the company.
But he didn't have the integrity to be honest about the business decision. You tell
motor industry.
No, yeah, maybe he's just being flexible with the market.
But he's lying, right? We're not arguing the fact that he's lying about material facts about what the company will and will not do, which is why
I don't think any more than I bought a Tesla when my GM had a sensor issue, and I took it to the dealer. I had to wait. I had to bring it into. They say bring it into service. We'll look at it. You bring it in. Oh well, we replace this. And they say, are you going to stay or are you going to go home when you bring the car in? So I go to the service department 6 times. They can't fix the issue. I buy a Tesla. Now I get on my app. I'm like, I have an issue. They say, oh, we ordered the part. Come in at 3:30 on this day. And I go in and they replace it. So dealers and car dealers and liars, I don't see any difference between Tesla and GM and Ford.
They all lie.
I'd see a better service department.
No, hold on. The point you're making is valid. But let's not confuse the point you're making with the point that I'm making when I'm bearish on Tesla, because we're talking about a service department that has either got some incompetent management or some supply chain issues, who is telling you something that's not coming to pass. We're comparing that. That's not the same as a CEO of a company saying we are going to release this product at this time, getting up on stage
Yeah,
to
they don't do
generate
that.
hype
The
for
other
it and sell
companies.
it.
You would never do that. Like GM, they would never say they're releasing a product and like never mention it again, or say it, or suddenly drives on water. Like that's ridiculous.
But I don't think Elon ever
did the
gave a
same
release
thing.
date, did he?
Like the
Rivian did
imaginary
the same thing.
Cybertruck.
People were like, "When's my Rivian coming?" And then they put it back a year. They had supply issues. They put it back another year. A lot of EV companies were doing similar things with the pre-orders.
So let's say this, with all this said about the Cybertruck, if the Cybertruck was to release in a month, do you think it would sell out?
But that's the
Yes.
thing. It won't be releasing in a month.
We're just saying though, just like Rivian, they pushed it back, and then they released it. But if they release the Cybertruck, do you think it'll sell out?
If they do it soon enough, they won't be able to keep it. It'll sell out. If they wait till everybody's selling them,
but yeah, exactly.
They might have to lower their margin a little bit to compete.
And they're going to have to do that because there's no other. The point is, if they brought the truck to the market right now, they would be very close to when they promised they were going to bring it to the market. They'd be a year or two behind, I guess. But when you take that lie, right, you take that falsehood, and at the highest level of the company,
the same lie Rivian did when
yes,
they said
that's right.
When they were going to release theirs.
Agreed.
But
then
let's,
you look at
let's
the
factor in the
pattern.
pandemic as well.
Just let the man finish. Let the man
But
finish.
My bad.
Look at the pattern, the entire pattern for everything that he's been involved in, and you realize he is a serial liar who will constantly make the best decision for himself and not for the consumers, which is why I'm bearish and I'm saying, look, what are the conditions and how those conditions need to be arranged so that we look at a strike price, a theoretical strike price, or a liquidation point, where he sees that his best interests are not served by fulfilling any of his promises.
I see what you're saying. I think you might be a little bit too idealistic though, because I mean, it takes a certain type of business mentality to start a gigafactory in Germany and compete, or to go to China and open that many gigafactories and sell that many cars. You don't get in there without making certain decisions in a business way that and that's what I see him doing.
What marketer doesn't lie? I mean, even the other car companies, even the traditional car companies, when they show their commercials on television, they show these cars driving 80 miles an hour on this road that nobody else is driving on. They don't show you a car being stuck in LA traffic. They all lie when they do their marketing.
Yes, the marketing and the advertising comes as close to outright lying about the capabilities of a product as they can without being held accountable. I agree, but it's not the CEOs of the company who are responsible for that. So they have plausible and reasonable deniability. I could say, hey, look, I bought a car because I watched an advertisement. My son tells me this all the time. He says, hey, Daddy, GM are liars because I made an offhand comment when we were watching TV, watching a football game, and this girl's at, GM does its car ads during Christmas, and he gets her a puppy, and she whistles. She's like, I got you something. She whistles, and the car comes running, busting through the snow. And I told him, I was like, oh my God, I can't believe these advertisements. And my son tells me all the time now, whenever GM comes up, he's like, they lie in their advertisements. People can't whistle to bring their car to them. And I'm like, okay, well, there's a whole lot that goes into that, right? So even children can understand. Advertisements are lies, right? They're designed to get you to buy a product. But the CEO of GM would not say, hey, we've got a product, we're going to bring it to market, everything's good to go, here's when it's going to come to market. And then that same CEO not come forward and publicly say, this is not going to happen. I'm going to take accountability for that. This is why it's not going to happen.
Well, Tesla doesn't lie in advertisements because they don't advertise. So the CEO has no choice but to lie. He's got to get up there and he's got to take one for the Tesla team.
He's got no choice but to lie.
Do you think he went up there and started the Cybertruck and said, let me take all these orders to get your money and keep it? Or do you think he might have was developing the Cybertruck and hoping to get it out and maybe tried to get it out? Or do you think it was like a total scam where he just wanted your $100 deposit?
I think he wanted. I think he wanted to gauge legitimate interest, because if people are willing to put their money where their mouth is, then I think that kind of gives you an idea of what the interest would be in a truck like that. And if nobody would
we're
put a
forgetting.
deposit,
Someone made a really salient point that we're forgetting to ask that question. And the point was that what if, I mean, we take this as completely legitimate. He intended to bring it to market. He had the ability, he had some reason to believe that he could bring it to market, but then he sees the way the Model 3 demand is going, or what the other models are doing. And he goes, hey, you know what the best business decision is going to be? To completely backtrack on those promises, to put all of my energies and all of my productivity into producing more of these cars that I know are going to sell. Now, my problem with that is that he doesn't come forward and say, hey, look, honestly, here's what's happening, right? And I apologize, because now I'm getting into the point where I don't want, this is not Wall Street Bet material. I don't want to do business with people. I don't want businesses to exist that are going to be engaged in outright lying at the highest level and accept no accountability. Not only accept no accountability, but not be held accountable. That there wouldn't be raucous screaming from anyone who had any kind of involvement with a company that had no accountability, demanding the accountability. So I think Tesla's going down. I hope it goes down. And I'm wondering so really that's my interest is if he has to liquidate, it gets so low, he has to start liquidating shares. And there is, what is it like? What does it take for people who are bearish on Tesla to turn around and walk away and say, you know what? I've heard some people talking, you've got short or long on Tesla at this price or that price. At what price do you say, I'm done. I'm pulling my money out. I'm going to go put it into GM. I'm going to go put it into Nissan. I'm going to go put it into Hyundai. There's got to be a point somewhere where there's people realize, look, let's look at, and I'm
already there, and I'll tell you why. So Tesla came out with their first electric vehicle in 2008. Ford came out with theirs in 2009. You got to look at the psychology. Ford doesn't want to put too much emphasis on electric vehicles because they're not sure about the research of interest through the consumer market of electric vehicles. Tesla, on the other hand, was willing to take that risk because, hey, it's some billionaire kid who is very charismatic, willing to go out there, put himself out there and see. That is free research for Ford, GM, Toyota, Honda, all these other car companies that have been there for a long time. They looked at it and they said, okay, we'll put a little bit more emphasis. There's a little bit, the public really likes Tesla cars. Maybe we should look at it. It wasn't up until the Cybertruck that all these other car manufacturing companies started gearing up and putting a lot more investment and a lot more research in their electric vehicles. Fortunately for like Toyota, they've already been in the electric vehicle market for a long time with Prius. But unfortunately with Prius, nobody likes Prius because, well, you can fit it in your purse. But now with the Cybertruck out and all this public interest and people are saying, yeah, EV, ICE vehicles are the past. Let's get ready for electric vehicles. All these car manufacturing companies are like, yeah, let's do it. And let's wipe Tesla out. Tesla has done all the research for us. We know that this is the future. Let's go. They've been the turtle on this race. Tesla just burnt their nos at the get-go.
Yeah, too soon, right? Yeah, but I wouldn't think that there's any personal animosity or anything like that. It's just like you said, if you see, and I would argue the reason people don't like the Prius was because it was too soon, right? You look at the way tech works, look at the tech world. There's technology companies that were doing what Apple was doing, some of the things that Apple was doing rather. And you've probably heard the stories about how Steve Jobs and Bill Gates argued about how they pillaged Xerox's advanced technologies department to build their programs that ultimately built them into the powerhouses that they are. But some of those companies, and just even with the game consoles, the Sega Genesis had online capability, and they were thinking this is the future, but they were too soon. It didn't catch on. So I don't think that the problem is the size or the capability of the Prius. I knew many intelligent, well-established individuals who had Priuses. It just didn't catch the public's eye because I think it was too soon.
It was too ugly, not too soon. It was.
Yeah,
too
I don't
ugly.
think.
I mean,
It wasn't too ugly.
That's what the Prius. It was just too ugly.
And for the big car manufacturer companies, they're looking at Tesla as basically like, you did your job for us, thanks, but sorry, not sorry. We're going to take it over here. We've waited 10 years to see how you would function within our market, and you've survived. Congratulations. Now
it goes to.
So what car are they about to take over with?
Oh my god. Guys, the Tesla talk, holy shit. I'm going to interrupt everyone, and I'm going to talk about a degenerative play, because that's what WSB is about a lot of the time.
Yeah, let's get away from Teslas. We're done.
I'm going to post all of these in the comments, because to some of y'all, it'll seem like it's a foreign language, and I get it. I'm going to talk about broken wings on SPY tomorrow, playing CPI. So you can enter these for like a $35 debit with the potential for a 100% return, or a guaranteed 100 to 150% return if SPY goes in line with the way that you think it's going to go. So if you're bearish, for example, you could sell 2 396 calls, buy a 394 and a 399 call. Your max loss is $35, and if SPY goes to 396, let's say it closed tomorrow, you would make 265. That's 790% gain. If it goes further below that, then you'll still make $65 minimum, which is almost a 200% gain. So I'll type all these in the comments, and y'all can plug them in however you want to plug them in. But you can do this at any strike that you think SPY is going to. So if you think SPY is going to 420 tomorrow, you could do a put broken wing, and you could come out with the same thing with the same percentage returns. You can manipulate it however you want. I'm just going to post 2 examples in the comments here in a moment.
Thank you.
Okay. Quick question. Just I was thinking about shorting GM. Sorry, back to the cars, but I just was thinking about shorting GM. What do you guys think of that?
What's the basis?
There's a lot of smaller car manufacturers popping up left and right, and it seems like the car manufacturing market is no longer, surrounded by an iron fence. I don't see how some of these, established car companies are going to be able to keep their dominant market share, especially now that the Rivian's out and we can see how it is. It seems like a good product, but I was thinking about shorting GM.
So my suggestion, like if I was in your position, I would short them as a short-term strategy, but I wouldn't expect Rivian to become bigger than GM, because
well, clearly that's not
Rivian's-
what I'm saying. I'm saying
Yeah.
all the other smaller car companies are eating away at every single large car manufacturer, and then you got Toyota over there who's like jumping headfirst into hydrogen, which doesn't make any sense, because you have to have a hydrogen tank, which is essentially a battery to create power, and then you still have to have a battery intermediate, and all the same technology to set it to the motors. So I'm just not seeing the larger car companies have the innovation and the ability to pivot quickly, because they're giant companies, so they turn like a battleship.
I'd look at it like a small fish being introduced into a lake with a bunch of other big fish that have been in that lake for years. Don't be surprised when GM, Toyota, Volkswagen, Ford decide to consume those small companies and develop their abilities to perform.
Yeah.
That's their
Yeah,
That's
right.
correct.
And
That's correct.
those companies would sell, right? Which is I'm not going to talk about Tesla anymore. I don't mean to reference it in the little pond or the big pond with the fish. Is there a price where, you know, there's a management team at Tesla whose responsibility is to manage the damage the CEO could have to the company. So there's a recognition that what he does and says can be harmful and it needs to be mitigated. Now, if the price comes closer to the P&E of 50, right, it gets closer down to that level. Is there another company who says, hey, look, you know, let's just buy them out? And then Musk says, yeah, buy me out because this isn't how I do business. For me, that would be them.
On the GM thing, specifically looking at their fundamentals, their enterprise to EBITDA value is around 16. 10 is considered good, so they're a little bit high on that end. But that 16 is not bad by any stretch of the imagination. I mean, I don't know how you know, Ford and GM might be big companies, but smaller companies face other challenges in trying to mass produce vehicles and stuff like that. So it's not like they're just gonna up and start doing this stuff. By comparison, Lucid, which is one of those small companies, both Ford and GM have positive earnings before interest, tax, and depreciation and amortization, the EBITDA. They have positive earnings. Lucid has negative almost $2 billion in losses. So they're big companies. You're right. They move slow. You're right. But they've been doing this for so long. They know what the fuck they're doing. These small companies have some challenges to overcome in terms of mass production and getting assembly lines set up that the larger companies have overcome those obstacles a long time ago. So, I mean,
right. And most likely, once the smaller companies get into financial trouble, the big guys will just come up and give them an offer.
Rivian's already having manufacturing delays and stuff like that already. So,
and you know, like Rivian may have been a little bit too hasty in what they were doing, and that's evidenced by the fact that their steering wheels are falling off on some of their vehicles, which is definitely not good for sales. Like, who wants to buy a car where the steering wheels falls off? So, yeah, you're right theoretically in what you're saying about small companies being nimble and more competitive, but there's also some advantages to being a big company that the smaller companies have yet to overcome.
I think you guys are missing a couple elephants in the room here. Number one, since COVID happened, public transportation has died, so you have a lot more people buying cars, which means whether they're used or new or whatever, you're going to have a lot more people buying car parts, which is where a lot of these big car companies make their money. And then as well, you're seeing a profit on new cars. Most car companies for the longest time, you know, they took a loss on every new car that left the dealership. Now they're still maintaining that profit on new cars. It's not as much as it was, you know, at the height, 2021. But yeah, they're still making profit on new cars. So to short GM, I don't think would be a good idea in the short term. I mean, when you see the industry bubble pop more, and a lot of these car companies, a lot of the used car dealerships start to go down, you'll see maybe a downtick. But for now, I mean, there's more cars on the road than there ever has been because a lot of people haven't gone back to public transport because then they have their own personal car that they can take wherever.
Gotcha. I have one more question. I got a short on HOG, HOG, Harley Davidson. And that's basically just from a trading service that I pay for to follow some trader. But so I didn't really do my due diligence on that. I just put in the short and seeing how it goes. But I don't know. I'm just not, you know, who wants an electric Harley Davidson? I know they're making one, but who wants that?
I'd say Harley Davidson would be good. I mean, Honda is kind of exiting from the motorcycle market, are they not? Or was it just lawnmowers? But
I'm not sure.
Those Sons of Anarchy fanboys getting closer to their midlife crisis purchases. So
yeah,
I don't know. I've had an electric car.
Sorry. Oh, sorry. I was just gonna say my position is May. By the way, it's May 19th, I think, and it's a $42 target. I think Harley's at like 44 right now, or 45. So it's very conservative.
It's not a bad play, but just anecdotally, I've in 2014 I built my own electric bike with a 1,000-watt motor on it, and that thing was fun as hell. I mean, I think electric bikes are amazing, personally.
Isn't the premise of owning a Harley that it makes that big, revving, loud engine sound, and you feel like you're on this giant hunk of manly metal that makes you awesome?
Yeah.
Wouldn't
You
an
rip
electric
coal.
Harley not have any of that? Like, isn't the noise part of a big chunk of the reason people want that Harley? And the
It's
I've
electric
had
one's
one.
just
I've had one of those too, and those are fun as well. But I'm just saying, like, I think electric bikes are just cool as hell.
You
No,
still
I
have
got
it.
nothing against electric bikes. I'm just saying specifically for
The
Harley.
lifestyle. Yeah, Harley is
if
a
you want a
lifestyle.
Harley, you want it loud. You don't want an electric Harley unless it's going to be loud like a Harley, right?
Well, you
Yeah,
get the Harley because it stimulates your prostate without having to enter the glory hole.
That's right. They're hardcore Harley people that will only buy that, but they might get some new prospects that want the electric one too.
Well, he's right. You're bearish. The gentleman who produced the HOG, don't know the ticker name, but yeah, that's a good bearish thesis that, how do they pivot? Because the future is electric vehicles. It seems like whether or not, I mean, that's open to debate, but it seems like the governments of the world have all gotten together and agreed electric vehicles are the future, and they're doing everything they can to shunt combustion engines of any kind into the dark ages. So if that's the future, how does Harley pivot, right? And wouldn't we expect the Tesla equivalent to start manufacturing motorcycles? I mean, those, and talk about fun as hell, yeah, but I don't think it could be Harley. Harley's so closely tied to an image and a lifestyle. All the people I ride motorcycles. The people that ride Harleys typically don't ride the bike because they're having so much fun. They enjoy the fun of the bike, but they're 50-year-old, 60-year-olds. They got a brand new jacket that's never touched the deck. They've never dropped that bike. It sits in there. I mean, they're not. They want it because it's loud and it's beautiful. They're not. It's like the person who rolls coal who doesn't take that vehicle off road. So I think shorting Harley Davidson is a good idea. How do you pivot to electric vehicles? That's an entire shift. Electric is clean. It's tech savvy. It's futuristic.
I don't think there's a huge need for them to pivot. Like from a consumer standpoint, if you're going to ride a motorcycle, it's because it's much more fuel efficient on gas. From an environmental standpoint, that's just you commuting to work with one seat, as opposed to you commuting to work in your sedan or your truck, which has 4 seats.
No, I mean, I think you're fundamentally misunderstanding the role motorcycles play in most people who have them's lives. I've used a motorcycle for fun and I've used it to commute. And I will tell you what, you do not want to use, I lived in California. You do not want to use a motorcycle for commuting. That's not a good idea. And anyone who tries it quickly realizes.
Other motorists are dick to motorcyclists when it comes to daily commuting. And that said,
it's not just other motorists being a dick. It's you go ride out on like I lived in sunny San Diego, California, where it's beautiful most of the time, but the few days where it rained, the difference between getting up at 6 a.m. to go to your job or to go to classes, getting onto my motorcycle, and on that one day where it's sprinkling, and I had a short commute made shorter by the fact that I pinned the throttle and rode like hell on one of the fastest bikes that has ever been produced, and getting into a car that's climate controlled, and it didn't even have good climate controls, and just relaxing and driving, drinking my coffee. It's enormous. You do not want to ride a motorcycle as a commuter vehicle because you don't get up every day feeling like, yeah, I want to go feel the wind on my back. And if you'd done it, you wouldn't be confused about it. People are not buying motorcycles to commute. And the kids who are
Commuting is
doing
a grind. Motorcycles are leisure and fun. I totally agree.
It's purely for recreational driving is what a motorcycle's purpose is nowadays.
I mean, I've been to Sturgis for the motorcycle rallies, and that's fun. But trying to commute with it every day through rush hour traffic, hell no.
It's almost like in the same league as like your classic car, your sports car. You take it out when it's a nice day out, but you don't want to take it out on a commute or park it in the grocery store.
But could that also be culture dependent? Because, for example, I live right across from a Texas Instruments campus, right? And believe it or not, one of the top vehicles behind Teslas that I see are bikes. And
Yeah.
once
Is it like a wide open area? Is it like clear roads? Do you live in a big city, or is it like way out in the middle of nowhere where it's rural?
no, I actually live in Richardson, and I live by two thoroughways, a toll road and another highway, literally are crossing each other, and they literally just kind of come up the road, come off the highway, come up the road, and just park it in the garage.
Yeah, there's
It's starting to
definitely
become
But
more
but look at those.
popular.
But look at
there's
those
definitely
people.
a demographic. There's definitely a demographic that some
That's what
people
I
have
was
to
going
make
to
a
say. It
choice.
seems like
Some
that
people
would
have to
be
make a choice between buying a car or a motorcycle, and there's definitely a demographic that chooses the motorcycle over the car because they can't have both.
well,
And
and
those people, they have no choice but to ride it to work, as to commute with it, as well as use it as a leisure vehicle. There's definitely that demographic.
I was going to say, I feel like it's a growing demographic because the ones who use it tend to be more. It seems like it's the Indians, and also there are several campuses around us as well, several college campuses. So it seems like that younger generation has kind of brought that culture right along with them, as far as being able to kind of hop on their bikes, get to work, hit
Yeah,
the grocery store,
I
and
understand the argument.
highway.
I understand
Yeah,
the
my
argument, but I
idea is
think
that
that
no young people are going to be buying Harleys. What young person is talking
yes.
about
So
Well,
yeah,
I was going to
it's
say
somebody said
maybe.
it best. It's a leisure and entertainment style purchase. People who try to use a motorcycle for their primary mode of transportation are quickly dissuaded of that notion when another opportunity presents itself. And for every person that you see who has commuted on their motorcycle or equivalent vehicle to work, it's like taking your sports car out. They want to buy a commuter vehicle. They probably have a Honda Accord. They probably have some kind of crossover or some kind of typical vehicle that they commute in. They woke up. It was a nice day. They were feeling good. They took their motorcycle.
The only reason why I say that is because of it's Texas Instruments. They're not getting paid, pennies. You know what I mean? They're not in a working class, so to speak. These are
It's
are not,
conspicuous consumption. It's
yeah.
conspicuous consumption. And agreeing on that, we go further to have a bear case for Harley Davidson, because the new generation is not interested in the lifestyle that's sold by Harley Davidson. They're going to be interested in electric motor. I'm telling you what, if they start putting out a reasonable electric motorcycle, that thing is going to be fucking crazy. Like, who was it said you had an electric bike? You like the electric bike? You had a lot of fun with that. Having rode motorcycles, if you put an electric motor and you have a mass produced, I don't know. I mean, that thing is gonna be that's gonna kill like that. And back in the
let me
day,
be clear. I was just going to say, I think Harley Davidson's still going to be around. I mean, I think they're going to try as long as they can to continue manufacturing ICE motors, right? ICE bikes.
Internal combustion engines,
yeah. I think they're going to stay around and try to just hang on to that. And but I just don't see their growth. That's all.
They're gonna milk internal combustion engines for all it's worth. The demand for them to pivot, I don't see it being as high. Like, their toes are dry. The ship isn't sinking for them when it comes to having to move towards electric motorcycles. Because
So the Harley Davidson motorcycle, y'all are saying the live wire, the motorcycle.
Yeah, that's their new electric one, but I'm just saying I'm not gonna buy a live wire. If I want an electric e-bike, I mean there's a bunch of applications that are like 15 to 20 grand. I mean they're kind of entry level, they max out at maybe 100 miles an hour and 0 to 60 maybe 3 seconds or something. So they're not really true sport bikes yet. And I think that's because they're kind of scaling in, but just give it a couple of years, you're going to have stuff that's going to give a Hayabusa a run for the money, no problem. I mean, you could do it now. You could literally just source your own motor and do a hack job and make a bike that's faster than a Hayabusa now with a strong electric motor with enough torque. So
Someone tell me how long
to ride that thing faster than a Hayabusa.
Someone tell me how long y'all have been talking about bikes.
Oh, you missed the Tesla talk.
We're talking about shorting hog. How dare you?
Oh, is that what this is about? I've been here for like 10 minutes. I didn't hear one fucking trade.
Hey, May 19th strike price. All right, $42. HOG, you're welcome.
I got a hog for you.
Don't
I'm
short
long
on deer.
hogs.
Pause.
I got a trade for you. I did.
Let's hear it.
All right, what you got?
Sold a vertical call on Moderna. Sold the 220 call on the 225. $10.
I posted a picture of my electric bike in the chat. That thing was cool and it was so much fun. Just FYI.
Ooh, let me go look. Nosy.
Luce, did you pull out a Carvana when it was at 350?
I closed my big short on it. I made a cool 10K on that one.
Oh, nice.
But I do still think they're screwed because their creditors are at their throats. So I did reopened a much smaller short. And if it really squeezes, then I might double down. But I'm not really like, the way I see it is like I made my money on them. I don't need them to go bankrupt. Like I'm already pretty happy. So I might just keep this. It's a really small short. And I'm protected up until $5.50. I can still make money. So I might just leave it at that and not double down or anything. I don't
Hey,
need to be greedy now.
Luce,
Carvana too.
I'm glad you're here. What do you? Sorry, have you ever looked at Bloom Energy in terms of the fundamentals and stuff like that? Their numbers aren't really that great, but it seems like a pretty decent play for all of the alternative energy funding that's going on and infrastructure building. They have a energy appliance, so basically they call it an energy server that they're selling.
Right now I'm sticking to valuation and like financials. I'm not really doing a lot of qualitative analysis because we got a looming recession. So leverage and free cash flow yield is what I'm really paying attention to.
Okay, thanks.
Outside of that, unless that's like the boxes are super checked for that, and I'm looking at a lot of stocks like got at least a 10% free cash flow yield. I know a lot of these energy stocks, they have like 2% at best. And then for leverage, I'm looking at under 3 times debt to EBITDA, or at least like forward. So maybe like 2023 expectations, under 3 times. And
Gotcha.
I know a lot of these energy companies, they don't even have positive EBITDA. So
Right.
I'm like, yeah. So it's automatic strikeout for a lot of them.
Okay.
That's just how it's going to be for me for a while until the Fed talks about pivoting, which is probably going to be close to a year.
Gotcha. All right. Thank you.
Word.
You think the Fed is not going to pivot until Q1, Q2 2023 or end of 2023?
End of 2023. If they do pivot, I think I don't think, this is literally what they're saying. They're going to keep rates at a pretty good level. But mind you, where rates are right now, they're not even that high. If you look back at periods where the Fed raised interest rates, like this has been a very fast rate of increase in the interest rates. But all things considered, these aren't even that high. They're high if you look back at the past 10 years where there was free money and magnificent bull market and everybody could afford strippers and cocaine. But those weren't regular times. They really weren't. That was a gift from the Fed and the U.S. economy. So that now we're going back to normalized times. Rates will probably be high for a while. I don't think they're going to rush to pivot unless things get very bad. But
what does a pivot?
Don't expect things to get very bad. So yeah, I don't expect them to pivot for a long time.
What would constitute a pivot for you? Not a decrease in
decrease in interest rates is a pivot.
So and when you see the decrease in the interest rates, regardless of the totality, you're looking at the direction. When the direction of the interest rates changes, you're going to consider that a Fed pivot.
Yes, to be honest, that's not what I consider. Like that's what actually is a Fed pivot. Like basically a definition of a Fed pivot. Not like the Fed saying we might slow down rate. That's not a pivot. So the point I'm looking for is when the Fed says, it explicitly states, we could lower interest rates in time if this keeps going, or where the language shifts from we have to wrangle inflation and we have to do what we need to do in order to keep inflation under control, and that probably requires more interest rate increases. When it shifts from that to we have to make sure unemployment doesn't get too high, and we have to make sure there's ample liquidity in the markets, that's when they're gonna that'll be the message that they'll give when they're getting ready to pivot.
I thought they were pivoting when unemployment like hits whatever. I thought that was the metric they're using.
Yeah, I don't think he's not arguing that. He's saying, you'll know the Fed is pivoted when the language they use to justify their actions changes from we need to see more unemployment to we need to worry that there's too much unemployment.
Yeah, basically the opposite of what they're saying now.
Right.
I think the markets right now are starting to price in a soft landing, which is insane to me. Not because I'm just like, oh no, doomsday is coming and that's that. But it's insane to me that the same markets that were saying Powell doesn't know what he's doing for the past year are now saying as far as based on market prices and price movement, the markets are now saying we believe in Powell and we believe he'll get us a soft landing. That's a little insane to me that the markets just change their mind like that.
Yeah, I agree. I think that's silly. I think the only pain that will make Powell stop pivoting or pause would be like a housing crash. I don't think he would want to let the housing or market go or real estate market go. I don't think he cares about the stock market at all.
Do you not believe? Sorry. I'm sorry. No, I was going to say, you mentioned the housing market crash. I mean, from where I'm sitting, and I try to remove my desire for the housing market to crash so I can get a house at a good price. But my understanding is that we are actually looking at the start of a housing crash.
I don't think it's going to be a crash per se.
Here's the thing about calling for a housing crash is that there's a lot of people like you, Monster, who have that notion of I can't wait for housing to crash so I can buy a house. Well, if a bunch of people say that, you're setting a very solid floor, right? There's demand. You just want it slightly lower, but it's not going to crash because the demand's still there.
Yeah, we went on this 2 days ago. The housing market is not going to crash. It'll slow down. Certain markets might lose 20%, 30%.
If we're going to start arguing about the finer points of whether or not to crash.
Hang on. You don't argue because you three are essentially saying the same thing. You're in agreement. You're saying all three of you are saying it's not going to crash. So
I'm not saying that. I'm not. I am arguing that I think the housing market can crash. I mean, the retort I got was reasonable, and I understand that there's a floor for demand because there are a lot of people who, with the rising interest rates and the overvaluation of homes, debatable, I understand, but the massive increase, if nothing else, in the cost of homes year over year in the last 3 years has been nothing short of tremendous. There are a lot of people who are saying, all right, I'm out. I still want a house. I still want to buy a house. But right now, I need the market conditions to change. And theoretically, when those market conditions do soften, that demand is going to eat up whatever supply becomes available. But what we're definitely seeing, as I got my toes in the water of the housing market, is I am seeing more and more listings in my region. And I understand real estate is regional, but in my region at least, which I understand is not as bad as some of the other areas on the West Coast, which are really going through what would be considered a housing crash, just based on the price cuts and the total valuation of those homes year over year. More and more homes are coming on the market that are underwater, where investment companies who are eating up supply arbitrarily, and I mean arbitrarily in the sense that they never intended to do anything with that property but to make money on it, are having to turn around and sell it before they planned on selling it at a price point they didn't plan on selling it for, less than the price that they publicly listed it as having been bought at. So we're talking, I bought the house at $450,000. I put it on the market at $600,000. And for the last 6 months, they've been decreasing the price, and now it's being offered for $398,000. And they're offering to buy down the first year for 2%, buy down the second year for 1%, and doing everything they can to make concessions. And then the real estate agents I'm speaking to are telling me, hey, yeah, it's a seller's market. It's a buyer's market, rather. It's a buyer's market right now. You do not make an offer at list price. You're going to go $5,000 to $10,000 under that and negotiate. And there's no more than 1 or 2 offers per property, which is very different than the conditions for the last 2 years, where there was multiple offers for every property. I was going to look at properties.
All right. Hey,
Yeah.
so check this out. So I think the reason I kind of stand by my statement, I think you three are in agreement because a crash. So prices are falling. Prices have already started falling. Some regions they've seen already a 25, 30% decrease in prices over the past year. But typically in the past, what a crash means with asset values, if you ask like some of the veteran stock traders, they'll say COVID crash. What COVID crash? That was a correction. A crash is where a market fails. These are just prices correcting. That's all they're really doing. And if you look at the long-term charts, housing prices are still higher than where they were several years ago. So like, yeah, they're coming down a lot, but that's just because we had this insane spike through COVID. So I think you three are in agreement that the housing market isn't going to collapse. I think that's what a crash means. But
Right, I
prices
agree
are
with you.
already, what you're saying is, yeah, there's evidence of that. That's already happening. And I think prices could keep going down for sure.
Right. You're differentiating between, and this is the point that I wanted to make is before you mentioned that we're agreeing with each other is, that we have to really be sure that we're talking about the same thing here, because a price correction and a crash have to be different. And I'm optimistic that there's going to be a crash precisely because of the investment companies like Opendoor, Knock, Zillow, and to some extent other large firms. I know BlackRock was getting involved. I don't know to what extent, buying up a lot of homes and convincing a lot of mom and pop investors to buy homes at overinflated prices. And now they're going to have to, that if the conditions change enough that they have to start liquidating, one of those big firms goes under because they can't liquidate enough, then there will be a massive windfall for people who are waiting on the sidelines. You could see a crash. And really, I guess there's an interplay.
A lot of those brokers, they're not exposed like that. Like Zillow did it, right? But that was like a year ago. And then they said, we're not going to do that again. So that's one thing, is that a lot of them are not bad participants, not anymore. And then you have companies like, say, BlackRock, that don't just, they're not in the business of just flipping the houses. Like real estate has become part of their portfolio. So they won't, and they're very well capitalized and they have a lot of liquidity. Not saying BlackRock can never fall, but they do know what they're doing. So prices will affect the balance sheet of BlackRock. It'll affect the stock price, but it would require a crash independent of their business in order for BlackRock to fail.
Well,
Does that make sense? Like, I don't think BlackRock would cause the crash. A crash would cause BlackRock to fail. I see it the other way around.
Yeah, I agree with you. I don't see BlackRock as failing being a component of the crash. I don't think BlackRock has to fail for the housing market crash to happen. But if the situation in the housing market deteriorates such that BlackRock pulls its stake in that, they're not failing as a company. They're putting their money where it's better suited to their interests. But that could facilitate or accelerate towards a crash. And now Opendoor is, in my opinion, I would short Opendoor. I think they're going under. Based on the properties that I see, Opendoor was out there like Carvana, buying houses sight unseen. All of the realtors I talked to were like, oh yeah, I don't want to take you to see an Opendoor property because you're not going to like it. And I was like, what do you mean I'm not going to like it? They said, Opendoor doesn't have very, very good standards for the homes that they're going to buy. We would all agree that, I think, so what's the opposite of a crash? What is the term we use to, a boom?
Yeah,
I mean, if you look at the demand, sorry.
Well, my point is that if you looked at what happened in the last 2 or 3 years in the housing market, and
Which is a bubble. You're basically talking
a bubble.
about a crash of a bubble, yeah.
Right. So you look at that and you say that's a bubble. Now, obviously, the whole soft landing thesis is that on an economic level, on the whole economy, at least nationally, can we deflate the bubble slowly enough so that the material that encapsulates it doesn't rupture, right, irrevocably? How does that happen in the housing market? That's what I want to happen in the housing market. I think that's going to happen in the housing market because I think that bubble was insane. I think it was not coupled to reality. People panicked
People were doing insane things. Builders were doing insane things. So I think the crash, I hope the crash is going to happen. I'd be interested in understanding what criteria are necessary for that. And I would think things like Open Door saying, yeah, we're done. We have to liquidate all of our inventory.
The key criteria, and it sounds like you're hoping for like a 2008 type crash. But here's the reason why that probably can't happen at all, is because you don't have the same amount of leverage, and that's what's required. And in the housing crash of 2008, the things that caused it were leverage and fraud.
Ding, ding, ding. That was a banking problem.
Well, hold on.
I'm not saying prices can't fall and that we weren't in a bubble, because I think it was evident, like, yeah, we were kind of in a bubble, but it was demand driven and it was tight supply. So that's not like, those are economics. That's not fraud, you know? So I don't think the same thing could happen. Maybe prices fall half as much as during the financial crisis.
Demand-driven during an economic shutdown with an increased supply of liquidity too. So increased supply of liquidity has come out of the housing market. There's not going to be a crash. There's a repricing period. Like, that's what you're going to see, is the repricing period where everybody marks down, they take their losses, and we move on.
It could still, you could still have a good drop in prices, but the way I see it, we're probably at least halfway there. And I don't think housing prices are going to fall as much as people really want them to. Like, I think people are romanticizing it, you know?
Well, you're arguing.
Will some builders go out of
that
business, or some private investors go out of business?
Sure, the smaller ones that were leveraged, but they don't have that big of an impact on the economy. Some of them are already going out of business.
Yeah,
And
well,
maybe
it won't be a domino effect like in 2008, but a lot of them will. I mean, if it was a bubble, there was a lot of business there that was based on that bubble. That
like look at it this way: how many small businesses got going during COVID, or coming out of the COVID peak, you know, in 2020, because of fat stimulus and free money, you know, almost zero interest rates, right? How many small businesses, how many of those do you think were shit ideas, but they got going because everybody had money, right? So fast forward to today and going into a recession, how many of those small businesses do you think are going to fail? Does that mean big business is going to fail? No, it just means all the shit is going to get wiped out. The shit that shouldn't have existed in the first place. So you're already seeing that in the housing market, but as with small business, it's not having a real impact on the economy.
Hold on. The equivalent to what you're talking about, in my perspective, as a bull thesis for a housing crash, would be that the shit idea was buying a house for $120,000. And I don't know how you came by the ability to do that, if you're a big investor who had cash, or if you're a small mom and pop investor who was able to get loans because you just started a business and this was your model. I don't know. But the shit idea was buying a $100,000 house and then thinking that you were going to be able to flip it for 2 to 3 times its value without making meaningful improvements, without any regard to the region it was being sold in. And one of the other things that's hurting is, I don't know how significant this is because I'm not God, but a lot of people really thought and do think, they're being dissuaded of this now, that they're going to be able to buy these properties, and if they're not able to flip them, they're just going to turn them into Airbnbs. But a lot of homeowners associations and counties are cracking down on this Airbnb stuff. They're not allowing it. We had a friend put their house up for sale, said, hey, we're hitting the peak of our ability to sell this house. Found an investor to buy it, made an agreement with the investor. We're going to sell the house to you, and then we're going to rent it for a year while we build a new home. Investor backed out, canceled the contract, said we were going to use it for an Airbnb, but guess what? The homeowners association stepped in and said, no, unless the person's going to stay there for 30 days or more, we're not going to allow you to rent it.
I don't think anybody disagrees with the fact that Airbnb has a shitty role in this, but I think you're pointing, like, does anybody remember? I think it was in the movie The Big Short, where what's his nuts said the housing prices are falling across the nation, but they're regional. I think he says something like that, like they're regional bubbles, I think is what he specifically says. That's how I see it now. Like, they're regional bubbles, like literally what they were, lying about during the financial crisis. I think that's actually the case now. So like I think Airbnb, for example, that's a regional problem. Airbnb doesn't have that big of an impact on the housing market. It does on the apartment market if anybody's keeping track of where Airbnbs are and what they're using now. So it has a pretty big impact on apartments and perhaps
And
like
hotels.
luxury
Well,
homes.
I'm only bringing up Airbnb just as a facet of my counter argument that when you say businesses that don't exist anymore or won't exist shortly because they were shitty ideas in the first place, there's an equivalent in the housing market. There are people who, if you watched the market very closely in your region, were doing ridiculous things. And I don't mean to speak to their motives. I mean to offer suggestions as to what their motives could be, but they were absolutely engaging in shitty thinking. There was no way, and there isn't a way, and it's coming back down now. And if enough of that happens, then it could trigger a crash where a lot of people who only purchase properties as investments, and if there is some kind of massive recession,
you're still missing the leverage and the fraud part. That's what
I
I'm trying.
understand
I think
that
a few other people are trying to say that as well.
that the crash cannot take place without there having been malfeasance, fraud or something like that. I'm not missing that. I just think that
It's just how do you trade on that?
I don't think
private
think
investor?
fraud has to have happened. I think that people were over leveraged on their houses because if you think about it, their houses increased almost 100% in what they were only 2 years ago, right? So people are over leveraged on their houses, thinking, "Oh, rents only go up, right?" And rents don't only go up; they're literally going down again now. So that's the issue there. People who had a house that was say 200,000 for argument's sake, now worth 400,000. They've taken out a $200,000 loan on it, with already being, over leveraged on that. Now they owe 400,000. Their house is now, not only is it not worth 400,000 anymore, it's probably worth about 380, 360 in some cases. But they also owe money on all these properties that they bought with, only putting 20% down. They could probably bought 3 or 4 properties only putting 20% down. They had all these properties rented out, and they were breaking even. And now that these properties the rents on these properties have lost value, what's going to happen? They're not going to be able to afford their mortgages. They lose.
That's not.
houses.
That's not a thing,
gonna
though.
work like that, dude. It's not gonna work like that. They're just
It's not
gonna
like
write down
It does work like that. People have
no,
literally
hang
done
on.
that.
It's not like the financial crisis where you can just leverage houses upon other houses and keep doing that over. That's what they were doing during the financial
they
crisis.
stopped.
You literally
What
can't
I'm
do that
saying is,
anymore.
when your house is, if you have a $200,000 home, right, and then it's suddenly worth 400,000, right, you can take that 200,000 and put deposits down on 3 separate houses with that. You can do that because all you need is 20% down.
and then
No. That's part of the app. No, you can't do that. They won't let you. They literally
What
won't
bank
let
is
you
going to
do that.
lend you? What bank is going to lend you to go up to 100% LTV when you already have a mortgage? They're not. Banks know exactly what you're trying to do when you do that kind of stuff, and they don't let you do it. Now you can say that technically you can technically have up to 10 conventional loans at one time. That is the rule, but no bank is going to take that much risk.
Diamond Hand, are you okay? Did that hurricane get you?
It did, bro. Got me.
Companies
Where are you?
purchasing houses and using their
I'm behind the Wendy's, bro. What are you talking about? Loud out here.
And I guarantee people did do that. That is what people did, that's how they got these houses, because they over leveraged on their house that had doubled in price, and they
and even if they, Mr. Bumbelow, even if they didn't take out the equity from their home or their perception of equity in their home and go turn around and invest that in more property, there's absolutely people who looked at the increase in the value of their home who did other things with that value, who refinanced, who took that money and thought this is a sure thing.
Yeah,
they believed it. And David Ramsey, and other people like him are going on and talking publicly all the time how the prices aren't going to fall. They're going to stay stable. I think it's kind of naive to think there can't be a crash in housing because this isn't 2008. One of the things that we haven't discussed is interest rates. Interest rates, inflation, they were not the same in the 2008 housing crash. We didn't have 7.1, which, I mean, that's a doctrine. You talk about fraud.
We did have high inflation, high interest rates leading up to the housing crisis.
No, go look at inflation for the housing during the housing crisis. What is it?
I'll tell you right now. If you want me to say it was exactly the same, I'm not going to say that, but we did have high inflation.
Inflation was not this high.
Yes, it was not this high.
But you just said inflation and interest rates. That's what you just said, right?
So
inflation was never any type of like topic until recently.
You just mentioned it. Yeah,
The reason they started raising the rates was inflation.
So hold on. Do you?
They didn't say we're going to raise the rates to pop the housing bubble. They said we're going to raise it.
Wasn't anything worth mentioning before the.
Do you think the housing prices are at the peak where they're supposed to be? You think they're at where they're supposed to be right now? You think these are reasonable prices for homes to be at? Does anyone actually think that?
No, I don't think anyone. I don't think Luce thinks that.
No, I don't think anyone thinks
I'm
that.
glad
But that doesn't mean that housing is going to crash. Like this isn't like a this or that. It's not black or white. Like there are a lot of different scenarios here. And the fact is, you can have some leverage. Sure, some people are leveraged, but it's not rampant the way it was in the financial crisis. It's not rampant, and there isn't nearly as much fraud. Like that, there's a very minimal amount of fraud across the housing market.
That's a statement that's really sticking to my craw here, Luce. Is that you cannot know, because in 2008, when people were doing whatever they were doing in the financial market that led to the crash, it doesn't matter, because before the 2008 housing, because after there's I don't want to be sensational, but it's convenient to come in after the crash and then act like whatever legislation now exists is enough to ensure that no fraud or malfeasance is taking place. And I get that there's reasons to believe that you can't or couldn't understand how fraud could be taking place, but that is absolutely how fraud takes place, because you don't envision it, you can't understand it, and then it happens.
No,
people invested in the housing bubble of 2000, the great financial.
Okay, calm down. You're getting too heated. It was known.
Telling
it was
someone to
known.
talk.
You had people like Michael Burry calling it out. What are you talking about? You wouldn't know.
Well, what he's saying.
I just think the average investor is a lot smarter these days. That's all. I think the average investor is smarter. And America.
The reason why legislation gets passed is because they find out about it. There's stuff going on now we don't know about.
So let me get this straight. The thesis is there's stuff that you don't know about, therefore the housing market's going to crash. Is that right?
No.
Prices are high.
No.
To be honest, I don't think
because that's all I'm hearing.
Crash. I really don't.
It'll just be a correction, right? And
so I'm just saying.
That's what I think. Yeah.
Think people
No,
are
your argument is, to the best I understand it, sound. But when you include the qualifying fact that without fraud, the housing market can't crash, that's predicating that's requiring that there is
I said
no
leverage,
fraud.
a lot of leverage, lot of leverage, and rampant fraud. That's
right. So let's
specifically what I said.
I heard you, and I'll be specific then. Okay. So with your specific words, leverage, a lot of leverage, and rampant fraud, you cannot know that those things are not happening. You cannot know it. Right.
This is amazing.
We got to take that
you're like
off
a religious
the table.
person saying you can't prove that God doesn't exist, therefore he does.
That's a ridiculous equivocation. That is a ridiculous equivocation.
You can't know that it does exist.
Yeah, like since I don't know that it doesn't exist, therefore it exists and it's going to happen. It's literally what you're saying.
All he's saying is keep it as a factor.
I'm literally exactly keep it as a factor.
Okay,
don't
hang on.
predicate your argument.
You've changed your argument then. At first you're like the housing market is going to crash. Now you're saying it's a factor and it could happen. That's exactly what this
are you suggesting that? I don't think anyone's suggesting there is no fraud, right? No one is saying there's no fraud. There will always be fraud, right? But what Luce is saying is it's not as rampant as it was in 2008, which is true. Like you can't say there's no argument that you could say that it is as the same as it was in 2008.
That's what I'm arguing against, and I'm going to try not to shout or anything or raise my voice. We cannot know, and it's convenient to look back post fact rationalization and say, well, hey, all of these smart people knew that there was rampant fraud and that there was over leverage. But I assure you, when the next bubble pops, and there will be another bubble that pops, it might not be during this economic decade, it might not be within this era, but there will be, and it might be in China, like China's real estate bubble popped. It might be something like that. It might be this, but regardless, when the next bubble pops and we find out what was responsible for that explosion, we'll go ahead and act like, well, now we fixed it. So you have to leave that factor on the table. You have to accept that there could always be rampant fraud and over leverage. I would argue that the markets, all markets, the entire markets are over leveraged.
I think we're gonna have
the
to do
Fed,
it.
the Fed had rates at 0%. That's the over leverage. If they don't drop it back down to 0%, that's the fix.
Somebody said in the comments that y'all have been talking about real estate since yesterday.
Are there any real estate agents in here?
Hey, how about this?
Are people
How about this?
selling houses that they shouldn't be selling?
If
Does
we
anybody know?
if we do have a crash, then we'll give full credit to Monster, and we'll say WallStreetBets knew that there was going to be a big crash.
But how do we trade it?
It was the people on WallStreetBets that knew everything.
I know other
You can,
people think there's going to be
you
a
can
crash.
short against REITs. That would be a good way. If you think the housing market's going to crash, just short against them.
What about home builders?
One of the things that makes me
Not them as
concerned
well.
of the
What about
possibility
bed
of
chairs?
crash is the number of investment firms purchasing.
Sorry, who was talking? There was a lot of noise.
It's Cosmo. So I've been looking at Atlanta as a city. 30% of all homes sold in Atlanta are purchased by investors. And that said, the cost of rent in Atlanta from 2018 has gone up by 30%. And I feel that these investment firms are using the money that their gains off of their rent to cycle back in to bring in to put more into their investments. But when families aren't actually living in these homes, they don't have enough to go and invest. And they've most likely used loans from banks to allow them to purchase these homes. So
let me ask you a question, and then I'm gonna go to strictly to just being ref, and I won't provide any more opinions. But I just have one last question. The guys that think the housing market's going to crash, like really crash, or prices are going to keep going down a lot. I do think prices are going to keep going down, but for the guys that are very like extremely bearish on the housing market, where the fuck were you 9 months ago? Like, why are you just now talking about it?
You don't
you
have
would
an
have made a lot
attitude
of
about
money.
it, because 9 months ago I had the same opinion. I wasn't in this chat talking to you about it, but 9 months ago I absolutely was saying, hey, I don't have any money to make, but I'm very poor. I feed myself and I feed my family. Like, Jesus Christ.
Wait. So what do you think the market is going? Which way do you think, Luz?
Which way? The housing
market? What do you think? Like, you think it's going? Like,
I just said that. Okay. Again, I think housing prices are going to keep falling. I do think that.
Yeah.
And the Fed has said they called out the housing market, and they said the housing market needs to cool down. That's Fed speak for saying fuck housing prices, right? So just like for the record, and I've said it like 10 times, I think housing prices are going to continue going down. I don't think there's going to be a drastic crash like 2008 financial crisis.
Don't add the adjective drastic. Just say crash, because that's what you were saying.
Dude, calm down.
Yeah, you don't think you're gonna wake up and your house is worth $100,000 less overnight?
The question you guys should be asking is how much higher do you think a 30-year mortgage interest rate is going to go? You think it's going to go higher than 7%?
Okay, I'm trying to pull myself out of this debate, and you guys keep questioning me. Like, so
no, I'm agreeing with you, dude.
And I'll just ref. How about that?
No, I'm agreeing with you, bro. I don't think there's going to be a crash. I think there's too much going on.
I think that everyone has a different definition of the word crash, right?
Yes, crash needs to be defined. Crash needs to be defined.
Hang on. Sorry. Crash has already been defined. It doesn't need to be defined by WallStreetBets dudes. Like, it's an actual definition.
Define it.
Yeah, define it. Go ahead and define it.
Somebody call the Biden administration. We need a new definition for housing crash.
Look up the fucking Investopedia definition yourself. I'm not the fucking professor of Wall Street Bets. If you don't know your definitions, fucking look them up.
Yeah, but you're claiming. So you're telling somebody that their definition of it is wrong, but you're not telling them.
No, I'm not saying that. God damn it! I'm not saying
you
this is
are.
my
Yes,
definition.
you are. You are
I'm saying
refusing to provide
Oh my
your
God.
definition or the definition that you're operating with while telling.
Okay, what I'm saying is these definitions already exist. They're not my fucking definitions. You look them up. It's not my fucking job to educate you. Jesus fucking Christ, you're so entitled. Like, just shut the fuck up. Look up the definitions yourself.
You don't know what stupid means. Would you talk if I tell you the definition?
All right, I'm out. No, I can't take this anymore. I'm getting heated. I gotta go to a doctor, get some blood pressure meds.
5 breaths, just nice deep breaths. Take your time. I'm a doctor.
Well, I hope he's okay.
I've just tried to look, but I can't find any specific definition of a crash. Just says
it happened more than 10 to 15% to 20%. That's a crash. Whatever. It doesn't really matter. You guys got to understand that.
It's okay to have different opinions of what a crash is. Just state how severe you think the crash is going to be.
So a crash could be
Severity,
like a 1%
severity.
decline, right? Or it could be a 50% decline. It could be, it's whatever you
okay.
think.
And it could be temporary. Your house price goes down 20%.
Please stop talking over each other.
So real estate markets are different from stock markets.
Right. I want to make it clear that I agree with Loose Ventures on almost everything he had to say. That the real question is, are we looking at repricing, drastic repricing, but just a repricing? So if you were to chart, the growth and the value of a home, control for inflation to the extent you can, that you watch that trend improve, and you say we're going to come back to that. We're going to come back to that standard improvement or increase in the total value of the home, a repricing, right? And you might dip below that as you level off, or are we going to see a crash where there's capitulation, where the investors in the Atlanta area, I live in the Atlanta area, where a massive portion of property is being purchased by investors who do think they're going to be able to turn those things around. I got a call coming. I'm sorry.
I think the Fed is actually trying to have a smooth glide or transition in the housing market by increasing rates at a steady clip. How that happens is by dropping the prices by 10,000, 20,000, 30,000, depending on your market. Like I live in New York, so the market has nothing to do with the country's market and other states. New York has its own savagery and insanity. When you can get 500 square feet for $1 million, it's just not the same. For other single-family homes in the country, a lot of investors have bought into these places. They try to flip them. They try to rent them. They get lucky. If people can't afford to buy their homes, they're stuck renting. If they can't afford their rent, the rent has to come down. If the rent doesn't cover the investor's initial investment and mortgage payment, they have to sell. So again, there's this weird cycle of everyone's kind of getting churned into a certain price range. And the Fed is just increasing their rates by 75%, just to kind of smooth out the transition, slow everybody down, and give it that gap that it needs. That's why they want a smooth glide. They don't want to crash. They understood that from the previous market when they gave everyone any sort of variable loan on a Ninja, like I mentioned before, where there was no income, no job verification. They were just getting approved for homes because that's how you create money. You distribute loans into the housing market. Now they've already jacked it up, and they don't need to. They want to make sure that the whole world's not freaking crashing left and right because of the housing market in America.
Well said.
Hey guys, where the fuck is the casino?
You should have turned left at Albuquerque.
So I think we can all agree that we are going to experience a correction, right? Whether how big that correction is, no one knows, but we can all agree there's going to be a correction, and it would be a very stupid
I know how
idea
big
to
it
buy a
is
house
going to
right
be
now, right?
I'm pretty sure everyone
exactly
said
enough.
that. I think everyone said up here that we think prices are going down. Housing prices are going down.
So we
I
all
posted
agree
a link.
that's wonderful.
I posted a link in the comments with the
If housing
definition.
prices go down by 20% like they did in 2008, can we define that to be a housing market crash?
Yes.
Yeah, it's a pretty good
For the
crash.
sake of
I'd
this
say.
conversation ending, please say yes. Everybody.
Yeah. Somebody asked for a play in the comments. Does anyone have an actual play?
I have a play, SPSX. Wait, hold
What
on, I
about
said it wrong. SPXS calls. What did we think about it after Powell's announcement?
at danger of going back to people who are too passionate, which probably includes myself. The people who brought this up and were very passionate about stating their case. What is your play? Did you
So
did we just
I'm
say all
bullish
those
on
things?
physical gold and silver.
He had a call and went away, but I think he had a lot of fear.
So
And
I was talking about
uncertainty and
this
doubt?
yesterday, but I actually like the AR. I like ARI because of the dividends, and because I don't think the commercial market is going to crash because they're educated investors. They're not going to lose their properties like some other companies.
Sam Bankman-Fried was an educated investor. Let's not,
No, he
let's
wasn't.
not
That
put
was
too much
no.
weight on
Don't do that.
where he
Don't
went
do
to
that.
school.
Idiots can get into MIT as well. You don't have to be a fucking genius to get into a good school.
Yeah,
You just have to
please.
have the money.
As a personal favor, can we not talk about the C word? I took a vow to not talk about it because every time, like, you think my blood pressure is getting high a few minutes ago. No, talk about the C word. But please, as a personal favor, can we talk about anything else aside from the C word and housing?
What's the C word?
Rocket.
He doesn't want to talk about crypto, so change the topic.
You don't have. You can if you want. I'll just leave, and then everyone can have their way.
What do we think is going to happen with Grinder? What do we think about that?
I'm bullish long term, but it's still in de-SPAC mode, and I don't like playing with things in de-SPAC mode. They jump around too much.
So I'm trying to find this information with Grindr on their minimum advertisement purchase. I know it's just been talk, but if anybody can provide actual written documentation of it, then I would be much happier to invest.
I think somebody looked that up a while ago, and they said it's not a minimum advertising purchase, but once you purchase $20,000 per month, they give you a dedicated account executive. But you can advertise for any amount that you want. I think that's what they found.
So do we got, like, I'm not eating the pudding until I get the proof.
But the proof's in the pudding. You gotta eat it.
Show me the proof.
You gotta have your cake and eat it too.
I'm driving right now, so I can't look it up. I'm just repeating what was said in a previous session.
Okay. Well, I'll try to look for it. I've been looking for it.
But they should have their rate card, their advertising rate card on their website.
Is that all anybody has to say outside of the C word and housing?
I'm bag holding on Rocket Lab. I was not happy when Kathy Wood bought in, but I don't think Elon's focusing too much on his private SpaceX right now. So, I mean, I'm still long term on Rocket Labs.
So you like space?
Yes, sir. They got a bunch of good patents and they have they've been doing a lot of good things. They work with NASA and yeah, very cool.
Everyone was just waiting for 2 o'clock, Luce. We're just waiting with bated breath for the 0.25 rate announcement.
Wait, is it 2? Eastern, or is it 2 or 1?
2 Eastern, they released the figure,
Eastern.
and then at 2:30 he talks.
So I'll bring up a company that I happen to like. UR Energy, ticker URG, just announced today that they've got signed contracts for delivery of their materials starting in 2024 of 300,000 pounds a year, which is good for them because they've been sitting pretty idle. So they're going to start getting production going and actually delivering physical assets soon.
Pounds of what?
Pounds of their asset. They trade in uranium. So they've got a utility that they've now contracted with for starting in 2024. They have a 5-year deal that they can roll out an additional 5 years in 26.
A local miner?
They're a Utah-based miner.
Yeah, I just saw a Wyoming plant was delayed because we still get so many supplies from Russia. So local supplies should get a boost from this Russia thing.
Russia's big in enrichment. They do about 20% of global enrichment of uranium. So that's where the bottleneck hits from that.
Are you the person that had the uranium talk a couple of weeks ago?
I am the person that, yes.
That was dude. That was fantastic. Thank you so much.
That was very informative.
That was very good.
Thanks.
You're a uranium man?
Yeah, I am.
What did we call the forum? We called it like Uranium Showdown. I don't know. It was a good one.
It was supposed to be a throwdown, and there was supposed to be somebody debating against it, but then no one showed up. So I just told opinion I'd take it.
Yeah, I don't think anyone really could put
I don't think anyone was prepared for your DD. I mean, I don't think anyone could even counter that.
Yeah, it sounds like everybody was expecting you to tell them exactly what to do. Welcome to Wall Street Bets Reddit Talks.
It's all good. It's a sector I could talk a lot about, so it didn't bother me.
No, I joined just to be informed, It was very informative.
Agreed.
What do you guys think about SPXS going into the call?
I've got SPSX puts for $20 puts for Friday.
That's
so
a
the
3-time
puts
level.
assuming that SPY goes up because
Sorry.
a positive fall.
I had it backwards. I got SPSX calls for Friday because SPSX is inverse.
Right. Because I was looking at the $12, $23, $26 calls. Just trading that really quickly today, just like as a lotto play. I saw them somewhere between 2 cents, 3 cents. I think the ask right now is at 4 cents. So I'm not too informed on all the Greeks and stuff. I was just curious if anybody that's more competent in trading options had any thoughts on it.
I got them as my hedge, so.
So what are you thinking? Lose 0.5 or 0.75?
I believe what the markets believe. 0.5. There's about a 80% chance per the Fed Market Watch tool, and I think the Powell even said that. I think he even said 50 basis points is going to happen. So I believe what the markets believe.
So the market's priced in 0.5?
Well, I guess I should say, based on that, the Fed Market Watch tool, if that's what the markets believe, the markets are pricing in. I don't know what the fuck the markets are pricing in. But,
no, they go crazy no matter what. If it's 75 or 50, they'll go nuts.
If they go 75, they're just going to go nuts downwards. If it's 25, it's going to go down upwards, right?
It really depends on the lingo.
We'll see. I'm on the edge of my seat.
Doesn't it really depend on what Powell's going to say at 2:30? If you get 50, yeah, it might go up, and then he might go real hawkish, and Down from there.
But going to 75 is hawkish, right? Like that should drive the market down. On that news alone should drive it down because everyone's expecting 50.
Yes.
Yeah, if there's a 20% chance of 75, then just getting calls on SPSX.
I feel like he's going to do
wrong. Fuck,
75 because
SPSXS.
everybody's been calling him dovish and whatnot. So he's going to come out hawkish both in the rate and in the press conference. So I see the market going down all afternoon. Well, I'm hoping to also.
What moves it? Is that squeezes people buying puts and calls? Is it like squeezing after that, or is it real trades?
The Fed has been for a while now talking about 50 basis points and prepping the market for 50 basis points and like prepping how that's not a pivot and they have to reconsider they're allowed to reconsider numbers. There's been a lot of talk going into this prepping
Now, do you
the market
think
for 50. So it'd be a real shock if it wasn't.
Do you think prepping the market took into consideration China reopening though? That's where I'm thinking we're going to get 75 because they didn't take that into consideration. That kind of eased its way in.
I think at this point, there's a reason it's like 80% priced in, and the Fed's been essentially, as much as they can say, has been saying it's going to be 50. So it would be a huge shock to a lot of people, and I personally wouldn't bet against it.
So if you wouldn't bet against it, doesn't SPY just pump here?
I'm just going to do what Hardy said to do and just do the puts and calls at 5 cents because whatever, just throw tiny money at it and see if it rockets one direction. But y'all can do whatever works for you.
Yeah, you can take that approach, lottery ticket on both ends. I definitely did not take that approach this week. But yeah, that was a very good point by Hardy earlier about taking, the lottery tickets on both end of that.
I'm going to hope that SPY pumps.
And then from what I understood, you lose your money, though, if the market does nothing. Right?
That's correct. That's correct.
Okay. Sorry if it's, repetitive, but trying to learn. Thank you, guys.
I bought 420 SPY calls on Friday, expiring this Friday. And I sold half of those yesterday on the run up at a 345% profit.
Nice.
And I'm just holding on. I'm holding on to the other half and see what happens today.
Damn.
I rolled over my puts on SPY, and I was gonna just sell for a loss and say, hey, at least I didn't lose my entire bet. But I said, fuck it, just roll it over and see what the market says tomorrow.
Yeah, I mean, I wouldn't bet any more on this than I'm willing to lose. This is a pure gamble.
Yeah, it's definitely not a YOLO for me, but I do see that I'm increasing my bets. I compared to gambling, but yeah, I'm increasing my bets because I've done pretty good on some smaller ones. I mentioned that I had 150 puts like 2 weeks ago, and they were dirt cheap, and I bought some, and now look at it. So that's what's making me want to bet a little bit bigger. Phone call, sorry.
Don't do it.
Good job interview. I've got to do it.
No, I mean, don't bet bigger. Just
Wendy's? Yeah, take the job.
Classic rookie mistake.
Wendy's.
I'm sorry, I have a question. Does the data comes up at 2 or we have to wait for the speech to know the number?
Data comes out at 2.
Yeah, 2
Okay,
p.m.
thanks.
Eastern. Yeah.
Thanks.
So the market moves how much before 2?
I think Hardy said if they're going to halt trading, it's going to be like at 145 to halt trading or 130.
Wait, halt
if they
trading?
do it at all.
No, they don't halt trading for interest rate announcements.
Well, like, I guess to my point, if the data comes out at 2, somebody already has the data before 2, so somebody's already trading the data well before us. So when do we see the information actually hit the market? And it sounds like if we did see something that was halt worthy, it would happen at 145.
Wait, I don't think that's ever happened. Where's that coming from?
Yeah, I don't know.
I don't think
didn't
that's a
say that.
thing. I've
Maybe
never.
I misunderstood. I may have
Well,
misunderstood.
Hardy brought it up that if it was going to happen, it would happen then. But I don't think he was saying this will happen. I just think he was saying if for some reason they did a halt to SPY, here's the time I would see it at. Therefore, I would do the trade at this time. He was just playing the hypothetical.
Oh, gotcha.
So he would enter his trades around 145 because if there were going to be a halt, that's when it would happen. So no halt.
But I don't think that's ever. I don't think that's like possible. I don't think it's ever been done.
Yeah, maybe there's 20% chance there's a halt, so we don't even have to worry about it.
A halt prior to Fed meetings.
0.1%.
Okay, yeah, go ahead.
I have seen a halt prior to Fed meetings, but I don't know exactly what meetings that they halted the SPY on prior to the release of the data. Like it might be broker specific, I don't know. But I have seen on Webull when major Fed speech would be announced that just prior to the announcement they would halt the SPY ticker until after the announcement and then re-allow trading.
I believe they did that during big crashes. So I don't think they would do. I don't think this is just business as usual. Otherwise, they could have done that when they announced the 75 basis point increases or whatever. So I don't think this is a. I think it's a non-news event as related to potential trading halts. So I don't think you're losing. I don't think you're missing out if you wait until like last minute to place a trade.
There's an article dating back to 3/9/2020. S&P futures are frozen after tanking 5%. There's a circuit breaker back in 2020.
Yeah, that's based on price movement. So like if there's extreme price movement to the downside, then yeah, there will be a trading halt. But that would be the price movement would be the reason, not because they're about to announce something. So yeah, that can happen at any point in time, and it's basically a trigger because of price movement.
Gotcha.
If you remember what happened last time on the 75 rate hike, it spiked 300 points and then dropped 1,100.
Yeah, let's go for that outcome.
I'd be all over that.
Look, we've already been over this. SPY will be 500 by the new year. Everyone's getting free money. There's a Lamborghini waiting under your tree from Santa. If you don't believe in Santa, you're still going to get the Lambo. It'll just be from someone different. It's already locked in. This is financial advice. Enjoy.
What if I believe in
Amen, bro.
Yeah.
How do you guys feel about the fact that Wendy's is considered the most expensive fast food restaurant?
Spicy chicken for life.
According to data.
They have a $3 breakfast deal for a sandwich, like a breakfast sandwich and potatoes. I got it 2 days in a row. I'm probably gonna have to stop.
It's trash. Don't do it. The potatoes are trash.
I love the potatoes.
There's no reason potatoes should be that skinny. Don't get their breakfast potatoes.
I don't care.
It's
They're
the
like French
French
fries.
toast sticks that are trash.
I haven't had them.
But that breakfast baconator, oh.
I
Your
want that.
Your dumpster alone is worth what, $2 billion, right?
Where are you seeing this data that Wendy's is the most expensive?
I've always heard that, to be honest.
Go to Wendy's.
Go to Five Guys.
No, just look it up.
Ew.
I
like Five Guys.
I'll try to find the article, but Wendy's is considered. They said it's the most expensive fast food restaurant. It's like $10 for a double cheeseburger.
McDonald's is probably the most expensive breakfast, though. McDonald's hash brown, they're charging you $1.50 for 2 bites. I mean, come on.
Wait, that's expensive?
You could go to Burger
$1.50?
King. You could go to Burger King. You get a large for like $2, and it's like 10 times the amount of hash brown. Or you could get a small, and it's more.
Wait,
and it's $1.50.
You're not using the app. You get like hash browns for free through the app.
Hash
What are you talking about? What are you talking about? McDonald's is fucking dirt cheap. You get shit for free.
McDonald's is a rip with that hash brown. They're charging Look at the price of that hash brown.
You gotta
You get it for free. Use the fucking app. You get a hash brown for free. What are you talking
You don't
about?
always get it for free. I'm not talking about that.
What?
That's why the price is so high, because they want you to get the app. They're like, hash brown's $10, but if you get the app, it's free.
Go to Burger King.
You're losing, man.
Okay, you go to Burger King. You can get 2 mini breakfast burritos with hash browns and a coffee for $4.
Dude,
you cannot get that much food.
Or
at
download the
McDonald's.
McDonald's app and get like
What?
get like 25% off every meal.
For $4, you could get a coffee, a hash brown, and a sandwich for $4 at McDonald's. There's no McDonald's you could do that.
I think you need to download the app. Does anybody else have
Here's
the
how-
McDonald's app?
here's
What
how
I'm
to-
talking about?
I'm a cheap bastard, and you cannot.
Here's
get
how to scam
great deals at
McDonald's if you're a cheap
compared
bastard.
to.
Yeah, I have that.
McDonald's deals are not as good as the other companies. Burger King basically gives free stuff away almost every day.
That's exactly what the app does for McDonald's. Okay,
Not-
hang on. We're gonna
not
do a
here.
live.
Not
Hang on, I'm bringing it up on my phone. All right. First thing it says, you win free McDonald's for life. Does Burger King say that? Let's see. Rewards, deals, view deals. Let's check out these deals. Buy one crispy chicken sandwich, get one free. Buy a combo meal, get a Happy Meal free. $2 off any purchase of $10 or more. How do you even spend $10 at McDonald's? Buy one 10-piece chicken McNuggets, Big Mac, Filet-O-Fish, or quarter pounder with cheese. Get one for $1. $1 large fry. 99-cent any size premium roast or iced coffee. 29-cent double cheeseburger or 6-piece chicken nuggets when you buy one. Are you hearing these deals? You would think that I'm advertising for McDonald's. I'm just reading the deals.
Hey, there's a bunch under Reddit.
You want me to
Our
read the
fast
Burger King
food.
ones? 'Cause
Our fast food has a
Burger
ton
King
of
ones-
McDonald's deals.
Check it
The
out.
Burger
Hey,
King deals are significantly better. I'll read them.
check it out.
So you get a
hang
you
on,
get a
hang on, real
$3
quick,
Whopper,
real quick. Hang on.
$3 Whopper.
Talking McDonald's. Hey, I just got a job out in Vermont.
All right, hang on. I'm not finished. McChicken. Look, check this out. McChicken. Let's do 2 McChickens. I'm gonna put this in. Add to mobile order. 2 McChickens. Yeah, no, I want 2. God damn it. 2 McChickens. Oh, what the hell?
All I'm hearing
$500.
is- All I'm hearing right now is invest in heart blood pressure medication right now.
Invest in that. No, I'm good, man. I'm good.
I'm pretty sure Burger King and McDonald's have been heavily invested in it with this talk right now.
I know the last time I went to Burger King, which was like years ago, I was like, this is too fucking expensive. Like it was like $7 for a Whopper. I was like, this shit is not worth it. And then they like color the grill marks on the meat. Like, what the hell is this? At least I know McDonald's is bullshit.
The prices are different where you are too. Like where I live, it's really high, but if I go out in the country, they're cheap.
I don't know, Luce. I mean, I feel like if I download a fast food app, I'm instantly becoming a diabetic and riding around.
Hey, it's the American way.
Riding around in a rascal scooter for the rest of my days. I don't even want to.
Okay, I'm gonna
pretty
do.
sure
here
that
you go.
data.
All right, two. We're gonna go like let's assume we're not 100% full degenerate American. 2 McChickens, and let's say I'm gonna use the deals, and I'm gonna get a $1 large fry. That's a large fry right there. Use deal, add to order, and we're looking at $3.78 for a meal. That's a whole meal. For two McChickens and a large fry, $3.78.
How much is the hospital bill going to be after?
Wait, I mean,
Yeah, how much is a
do you have
lifetime?
Medicaid? Do you have Medicare? Wait, is it Medicare, right?
I'm calling from Canada, so.
How about Tim Hortons, huh?
Oh yeah, because there's nothing wrong with chicken noodle soup and sandwiches.
Yeah, of course not. Hey, how about this? Who actually did the McHedge when I first mentioned it? Like half a year ago? Did anybody actually do the McHedge where you buy shares of McDonald's and you use the dividends to buy food from McDonald's? Because that was a fucking hell of a play. Nobody. All of you are eating Burger King.
I've had McDonald's stock. I sold all my McDonald's stock when I bought my house. I that stock grew a lot. I had it since I was young. The dividends on it helped it grow. But I didn't buy McDonald's. I did eat McDonald's though, so I probably spent some of that, I guess.
I mean, the dividends paid for that McDonald's, and if you used the app, you would have saved even more money.
Stop it! I always use the app. I'm cheap.
Then you would know. You would know that those hash browns are free.
No, I hate McDonald's. The hash brown is not enough for me. It's 2 bites. It's a ripoff. I hate it. I hate the hash brown.
But it's
I love
free.
It. No,
Okay, but
I want a lot of them.
But as an investor and therefore partial owner, did you bring this up that the hash browns need to be
Yeah.
improved in
You
order
gotta-
to secure your capital
You
appropriately?
got to go to the counter and say, as a partial owner,
I want
these hash
3.
browns are too small.
I feel like they used to be $1.
McChickens used to be $1. That was a good timeline.
Yeah.
Yeah, I think they're like $1.30 now.
Well, with
The
the app,
They're like
Burger King didn't
$1.50.
raise their prices. I mean, Burger King was already expensive. Let's be real. For what it is.
Burger King was always like the coupon game. Like if you remember, they printed out the coupons. That was always Burger King.
I think Burger King's fries suck.
Some people like love them. I
Really?
don't like McDonald's fries.
What?
Oh,
No,
really?
no. I just think
Hot
that
take.
I feel like they used to be better. I don't know. I feel like they used to be better.
Back when they had more trans fat.
Like keep the fat. Like keep
The
it.
best fries is obviously Five Guys, right? We know that, right?
Five Guys is decent. I like Shake Shack.
For it.
Their fries aren't that great.
Popeyes fries are good.
Popeyes fries.
Popeyes? Really? I didn't know that.
No
They're so
fast
good.
place has good fries.
Hey, speaking of plays, who knows Popeyes that's like going under around them? Because the parent company of Popeyes, they also own Burger King, Tim Hortons, and I think Firehouse Subs. And supposedly a lot of Popeyes and Burger Kings are closing down, and basically assets are being like seized by creditors. Has anybody seen Burger Kings or Popeyes like closing?
Yes. I've seen quite a few Burger Kings with some nice wood in front of their windows.
There's been a lot of new Popeyes by me. Like I've been noticing a lot more pop up.
Opinion? Did you say yes?
That was me.
Yeah, I've seen a couple Popeyes actually.
They
The
have
rent was too
Popeyes
high.
in Canada?
We do.
Do they serve poutine at the Popeyes in Canada? Please tell me they serve
Wait.
poutine at the Popeyes in Canada.
Why do you think we are normal people? We don't eat poutine every day. It's not.
But it's delicious.
No, biscuits would be awesome.
So I'm in Canada too, and I eat poutine every day. Popeyes is actually seems to be actually on the up here, but Burger Kings are ghost towns. They are. I like drive by Burger King all the time. You won't see anybody in the drive-through, no matter what.
Who owns Whataburger? Do we know who owns Whataburger? There's several, and I mean at least 3 that have just finished construction and are opening where I live.
Yes, made to order.
Did you say
Whataburgers.
Waterburgers?
Yeah,
Yeah.
what a burger.
What a burger.
Like what a burger. But a lot of
Oh, I thought you
Southerners
said,
say
like-
water burger.
Yeah. I was like, fuck, I'll just drink from the
They're
top.
not just
Popeyes
expanding
always in,
though.
like, really
They
bad areas. They're like always
they've-
in like the hood, right?
Whataburger has not come this far to the east. Used to be Texas, was about as far east as it went, but they're not just opening new stores, they're opening them in locations they've never been before. A lot of the people I know are freaking out and going and waiting in 2-3 hour lines because they've never had access to Whataburger.
Yeah.
That's like how when In-N-Out came to Texas, it was ridiculous, and there were cars like lined up to the freeway. It was stupid as fuck. But also, Texas is getting Bojangles now. Wait, you said no?
So,
Y'all don't like
Boy
Bojangles?
John fast food.
I do like Bojangles. Bojangles are delicious.
Wait, who doesn't like Bojangles? I thought Bojangles was beloved.
New York City
I,
doesn't have any.
I can third that. Bojangles is good as fuck. I'm in Virginia.
I live in Seattle. I have no idea what a Bojangles is. What is it, like American food?
Chicken
It's like
spot.
It's a chicken
Southern
spot.
Chicken Spot. Yeah, Southern Chicken Spot, macaroni, biscuits, and all that good
Yeah,
stuff.
it's the place where what are those types of people? What are the types of people that really like that food? Come on, you guys know what I'm talking about. Help me out here.
Damn,
Classy
Seattle
people.
stuff. We're a type of people now.
Americans.
We're a type of people now.
Hillbillies.
Canadians. That's what I was gonna say. Canadians are into. Come on, you guys know.
I've never heard of a
I don't know
Bojangles.
why you guys got to make it racist?
You said
So a friend of mine came to the US, to the United States for an event of a brand, 14th cybersecurity brand. And they said to me that everything is bigger. It was like, bro, the burgers are 2 times the ones in Europe, in Italy, everything is bigger. And I was like, oh my God, one day I have to come to the US and eat everything and end up on the street with my stomach exploded and go to the hospital, maybe pay some 20,000 hospital bill.
What? I'm sorry. Keep going. What you sounded like Indian or Middle Eastern earlier. Now you sound like terribly Latino.
I heard Jamaican.
I heard Italian. I'm pretty sure he's Italian.
I think it was Italian.
Eastern Europe.
Now,
Familia, Mario.
hey, it's not about how we sound. It's about the friends we've made along the way. Am I right?
Guy's a solid dude. Keep him in the chat.
Hey, so did you see we're getting a Portillo's in North Texas?
Yes. I'm ready.
I have a Roy Rogers by me. I think it's like the last one on Earth.
Sorry, I missed that. What are you getting in Texas?
Portillo's.
Portillo's. It's like Chicago beef sandwiches, hot beef sandwiches.
I've never heard of that.
I'll be
I've
like,
never heard of that.
Sometimes when I go out to Chicago for training for work, they've got, obviously I have a bunch of Portillo's in Chicago. It's just super good. Hot beef sandwich. They like dip it in like au jus type sauce.
Sounds good. See, where I live, we have a really good restaurant, a chain of restaurants. It's called Pollo Tropical, and it's really
No.
nice chicken.
I've seen that before in New York, but it closed.
They opened a few of those here in Texas, but they closed.
They cook with seed oils.
They open and close.
So for the Popeyes play, it's QSR. And QSR is up about 11% the past 3 months. Doing pretty well. 11% in the past month. Looks like they are about flat over 5 years, and they're up 15% on the year. So I don't know, bullish QSR, you think? Maybe calls, long dated calls.
What's on QSR?
Puts? What makes you think so long?
Barely make you out.
If I would have to invest in a franchise to come to North America, it would definitely be Fabo, which is found in the Netherlands.
Who?
It's spelled Foxtrot,
Right.
Echo, Bravo, Oscar, Fabo.
What do they sell?
They sell Dutch fast food as well as like Indonesian food because the Dutch colonized over there. And it's pretty much what you want after you come out of like the bars. You walk up and it's got like these little vending machine lockers that are under a heat lamp that was made like within the last half hour. And you can get like a little noodle bowl or ramen or croqueta, which is like a Dutch version of a beefy mozzarella stick, but instead of cheese, it's gravy. And yeah, just look it up.
I've got to say, it doesn't sound too appetizing.
They sell burgers and like I think some sell like kebab.
Yeah, he's not selling it very well. I'm sure their advertising department would have more to say.
Cheap
That's
fast.
not a
like-
knock or anything.
No, I'm bad at selling shit. But like it's cheap fast food. Like I think it was like €1 for like a burger.
But like wholesome fast food is not a thing because the margins, is that right? You can't find people who are willing to pay, and so you have, people that are trying to do gourmet style fast food like BurgerFi. They never take off because at the end of the day, the margins just aren't there. People are going to choose McDonald's because it's cheap, regardless of what they're actually consuming.
Yeah, I feel like the market here isn't like for fast food. Like we don't have that fast food market. That's like more like Asia. I feel like most Americans don't want to like walk out of a bar and go to a vending machine and get noodles. I think. I don't know.
No, you're right. You're right.
To a college campus.
And they're gonna
I
go.
know, but they probably would rather go get it out of a microwave. Ramen. I don't know.
No, they would go for the fad.
What is the largest or the wealthiest currently spending demographic, and where are they going to put their money?
The ones living at home with their parents.
Yeah, they don't have to pay rent, so they have a lot of disposable income if they have a job.
Yeah.
Vacation.
They're
Oh
traveling.
yeah, I'd heard that vacations right now are really a good place to invest. I'd heard somebody on BlockFi podcast, BlockWorks podcast, pretty good podcast. They have a lot of economic guys on, and he was talking about how a lot of people with disposable income over the last 2 to 3 years were not going on vacations that they would normally go on. And all of that is, now that a lot of the restrictions are being lifted, they're all going on vacations. For what the guy was providing examples of hotels he used to stay at with his family on a regular basis. They're going for like $3,000 a night. I forget the exact location it was, but he said, that's an industry right now that is doing very well. I don't know any companies that are publicly traded.
I have a month worth of vacations booked already. I'm going to Poland, Germany, and a bunch of islands like off the Bahamas, like in Puerto Rico and stuff like that.
Yep.
So I have a rental house that I have rooms on Airbnb. I get $1,500 to $2,000 per month per room off Airbnb. So bullish on travel. Wealthy people will always want to travel.
I will say this about traveling in Europe. Their hospitality industry has gone down significantly since the pandemic, and it's because a lot of people who are like actually professionally trained in hospitality management, they lost their jobs. They found better paying jobs, and they've never thought about looking back. So now like most hotels are ran by high school kids in Europe who basically don't give a shit about people.
Isn't
That's
that
just a
a trend
demographic
across?
change.
Sorry, isn't that a trend across the entire market where during the kind of the COVID lockdown phase, a lot of people stopped working, and I know a lot of employers had to really increase the wages and compensation, the total compensation they were offering to employees to get them involved, and it seemed like that meant they were willing to lower their standards drastically just to have bodies to open the business and to because it seems like across the board in every business I've had any dealings with that the quality has dropped drastically.
Yep.
Like when I was in the Netherlands, our hotel, like 4-star hotel, we were spending at least €600 a night. And like I've never been to a hotel where like the shittiest service ever. Like we had to wait for the concierge to actually arrive to the desk, and the kid looked like they're in high school. And I was like, we've been waiting here for 15 minutes. Nobody's behind us. What the fuck's going on? And like I talked
So that's bearish travel.
Yeah, bearish on travel. I guess in the Netherlands, Amsterdam to be specific. Like my buddy who lives in the Netherlands, he was like, yeah, like restaurants are hurting for actual good servers. It's all people that were trained and actually made a career to be in the service industry, because they actually do pay their servers a livable wage, not $2 an hour. They found out like, oh, there's actually better jobs out there in the world that I can just work from home and do. So they didn't come back. So then you have all these people that like don't know how to actually operate in the service industry. And
Is that a bubble that's going to pop? That, do you know, those work from home jobs are going to evaporate? I know several high profile companies stated, you know, hey, remote work is going to end. We're tapering that off. Or do you think that that's going to become a feature of the modern workplace, that a large force will allow people to work from home where appropriate? Personally, as a manager, I don't think it's a good idea. And I couldn't see how any manager would think it would be a good idea to allow your employees to work from home. The amount of their productivity is going to fall drastically. I've observed and would imagine across the board.
That can't be a popular opinion.
Yeah. I got like I know 4 people who work from home, and then I know a close relative who works for a multi-million-dollar company where most of her employees are working from home, and she found that her employees were actually more productive, and the overhead cost of actually having to heat their buildings.
Yes, short
Yeah.
commercial real estate.
Yeah, they haven't had to they've been able to like reduce their overall cost, and it's like sweet. Like my family member is saying like, yeah, I actually want them to work from home if they can, because it's saving them money, and by saving them money, they're more likely to stay and not search for a job because life isn't becoming too expensive for them.
Yeah, the only person I know closely who works from home was just literally laid off 2 days ago. But I would guess that if we investigated the productivity, I would be really interested to see, you know, what a close examination would reveal, because I know personally, and it could just be because that's who I am, but I couldn't be, if you you'd need to give me very specific tasks and a very specific timeline for those things to be accomplished as productively as if I was sitting across from a coworker who is similarly engaged with my manager on site.
So something to consider, at least for the US, about work from home and whether or not the trend will continue. The federal government still permits a large percentage of their workforce to continue work from home. And that's a very large employer. And so that's going to dictate what other businesses can do. Even if a company wants everyone to be in place, if the government lets you work remotely, they're going to have that risk of, oh, now people are going to want to work for the government, and the government's already got the benefit of the pension and the other benefits that they bring that companies can't necessarily match. Now it's also I can work remotely and I don't have to drive in every day. So that might pressure businesses to have to stay at least in line with what the government's offering.
Yep.
Can you quantify the size of government employment, or where could I find that? Just look at, you know, as a part of the total national employment that they take up.
So to try to give a little perspective off the top of my head, the U.S. military, which is government employment, is the #1 employer in the United States. And that doesn't include like all the non-military civilian workers, federal law enforcement. There's just so many different branches of the government that employ.
Right.
Which I'm bearish on hotels as well.
Why are you bearish on hotels?
Labor is a big problem.
high turnover for their workers, and you can get a better value just going on Airbnb and getting like a penthouse or something like that, or for the same price. There's always going to be that group. There's always going to be that group.
Been a shift away from Airbnb though.
Yeah, I think there has, at least as far as Airbnb is concerned, I think there's a lot of pushback, and it seemed like they were kind of running rampant, and they were kind of doing whatever they wanted, and it wasn't really, people were indifferent. But now I think people are starting to realize that it's not a good idea to just have random strangers come and live in a room in your home, and the traffic, the way that changes your suburb. There's deleterious effects, and I think there is going to be more pushback.
There's nobody I know that me personally, I'm close with, that would do an Airbnb. Hotels just nice though.
I never thought about even doing one.
Yeah, it's not even a consideration for me.
It's not even a consideration. Hell no.
It's been a toss up for me, whether to use an Airbnb or a hotel when I'm traveling, because I'll look at the city. It all depends on where I'm going, like which city. But I can find a nice hotel for the same price, if not cheaper, than some Airbnbs where even the host is still I'm sharing the space with the host, which is weird.
Yeah, none of that. If I owned something, I would have no problem hosting as an Airbnb. I just wouldn't stay in an Airbnb.
Agree.
I like Airbnbs. I mean, you get to see how some folks live without them being there. And
exactly.
But it's also nice. It's a nice social experiment because it's I'm actually going to treat this person's home with respect, unlike a hotel where I'm just going to totally leave.
Well, I think that if you look at, I think you would have to look at what is the average customer for a hotel going to do, and I think on the average, most customers, they're going to get in, sleep, and get out. I don't think many people are really tearing the hotel rooms apart. I think generally people are controlled, and the people who have the money to travel probably more so. So I don't think that's a big problem for hotels. I could be wrong.
Something that's also been brought up about Airbnb, and I can't remember whom, so sorry for not giving credit, is that a lot of them now are adding in clauses that you need to clean up the place, but then also adding in large cleanup fees on top of it. And that's really pissing people off. Where it's you need to clean my house, but I'm charging you.
Yeah, that's a few morons doing that. You guys are basically picking the worst things to get rid of Airbnb. Yeah, we can all cherry pick. What did we just say? Hotels have a labor problem, and it's 16-year-old kids that don't know, proper etiquette and how to provide a 4 to 5 star experience. So, I don't think that hotels are going. I think there's
pressure that's bearish. There's bearish pressure on Airbnb. I'm sorry. There's bearish pressure on Airbnb, and there's bullish pressure on hotels because they're inversely related. I think they're very closely coupled to one another. And Airbnbs, a lot of this is tied to the housing market. So if Loose Ventures comes back, let me know and I'll shut up. when these investors and listen, in the industry that I work in, I have to go into people's homes and talk to them about what they're doing with their home. And I've spoken to many of them who were very flippant in the way that they had we're going to buy this property and we're just going to, we're going to turn it into an Airbnb. And that shook me because I didn't think that was a thing people were doing. And they're apparently everybody's talking about it. A lot of investors think this is the way to make money. Buy a property. You can't go wrong buying a property because the value is going to go up. A lot of notable people are talking about how the value is going to continue to go up. So you can either flip it, sell it. It's an investment. It's a good investment. And you can turn it into a rental property. And if it doesn't work as a long-term rental, you can just turn it into an Airbnb. But that's biting them in the butt because there's pushback against Airbnbs. Mm-hmm. There is a pullback in the housing market, if not a full-blown recession or crash. Interest rates are still very high. So Airbnb is on the ropes, and I mean, there's speculation that they're going to go to zero, but I don't know that that's true. But it's not looking good for Airbnb.
It
So I
definitely.
think that would. What's up?
I said it definitely needs to tighten up.
I definitely would not be putting money into Airbnb, me personally.
Yeah, no, I would not invest in the stock. I would not do that because they take 3% of every listing. So they've got a ton of cash flow. I mean, they got tons of cash coming in, but they're still unprofitable. So basically,
turning your house into an
they're
Airbnb is not a
pocketing all
good
the money.
thing.
What?
I said, yeah, putting your house to make it into like an Airbnb is not like the right idea, because who knows, you might go like weeks or months without having it rented out as an Airbnb, as opposed to having your house as a full rental home, like my girlfriend and I have. That we have our tenants just left on the end of November, or we already have somebody moving in this week.
Right. I mean,
Nice.
you
I
even
have
have
a
like out in Texas. I was going to say you have neighborhoods who are even banning. They're even going down to where you can't even rent out your home to Section 8 tenants. So they're kind of starting as far as they're trying to get investors banned as far from buying any further properties. And then you have some HOAs who are getting together and even banning Section 8 tenants, let alone
I don't know. I live outside the city. I don't live in the middle of the city. I just got, yesterday I just got a booking for somebody for 2.5 weeks, and it's $800. My room, if I rented that room, I would maybe get $800 a month, maybe for a room. So, unless until you try it, don't knock it. I mean, the money's there. It hasn't survived this long because they're gonna run into issues with homeowners associations. Subleasing has existed since the beginning of time. It's basically a subleasing play, and I mean, I don't see how anything's gonna stop it from proliferating, and people making money doing it the right way. There's always going to be bad actors. There's always going to be dirtbags that throw their fucking apartment on Airbnb because they can't afford to take a vacation, but they want to take one anyway. Granted, I'm talking about people who purchase a luxury condo, or rent out a nice apartment, a luxury apartment with a view downtown, and throw it on Airbnb for $150 a night. And you get a better view than staying in freaking Holiday Inn for $150 a night. So it's just, I think the economy is so large now in the United States that there's too many opportunities to cherry pick every industry has an opportunity to cherry pick the worst results and go, oh, this is where the market's going. There's really no way to know which way the trend is going.
Well, there certainly are ways to measure which way the trend is going. I understand your point. You can't predict the future, and that's true. But the trend right now is a pullback in the housing market. And there are absolutely people more experienced than myself who primary business is looking and dealing with the housing market, who are very clear. They expect there to be a severe recession in housing. Builders who are finishing their homes. Some builders are abandoning projects. Builders who are finishing their homes are producing incentives, unheard of incentives to get people to move in. So there's a pullback. There is a trend, and it is a pullback in housing. And speculatively, if that is severe enough, cities, real estate is regional, of course, but cities where investors have purchased properties solely to use Airbnb as a profit generating tool, as a sublease option, are going to suffer, right? I mean, theoretically, they have to suffer because one, I think we're headed to a recession. I think if we're not already, I think we're already in one, and I think it's going to become more severe. Who knows what the Fed's going to do today at 2:30, and Jerome Powell's going to say something, and maybe he sets off another bull run. But if everything pans out, there is a recession, Q1, Q2, 2023. There's a severe recession. Those people who purchase those homes to turn into Airbnbs are going to watch declines in the value of their home, and they're going to watch themselves go upside down. I said it earlier today. There have already been people. There's many more listings, tens of listings that I'm seeing on a regular basis.
Can I make one point though? Because you're
Of
making,
course.
so in a good market, you're going to be making 2 times as much as you would just renting it out month to month. So that means that in a bad market, all you have to do is lower the price to increase the demand. So they're going to be basically breaking even. They're not going to lose all their places.
Are there any real estate agents in here?
I first got my
Not just
broker's
hey, don't
license in
just say real estate
2009,
agents. Let's
and then
clarify. There's a very
I'm
wide
also
range.
licensed in California.
Well, anybody who sells houses.
So
I've sold houses and land and commercial properties as well.
Yeah, I'm a realtor as well. 17 years.
How do you feel about the market?
I'm down over in Myrtle Beach, man, and the prices are still climbing here.
Yep. Florida's popping.
Location,
But aren't
location,
those
location.
aren't those highly desirable places like Myrtle Beach? That's right. Isn't that like being like I'm in the Hamptons? Prices are solid.
Yeah, those I've seen some like decent prices there. Like, I mean, everything's still about the same in my area. Like, my house hasn't changed value much. Hasn't gone up and down recently. Like, it's gone up. It's gone up a lot, but hasn't changed much.
I feel like because ours, we're having so many people moving into apartments, they're just tightening a lot of rules and becoming stringent on who moves in and who moves out, type of thing. But for the most part, Dallas is popping. You know, everyone's kind of moving.
The problem with
I was gonna say, are you selling like to people that can afford it? Like, do you see a trend like that happening? Do you understand what I'm saying? Like, are there people buying houses that they shouldn't be? Like in 2008, like the last time?
Go ahead. No, not nearly
Well,
as much.
my thesis isn't. None of the arguments I'm making are predicated on people buying homes that they shouldn't be. It's really focused on how investors are going to be affected by a severe downturn in the housing market, and to the extent that I understand it.
My question though is, do you think the banks are handing out loans that they shouldn't be?
No, I
No,
think
I don't. I don't think they want that risk.
So they're not
Well,
going
no,
back to those old habits?
I think banks have to do something with their money.
Yeah, I'm just asking though, because because I feel like I know a lot of people that are buying houses. I'm like, I make more money than them. I don't know how the fuck they're gonna afford that.
Yep.
Well, they're
I
already
feel like
lowering
that too. I didn't say anything, but I'm looking. I know quite a few people who have
It's a
bought
lot. Everybody who's
investment
buying a
properties.
house is buying a house that's more expensive than mine and make less money than me. And I'm like, I don't understand. Like,
Well, I think the biggest thing is that
They're
when
house
they're buying
poor.
those houses, when they look at their income, they're still allocating way too much of that income towards the mortgage. Where like, even when I bought my house, it's I was looking at what I got approved for, and I'm like, no, I'll stay probably 20 grand below that, or even even more, just to be safe. Because you look at the numbers and you look at your budget, and you're like, yeah, it's not going to cost that much.
there's people
It's
I
going to
work with
cost a lot
that
more.
make the same amount as me, even less. Like people I work with, and they this is just me ranting, going on a rant. But they all drive nicer cars than me. But like I have money, but like I don't know how
Maybe
they
they're
do it.
just better with the money they do have.
But I have the money to do it. I just don't want to. So like it
Maybe
drives
they
me
don't
crazy.
report their income to the IRS as well as you do.
I don't know.
And they could be living paycheck to paycheck. There's a lot of people making like $125,000 a year, and they're like strapped every week just to pay everything.
Yeah.
Right.
And they may
Some
not be
people who are
saving
making
for
50K
retirement.
are just smart and frugal and able to get by.
No, but what I'm saying though is I am those things. Like I am smart. I invest. Like I have a house. I bought a house at 28. Like I invest like weekly. Like and I just feel like all these people that don't do any of that, and they're all buying nicer houses than me. They're all driving nicer cars than me. But like I have the money to do, but I don't want to. I just feel like it's all like, is that all bullshit? Like is
No, you're the
But
smart.
you're
living below. You're living
that
below.
just means
your
you're not
means.
trying to
They're
keep up with the
living
Joneses, bro.
Don't-
That's all it means.
You're not over.
They are.
Unless you're paying more rent, and they're gaining equity, but it may be likely that they're not.
have a lower mortgage than most of their rents.
I like to say, let me liquidate some assets, and I'll show you our pockets are different.
That is true. I just always feel
That's
like
what I
that.
tell
Like
to my
I'm
20-year-old
broke.
friend, bro. Because I
Well,
roll around,
but you gotta think
with
about it.
maybe 20-30 bucks, and they call me broke and whatnot. Not saying that I'm rich or anything, far from it, but you know, like I tell them, let me liquidate some assets, and I'll show you that our pockets are different.
You got to think about it from another angle too. So, like, I have a buddy that went to high school with. So I'm 30 right now, and he never, basically didn't do anything in his whole life of his 20s. He saved money, worked, went home, invested, saved money, bought a house early, and so look, right now it's like, okay, he's doing. I'm sure he's worth more than I am. But at the same time, is all the memories and fun that I had back as a kid, I would never want to go back and be like, hey, I'm just going to sit at home and play video games or do this for 10 years of your 20s. Now he's in his 30s now and struggling with his wife and wants to go out more but can't because he's been set in his way. So it's one of those things you want to, it's great to save money, but at the same time you got to, especially when you're young, live a little bit.
Yeah, but I know what you mean there too. Like, I guess, yeah.
And
Good
also
point.
for me too. So I'm like for me and my wife, like I told her within a month of dating her that I didn't want kids, never gonna have kids. So I'm not saving for kids. I'm not saving for I'm not saving for really anybody but ourselves in the future. So I'm not too worried about having to have that extra bit of money put away. I'd rather it's not like I don't drive a fancy vehicle or anything like that. I like I don't like spending money like crazy, but when I do spend money, I like to have some fun, right?
I like the casino. I just don't. I don't know. I guess I just don't want that responsibility that they all take on themselves. Like I don't want that burden. I don't want that.
I mean, you have to be disciplined too. You know what I mean? I mean, yeah. With 30 minutes, 35 minutes till the Fed, can we just keep it all Fed talk from now on?
Yeah, what do you guys think? 50 or 75?
I had a dream.
I'm hoping 75. Sorry.
You're good.
I say 25.
I had a dream.
25?
It's not gonna happen. I had a dream.
I'm joking.
I want to. Who has options who are expiring today? So we're just playing the volatility. Who has them? Call them out.
Me.
402 puts.
I have 420.
Damn, you guys are crazy.
Yeah, crazy.
Dude, I'm not.
Well,
I'm not.
I
touching
have lower. I have
like-
lower puts, but that's just because I rolled them over from yesterday. So I'm needing this shit to go down.
So I did what I've been doing for the last couple announcements, where I buy equal puts and equal calls at right around the same value. So if they're basically $1 per contract, I'll buy them on both sides.
Yeah.
And every time Vega has outperformed Theta in the options. So right now I'm up overall. If I sold out everything, I'd be up about 10%. Nothing crazy, of course, but. And what I'm waiting for is I'm thinking right when this announcement comes, it's gonna pump like it usually does, or if it comes in at 0.5, it's gonna pump. I think. I'm gonna sell half my calls and wait for the speech. When that speech happens, if it starts to crash, I'm just gonna sell that the remainder of my calls and hope my puts getting the money after that. So that's my play.
I liked Hardy's strategy about playing both ends. If someone could explain it real simple for everyone.
I mean, he just did.
Yeah, that was basically it.
Mine's just I'm more in the money on mine, and I bought them early. I bought them this morning first thing, and just and mine also expire on Friday, so I do have a little bit of time. So I think whatever happens after today, it's going to keep running in the same direction for the next couple of days. So same thing. If it does start, if we tank after the speech, I'm going to sell half my puts out once they double and hold the rest until probably Friday or maybe Thursday. See how the day goes, or see how Friday opens.
I think Hardy said his was 0 days.
Yeah. Yeah, he was playing 0 day. Yeah, he said $5 per contract, or like 5 cents per contract calls and puts. And buying them right after I think it was right after the announcement, or is it right after the speech?
I'm just gonna play the news. I won't touch it right now. I'm up a lot of money and I don't want to lose it.
Just for clarification, Hardy said to buy those 5-cent contracts at 2:15 before the speech, not after.
He should be jumping back on here in a little bit. He said around 1:30 he'd come back.
I got a feeling with the mystery rally activity happening yesterday that we're
That was
looking at
I was gonna say
0.5.
that was yesterday, right? Because I
Yeah,
saw that
I think
clip.
I think a guy named Paul had to make a few quick adjustments to his strategy. He had a lot of puts and now he's switching to calls.
See, I didn't do the switch. I just stayed with my puts. Let's see how it plays out. Everybody's expecting dovish. I think J Powell's going to come out hawkish and just flex.
There's more people expecting the 0.5, movement. Don't you think it's kind of risky to have, like, I don't know if you're all in on puts, but don't you think it's kind of risky to be just only puts? Maybe have like some calls left over for you or some shares to hedge.
Yeah. Well, I'm not playing any options at all.
I'm not all in. I'm just, a little bit. See if I can make a little bit of money off an option to just keep on building my position on some stocks that I really want.
Also, keep in mind, CPI came in cold yesterday, but the market didn't really do much ultimately off of it. There's a decent chance that the market decided they want to hear the Fed talk before they start actually responding fully to the cold print yesterday. So there's a chance that if J-Pow just doesn't say anything too crazy, you're just going to see it move just on the fact that CPI was cold and J-Pow didn't go nuts when he talked.
And it doesn't move, and everybody who has options lose their money.
No, and it moves up. They take that positive response that didn't happen yesterday from CPI, and you actually see the market move up a good amount as they go, okay, the Fed's not doing anything nuts. We just needed to hear those words.
Yeah.
Okay.
Because the only reason why I was going to say that movement, everybody's questioning that happened in pre-market yesterday. I saw that.
Yeah, just algorithms and bots buying up the market to reel in the suckers.
I don't know. There's a 1% chance that Jay Powell's in a Christmas spirit is going to do a 0.25% hike.
Oh, I do not see him going up 0.25. That's just, that's
Since I said it, I'm gonna stick with it. That point.
Premonition. If it does come true, you
I-
guys gotta listen.
no, that's like taking him.
I said a 1% chance. I said a 1% chance.
I'm gonna be.
So
You gotta listen to me more though. If it's a 0.25, I don't know what I'm doing, but
Never second guess a woman's intuition. Be careful, guys. She might be right. I think 50 basis points.
I want to
for the
hear I
record.
told you so afterwards, okay?
Exactly what y'all are gonna get.
Feel like the market just wants to go up, so it'll find the reason to extrapolate whatever.
Yeah, it wants to go up. That's why J Powell's coming in so hawkish. Let's see.
And
Isn't
before
that
75, and we all get fucked.
Isn't
Do
that
keep
the
in mind-
macro? Excuse me.
I was just going to say, do keep in mind, J-Pow doesn't actually particularly care about the market. His indicators are like unemployment, but he said multiple times, he really doesn't care where the market's sitting. That's not what he's basing all this on.
Yes, but regardless of what he says,
he said he's willing to make it go to a recession to stop
and
it.
regardless of what he says, the market does want to go up. The macro structure of the market is upwards. The entire thing is designed without the dividends to be it is a pyramid scheme. I mean, it's much more complicated, but it is definitely you buy the stocks because you expect them to increase in value, or you short them because you expect them to decrease in value, but you're gambling on what is essentially a pyramid scheme. The money has to go somewhere. So the market always wants to go up, and it's scared into going down. And the reason you have massive sell-offs and crashes, things that are worse than a recession, is because what it takes to lose faith in the market is so tremendous that when it does happen, it just panics everyone. Theoretically.
I mean, Jay Powell's speech has definitely changed, though. If you look at like Jackson Hole, he was talking about a lot of pain, and that's what really started getting us, leading sell-offs. He was talking about a lot of pain due to upcoming recessions. And then lately, the last speech at the Brookings Institute, he was a lot more, dovish in a way that he doesn't want to cause a recession, and he thinks it could be averted, which is the market. If it extrapolates that again, that we're not going into recession, we could go up on that.
So you saying my 0.25 has a chance? Thank you.
I doubt it, but it's just him saying that he doesn't want to keep going at the 75 because that can cause a problem due to lags and whatnot.
The point I'm making is just that all other things being equal, the market wants to go up. So if we're looking at what the market wants to do, everyone in the market right now wants it to go up. Everyone wishes, it would just continue going upwards. Everyone enjoys the bull market much more than enjoy the bear market. I mean, welcome challenges to that thesis, but it seems to be the case that if there's a reason, if there's something you can look at, unless the entire market is fraudulent, which is wholly possible, people are just looking for excuses to invest in things that they think are going to improve in value. And traditionally, that's why you invest in the stock market at any capacity, because you want to take capital and you want to improve it. You don't take it and put it somewhere because you want it to lose value. So the whole reason the stock market exists is not so people can short it. It's so people can put capital to work, per se. And then, you just hope that companies that come and make an initial public offering are legitimate, due diligence. And ultimately, though, I think that there is a good reason to believe that the whole thing is fraudulent because, I mean, look at its history and the amount of fraud that we know takes place and all of the governing bodies and agencies that engage with selective enforcement, and even the fact that we can sit here and have these conversations. If we have these conversations regularly enough with enough participation, this will become illegal, right? If we sat here and talked about, hey, we're going to all short this stock, or we're all going to support this stock, and here's how we're going to engage in every way possible to ensure the success or failure of a company, wouldn't we, as we got more and more information, more and more ability to coordinate, being engaged in something that could be qualified as illegal and have it broken up? Yeah. So that would argue that it is fraudulent. I mean, you can't have your cake and eat it too. And one of the things about the stock market, or not the stock market, but the crypto community that is so frustrating for any proponents of the actual technology that underlies it is the idea that anyone who gave their money to any of these exchanges at any point deserves any kind of protection, or that anyone who took their money and made false promises about what they would or wouldn't do deserves prosecution. You don't let nature take its course. You don't let the fit survive. You let people make stupid decisions with their money, and then you save them from it, protect them from it. And essentially, it boils down to there's some kind of parent. In this case, the government, who gets to come in and tell you, no, those rocks that you sold Johnny don't have the value you told him they have. Now you give him his allowance back. And it's all for naught. I mean, whose fault is it that you got let in? I mean, fraud is a part of everything that we do.
Yeah,
Carvana.
I definitely don't think we should be bailing those people out.
The market, is that what you're saying?
No, I wonder at what point you short the market, right? Because I'm saying the entire market is fraudulent, right? Theoretically, the entire market is fraudulent. Like how specific?
Well, no, it's not. It is not. The entire market is not fraudulent.
Wait a minute, I thought we were
about
the feds.
You have a lot of companies out there that are not fraudulent companies, and you have people that have the market is unfair. I would say, because there's some people that have a lot more data to make decisions than other people do. But there's no way you could say the whole market is fraudulent, because there's a lot of good companies out there, and there's a lot of companies that care.
Did SPY just pump in the last 3 minutes while you're talking?
Yeah, I'm watching it. Massive green candle.
Yeah, I agree. overstatement to say that the entire market is fraudulent without qualification. And I don't mean to say that there are not legitimate companies who intend to do everything legally, honestly, and by the book, but there's always going to be an asymmetry of information, and selective enforcement is the fraud. So as long as there is selective enforcement of whatever rules, whatever governing organizations exist, then it is fraudulent, because if we sat here and decided we were going to short or we were going to pump a company that was wholly legitimate, wholly honest, it has nothing to do with the company. It's our ability to gather together to try and get information and try and create narratives based on that information to improve or detract from that company's success, completely unrelated to its value. And all the conversations we have here and all the conversations I have on Discords and forums where people are talking about what's the stock market going to do, the trend is overwhelmingly, how can we try to get more of this insider information? And it's all fraudulent in the sense that, well, how far upstream are you? And the people that are up at the top, the highest point in the stream, the market, the closest you are to the money production, the more you benefit from it. And it's just a fight to get upstream that is not at all based on what is the fundamental underlying value that this company provides, and what is the fundamental underlying value that we as human beings want companies to provide. The whole stock market, it seems to bring out the very worst in human beings.
I understand exactly what you're
Because
saying.
it's not
Like,
creating
I like
anything.
to
It
invest
doesn't
in
create
things
anything.
I like to invest in like stocks that I know about and I care about. That's like why I'm all pumped about Grindr, because I know what Grindr is and I know Grindr is a big deal.
No, so if it's 50 basis points, I think it's going to be bullish, and I'll be looking to short after the rally because rates are still high, and I'll be looking to short either growth or companies that have poor technical slash fundamentals. So I'm still kind of bearish overall.
Oh, definitely. I think so. I mean, I think the worst is yet to come.
Either way, it'll get better.
It will.
You guys
It will
talking
get
plays?
better. 396 puts.
I just went ahead and sold a bearish call spread, 412 to 417.
Did you make money on it?
We'll find out. It's a 0 days to, so basically anything under 412, I make money on. So even if we get a nice jump, about a 2.5% move, 2% move, it's still it'll still expire worthless by the end of the day. But just in case, I bought the top side at 417. I think that's a really nice trade. So basically 412 would be a 2% move roughly. So even if it moves 2% up from here, you'd have essentially a 2.5% day. You could still potentially end in the money today, or end out of the money.
Yeah.
Random question. Does anyone know where J Powell went to school at?
Would you like to Google that and enlighten us?
Just remember, where you go to school and where you get your degree from are two different things.
Went to Princeton and Georgetown Law.
Princeton, Georgetown. Yeah. I was trying to find anything like a bio about him, like on YouTube or something. I couldn't find anything. Trying to get, just a background on Mr. Powell.
I'm just trying to get home before 2 o'clock so I can be in front of my computer.
I just know he spent his summers down at Little St. James with the Clintons.
Got 15 minutes.
Yeah, I'm pedal to the metal. Oh, a little bit of DD. So shortly after Thanksgiving, I was at Home Depot and they were laying out all these things in the middle of the aisles, like the gift stuff, like boxes and boxes of it. They just had like the aisles crowded with all this stuff for Christmas. I just went there now and left, and a lot of those boxes are still there, mostly full. So I think Home Depot, their fourth quarter sales are not going to be too great.
Yeah, I think a lot of retail kind of underperformed this Christmas. I'm not sure where the shopping went or what happened, or if everybody bought everything they wanted to in 2021 or what's going on. But
Well, it went online.
yes.
It went online, I think, a lot of it.
Was Cyber Monday that big though? Wasn't Cyber Monday numbers low this year, or were they big?
No, they were up
I think they
8%, but really netting out of inflation. I thought it was up 8%. Maybe I'm thinking Shopify.
Oh.
So some numbers were better
Yeah.
than others, but essentially netting out inflation, it was virtually flat.
Nothing. Yeah. Yep.
Yeah, so this is basically a fat double top in the SPY. So, even if there's a run after this, if it's 50 basis points or 25 or whatever, and it pumps, I'm still looking to short on that. If it's 75, then obviously that's even more bearish.
Oh yeah. I mean, don't get me wrong. I've got June 16, 275 puts on SPY.
Until you start getting earnings where revenue starts to come under expectation, because right now they've been coming in still pretty much in line. So Q4 and Q1 of 2023, I think, are really when you're going to start seeing potential repricing of stocks due to their earnings as opposed to just what's been going on in the interest rate market.
Say who's supposed to come back and stream the meeting in the chat? I think it was mentioned earlier.
I think it was Opinion.
Scald or Opinion.
Okay.
One of the two. Scald was setting up his home broadcasting studio or trying to give CBS a run for its money or something like that. I don't remember all of it.
We are getting a
so
bump
I've got
into the meeting, though. You've hit high a day, I believe.
And since Luce isn't here, the C word that he was talking about that he doesn't ever want to hear again is crypto.
Okay. I was wondering
For
about
those that are wondering,
I was.
do not ever mention crypto when Scald is around. He will
He's
just
in here. He's
explode.
being a listener. No, I'm just kidding.
Where are you guys watching this Fed meeting at? Like Yahoo Finance or just YouTube or whatever?
Bloomberg.
Bloomberg, got it.
What's the site where the numbers are going to be released at?
Bloomberg Financial.
Aren't numbers released first?
Yes, they are.
Okay.
Numbers at 2, speech at 2:30. Speech probably going to be significantly more impactful than numbers.
Yeah, more than likely numbers will come in where they're projected, and then it goes from there.
Yeah, you get those pre-prepared statements that come out with the numbers.
Are we still talking about Jackson Hole or the FOMC?
Yes.
I figured we'd be getting started.
Hey, Hardy!
Welcome back, Hardy.
Yep. So I'm looking at the 399 puts, or maybe 398 puts for $1.20, for $1.45 and $1.20 respectively. Let's see.
Hold on. What? I see the 399 put as $3.03. What are you looking at?
December 14.
Oh, I'm on the 16th.
0 GTE.
Yeah, I'm on the 16th. I clicked.
Last time they're gonna be a little cheaper. So excited.
All right, let's put in.
I made it home. I might be in front of my computer for this.
Impressive.
What are you
Let's
looking at the
go.
top side? Like 415-ish? What's that one?
Well, I'm not doing the strangle until like 10 minutes before the news conference.
Ah.
That was the missing piece that we were discussing your play earlier, and we were talking about.
It's two distinct events. The first event is the actual rate announcement, which I'm anticipating is 50 basis points or higher, which is bearish, and then the JPOW announcement, which would come half an hour later. Hopefully that clears it up for everybody. I just got a bunch of contracts at SPY December 14, 398 puts for $1.18.
What about those 5-cent ones? You're going to do that after the 5-cent?
Yeah, it has to be. Yeah, the 5-cent one is just before JPOW talks.
10 minutes before he talks. Noted.
I've got my buy order in at 416 or 116, just one better than you. We'll see if it takes. I also, Hardy, there was a good. I was on here a little bit earlier. I went ahead and did a bearish call spread 412, sold the 412s, bought the 417s. Gives you about a 0 days as well to December 14th. Gives you about a 2% buffer, and you'll still be out of the money. Looked really nice. That's a 12% return on capital, roughly.
Hopefully my thesis is correct and SPY goes downsies.
So for those 5-cent one, you're looking around 386 and 422 on the call.
Something like that. It's a wide spread. You got to go way out.
Yeah.
And there's
Just because
honestly
the
no
IV
point.
so far.
There's no point in checking the numbers now. That's going to be so significantly different when you get that later.
Yeah, you got to think that theta gang is going to click in here after like 2 o'clock, right? That they kind of like the bell curve.
Plus, there should be SPY movement once the numbers come out to some degree.
Unless the number is priced in, so that's your risk. We're wrong or it's as expected. I do want to point out delta neutral as of yesterday's trading is 399. So there's a chance my 398s will actually do pretty good. And I also have my sell order in place to sell half of those on a double in case the price moves too quickly for me to react. So anyone else who followed me in on a trade, make sure you have the same.
Hardy, will you put that same order in for the spread later on, or will you let those run a
Not
little
a spread,
more?
it's a strangle.
Strangle. Wow, my brain, dear Lord. Will you put the same order in for that?
Yes, but it'll probably be set up so that when one side is 300% profit, sell half of that side to pay for the remaining. Does that make sense?
It does. Thanks.
You guys think the DXY will go below 100? Or maybe I should be asking, do you guys even think that's a metric worth looking at, seeing as how it's only comparing itself against other fiat currencies, and it's only the US dollars that the Fed knows how to track?
Build at 116. I'm in with you, Hardy.
Anticipation.
I call it delayed gratification.
Get your popcorn.
And if the case wasn't obvious for those involved, make sure you risk only the amount you're willing to lose.
Well, the good thing here, listen, if you're short and you have a portfolio of longs, your longs, I mean, your total portfolio will by far outweigh your gains on this. So, I mean, you're just basically hedging to the downside of your total portfolio.
Looks like we're about to take off.
I feel like this can tend to happen though. You have the shorts that just kind of sit on the sidelines and they let these buyers bid it up, and then as soon as something negative comes in, the short just comes. They come in and all that buying dries up so fast.
First move is fake anyway.
One minute and counting.
See that massive sell order just now? You guys see that?
Are you watching L2 for that?
Massive. Wow.
There's sell off.
Yeah, look at the chart.
Here we go.
Congratulations.
Here we go. Fuck yeah. Ugh.
I was like massive sell off. I just saw it. I spoke. Holy shit.
Yeah, like what?
Boom goes the dynamite.
Or
Wow.
you might get
Come on, keep on going down. Come on,
you might
baby.
get a bounce here, and you might be able to
No,
sell
fuck
and
that. Keep
rebuy.
on
You
going
might be
down
able to
all
sell and
afternoon.
rebuy
Yeah.
back in.
Does anybody got the numbers on hand?
4.5, 50 basis points.
Okay.
You essentially
Drop, you
lost
motherfucker.
what
Drop.
you gained on the day. Right now, you're sitting at just above break even for the day. But they get the day evaporated
dropping.
in about 60 seconds.
Come on, baby. Keep on dropping.
Oh yeah.
Fuck yeah. Come on, baby.
Yeah, those spy
Is this
puts.
what you guys are like when you're masturbating? Come on.
Yeah, right?
Oh, I already.
I feel like I'm at the horse track right now.
Yeah, dude. They should have said, and they're off.
The best thing about the horse track is the names, though. Coming around the corner, coming around the corner.
Put your back into it.
Rebound coming in.
Falling behind. S&P 500.
So far, SPY is respecting delta neutral, so I think I'm going to close my position. Just as a heads up.
Which one? The put that you just bought?
Oh yeah, I'm closing out the put. Trying to see what price I can get for it. Might be able to do 180. Oh, it blew past 180. Problem solved.
Yeah, I'm at 195 right now, dude. Yeah.
Yep.
I think
So
I'll
I'm going to keep my two. Never mind. I'm keeping my 241s.
Yeah, I think
I'm
I'll
keeping my
probably sell
241
half.
target. Oh shit, we might be in the money.
Got to sell half at 220, and it just took.
Damn. Oh, let it go down all through the press conference. Everything. Fuck
39.
yeah. I'm glad. Fuck yeah.
And it goes back up.
Now it'll go down for 30 minutes. Hardy, you think it'll go after Powell's speech? What are you thinking now? How is it going to play out?
I think the market's digested the initial number. So we'll see how Powell defends his actions.
So, has he given the number privately, and that's why the
The
market
number was
moved?
published as a press release on the Bureau of and on the
Oh, I
Federal
see.
Reserve Board's
Okay.
website. Now, in 27 minutes, Jay Powell's going to go explain why why they arrived at that number.
Isn't 0.5 billion.
Because inflation isn't
still?
2%,
I think it should
and
rebound.
employment isn't up. So, and unemployment isn't up. So something's up.
Number or not?
Yeah, definitely caught the top at 220 though. Goodness gracious.
Impressive.
Spreads opened up. I don't know if you saw that, Hardy, but the spreads were like 105 to 120.
Yep.
That's an awfully wide spread there for a minute.
It happens.
SPX is
I'm out at 195.
That's a good
I'm
trade
flat on this trade.
Are you gonna try to go back in if it gets back down into like the 140s, 150s, maybe?
Nope. I'm gonna wait for IV to die down, and then enter my 5-cent contracts. So right now, this may change. That's a 387 put and a 418 call.
I mean, realistically though, why would you buy the 418 call? There's no way it's gonna scream 7%, right?
Doesn't need to. I just need the premium to go more than 5 cents.
Shout out to whoever said SPY was gonna yo-yo today. You called that on point.
I'm just trying to make up my mind from my option from yesterday that I rolled over.
So, Hardy, you're just hoping to outpace the theta for a short period of time?
I'm hoping the announcement and the underlying price movement multiplied by the delta is greater than what small theta and vega decay there is on a contract that's 5 cents.
Interesting.
I don't expect it to go into the money, but I do expect as the price swings wildly that it'll be great. It'll sell either side. The call side or the put side will sell for 10 cents or maybe 15 cents.
Hardy, I asked this question earlier when you weren't in chat, so I'm gonna direct it to you now. I was looking at SPXS 12, 23, $26 calls. And when I was looking at it, it was like 2 cents per contract, like 2 to 3, and then the ask was 4. Now it's looking like 1 cent bid, 8 cent ask. Playing basically the downward momentum off of the FOMC data.
I bought some
I don't
418
know.
calls.
I
7
don't know
cents.
if the press release will be negative. It's entirely possible that Jay Powell will say, "Hey, inflation is decelerating, and so are the rate hikes."
I want to play the momentum on a potential run up regardless. So like it would be basically taking a position now, and then if it spikes, like let's say SPY runs up to like 415 or whatever, then take another shot at it and just say, okay, I'm gonna fire 2 bullets and then stop.
You're probably better off trading the fade. So like set a put that you would enter if SPY hits 405, let's say, and set a call that
Okay.
you'd enter if SPY hits 395. Hypothetical numbers, but the idea is that when SPY moves far in either direction, you do basically the opposite with the expectation that there'll be a rebound.
Is that so? SPXS is 3 times inverse, which is why I went for the possible downside. Is there one for possible upside that's 3 times leverage?
I think it's
Anybody know?
and XL, SOXL.
There definitely is. I just don't know it off the top of my head.
Okay, I'll go look for it. Thank you.
It's XP. Excuse me. Can't fucking speak today. It is SPXL. Yep.
Don't worry, I could not say SPXS until just right now.
SPY is just dropping.
Let's go straight into the trash can.
You're
Fuck
fighting
yeah.
for 400.
Now I'm nervous, Hardy, about like the speech. I mean, we still got about 20 minutes till the speech.
That's
So
why we
like,
have to wait another roughly 15 minutes before entering the strangle. Because you still have all this stuff going on. Make sense?
yes, I understand the strangle, but like what right now I'm looking at is my rollover from yesterday, the 396. I rolled it over during the peak yesterday. So I'm just trying to
Oh, I should
make
have kept my original play.
yeah, I mean, I just had so much money in it already. I said I'm just gonna roll it over instead of losing out on 300 and some. So that's where I'm at, and now I just don't want to, go through a mood swing here. So
Are you green on that trade now?
Oh fuck yeah, it's shooting up. But that's why I don't. It is shooting up.
Yeah, man, that 398 put is up to 250 now, Hardy. 240.
I mean, I just don't want to sell too soon, and then Powell's speech takes another big chunk out of it. You know what I mean?
Yeah, don't be angry for
There's
taking
never
gains.
too soon.
Don't be angry for taking gains.
Okay. Well, I mean, it's not a gain yet. It's not a gain yet. I'm still making up for my initial option that I purchased because I thought CPI was gonna tank the market, and it did the opposite. So I lost all that shit right away. So I just rolled it over, decided to put a little bit more money in. So I'm still trying to make up. So yeah.
I'm not listening to the speech, but I see SPY took a tumble. What's going on with this?
The Fed also lowered their GDP outlook to 0.5% from 1 point something.
I think it's hard to say like why is SPY going down right now before the talk, but we've already kind of covered every single possible scenario this entire week of what could happen. So I think you're just
Are
kind
you
of
reading
seeing
the
the
actual press
rationality of
release?
everyone trying to figure out what side to be on right now.
Are you reading the actual press release?
Targeting 2% inflation by 2025. Long road.
Expected change in GDP 0.5%. September projection was 0.2. Unemployment only projected at 3.7. Short answer is that we've got a long way to go.
Thank you for being here for me emotionally, Hardy, and everyone.
Yeah,
Long way
that's
to
on me
go
for not
sounds bearish
sticking to my
as
original
fuck.
plan. I should have stuck to my original plan. That's on me for not following it.
What was your
Sell half
original
on a-
plan?
Sell half on a double.
Oh, yeah. I would agree. Yeah. I think I sold half at 75, roughly 75%, and it's sitting at 107 right now.
I took profits on some of my contracts, but I should have took profits on all of them. I was up 100%.
Sorry to interrupt. Did they the CPI or not the CPI? Did the
50 basis points.
Yep, 50?
5-0.
Yeah, waiting on the speech now.
10-4. Thank you.
Speech comes out at 2:30, so in like
Fuck.
18 minutes, and a bunch of us are going to enter strangles in about 8 minutes.
Now that it's coming back. I'm getting nervous.
I will stream the speech on the YouTube and Twitch on top of the Reddit talk, so you can all listen there.
Oh no, I was looking for the strike price of the strangles.
For the strangle, the strikes currently, and this may change, 386 and 418.
It's also the top comment in the chat for people, so they don't have to keep asking Hardy.
Yeah, but I didn't say what the strikes were. I just said the 5-cent contracts.
Fair enough.
Boom.
But bottom line, congrats to all the apes who made money on the SPY puts. Let's see if we
Thank
can go 2 for 2. So in
I
my
might-
case, because I went up like 50% on the money I committed, I'm gonna commit basically 60% of those winnings of that profit plus the original capital into the strangle. And we'll see if I can grow the money a little bit further.
This is better than football.
Way better.
It's called gambling.
It is. But
Oh my God! Hey
Well, one
mom,
thing-
can I have your credit card?
Hold up, everybody.
One
thing I'm keeping an eye on is that as we approach the press release or the press conference, I want SPY to be ideally as far away from 405 as possible. Because if it goes back to 405, which is where it was prior to the rate hike announcement, then I'm not as convinced that a strangle will lead to a move in the price will move in one direction very far. Does that make sense? Like it's likely to yo-yo back and forth and whipsaw.
Yeah, it's
during
like
which
to go
time
back
the
and forth. Yeah,
strangle-
vacillate.
During which time the strangle will not make money. So just keep an eye out for that.
Might have missed it earlier, but did anybody play meta calls on the news of the possible TikTok ban?
No. By the time it hit the news, it was too late. Like if you want to make money on that kind of play, you have to be in the position before the news drops. And then you sell to all the people buying in after the news.
No, I get that aspect. I just added it to my watch list this morning after mine opened, and it said it went up. The watch list not accurate.
For those of you who have Facebook portals, don't forget that the portal team, the one behind Hey Portal, is being spun down. So I imagine, one moment, I'm getting a call.
Hopefully it's not a margin call.
Sorry about that. For those who wanted to know, my car warranty is fine.
Good to know.
So you don't want that extended warranty I called you about?
I don't have a fucking car, bro. I live in New York. I don't need a car. I'm driven. I don't
I
drive.
think that's the first time I've heard Hardy cuss.
No, you almost missed the best line I've ever heard. I'm driven. I don't drive.
I'm definitely putting that on a shirt.
That's pretty old money.
As far as I'm concerned, that's pretty money.
Does
Right,
anybody
so when I
play blackjack?
Sorry?
Anybody play blackjack?
Only if the shoe is big enough. I don't do any of that CSM bullshit.
Yeah, I kind
All right. So I need SPY ideally as close to 399.45 as possible in order for the strangle to have the highest chance of success. If it isn't, I'd probably reduce the amount of capital that I commit to the trade.
425 right now. 18
Yeah, I
going
see
down.
it. But keep in mind, 399.45 is yesterday's delta neutral, the price where all option open interest on SPY has a combined portfolio delta of 0.
I'm going to read up on the Greeks this weekend, and I'll have a lot of questions come Monday.
Go to my website, scroll down, read the comments there, and then go to the Q&A and AMAs that I've hosted. Should be enough.
Nice. I didn't know you had a website, Hardy. What's your website?
Options.hardyerection.com.
Hardy, is your option talk on the official WallStreetBets YouTube, or does that
I don't
predate
think
that?
it was on YouTube, but it's definitely in the WallStreetBets past posts. So if just look for, or just Google Hard Erection AMA or Hard Erection Q&A, and make sure
For
you're on the
those-
WallStreetBets subreddit. You'll find it. There are 3 that I've hosted, and I might host a 4th, maybe the week of the 26th.
Options with Hardy is a good source of information.
Anyway, the fact that the price is staying at like this 400 level is very reassuring for me.
For all you guys that like options, you should learn how to count cards and play blackjack. Runs.
Yeah, the problem with counting cards is it doesn't really work for the CSMs that are currently used on Vegas. They're in Vegas.
Yeah, you never go to Vegas to count cards, even if
You
they.
need a shoe, like a good 6-deck plus shoe.
Leave it to the hard New Yorker to come in and say that, though. Holy moly.
There's actually a guy that you guys should have on. I'll reach out to him. He is full-time blackjack player. Strictly plays like 6-deck, 8-deck, uses Wong halves, and he's just like this autistic blackjack player that looks at fucking value stocks and plays blackjack all day and trolls people on Discord. But he's super knowledgeable, and like I would give him shit because he's so risk averse that he plays with like a 0.5% risk of ruin and won't invest in his stock picks. But over the last year, he told me Geo when it was at $6. He told me PayPal. He told me Paramount. And I feel like just having him talk about how he goes through like value picking would be super informative. But it's literally tilting because I've been trying to get him to actually trade his picks, but he's just adding $4,000 at a time until he gets to like 50K. Then he's gonna like make 1 or 2 big trades.
It's probably because he wants to keep his ROI low. Like even with trading, like when I play blackjack, I make about $50 an hour. That's my expected EV. Usually I do better than my EV, but my ROI is 1%. You know, all you need to do to have an ROI of 1% is to have a 1 to 12. Well, have 20 units of whatever your bet spread is. You know what I'm saying? So if you're playing $10 hands, what's that? 20,000.
You have definitely broken someone's kneecaps over money before. I am positive on this right now.
I'm Italian. I'm from Boston. You know, I'm from the streets. But I
like horse. I like
Kneecaps.
checking
He's
out the
killed
horse
someone
races.
before.
anybody's kneecaps though. Never broke anybody's kneecaps. I promise.
Has anyone here actually tried breaking kneecaps? They're quite sturdy.
Yeah, I'm sure they are.
Damn.
That's a little scary, Hardy.
What I would say is I started investing, then I started counting cards, and then after I started counting cards, I started trading options. And like it runs hand in hand, and one will help you so much in the other. Like if you understand like the mechanics and the basics.
I don't understand how that's possible. As in counting cards, literally just not simple math,
Well,
but just a
because
running math total.
It's more about risk management.
Yeah, it's
9 minutes to the
all
speed.
risk management. Like your risk management will, I mean, it could already be on point. I don't know you like personally, you know what I'm saying? But like, just your risk management will become so on point after counting cards. It's crazy.
Well, it's because your risk management is a function of your conditions. So, for example, when Hardy's talking about, I wouldn't play a CSM, I'd only play a shoe game. You could find like an 8-deck shoe game where they only cut off a deck and a half, and the amount you're going to be able to bet into that versus a 6-deck where they cut off 2 and the dealer's slow is going to change how many rounds per hour you get, how much you can afford to bet, and how much you can afford to spread on that game.
Correct. It's all about finding a good game, you know? Like sometimes I'll go to a casino, I'll hit up different sections, different tables, and it depends on the rules that they have at that time and how like you said, how quick the dealer is and where they're cutting off the shoe. But a lot of the times though, you can find a decent game, especially the past couple of years. There's like decent games pretty much everywhere. Once you get in the
Heads up, everybody. 386 puts and 417 calls. I have 5-cent bids. 5-cent bids on both of them. Gonna try to fill as many as I can ahead of JPOW.
What it was at? You say 386 and 4 what?
So I've got 5-cent bids at 386 puts and 417 calls.
Well, I got a 417 call set at 5 cents. That was part of my my short, my whatever it was called.
I pay you good price. Don't worry.
Yeah, so you can take them right now.
Are you guys
Anyway.
doing 0 days for this strangle?
Yeah, this is 0 day because the intent is quite literally to take advantage of JPOW's announcement. That's it.
Yeah, I thought that's what it was. Somebody in the comment was asking, but I wanted to make sure before I said anything.
No, I'm actually confused. The 417s I see as the mark is 0.045, and I've got to sell it at 5, and you've got to buy in at 5. I'm not sure how they haven't matched us in heaven yet.
Are you in the dark pool?
I have no idea.
My order got sent.
Your sell isn't good enough for Hardy. Sorry, it's
Yeah,
nothing
it's just
personal.
TD Ameritrade, yes. They only sell the white affluent Americans apparently.
I am neither.
I was really scared that we were going to get set up for that spring action you were talking about, Hardy. That would have really just. Yeah.
Well, the spring sprung, but it sprang through the floor. Know what I'm saying?
Yeah.
It's like a jack in the box popping out the wrong end.
Yeah, I was worried about the spring going through the roof.
So I'm sure now Hardy would be perfectly fine with it going right back to where it was and just ending flat.
Matter to me, I already took my money out.
I meant because of your strangle side.
Yeah, pop is definitely still possible here.
One day I want JPOW to go on stage and just say a bunch of random trigger algo words and then just walk away. I know it'll never happen, but I want to see it.
It's funny because I was thinking something of that effect earlier today too.
There's a downside to trading at my size with these with these far out the money options. I don't always get filled entirely. I think I got to dial it back a little bit.
Yeah, I don't know. I mean, you've got open inventory of 4,000 at the 417, but I don't know what the 17. There it goes. It just sold. I just sold you my calls. There you go. Did you just get filled? they just get taken away.
All right, then looks like I have some of your contracts.
Did you get filled on them?
Most of them.
Yeah, there you go.
Hardy, you just need to be poor, and then you won't have these problems.
Yeah, what's that like? I'm
Well, we
also
were
putting in
discussing-
sell orders. So just for everyone who's following along, I'm selling half on either leg on a 150% gain. So basically selling half of my position of either my call or my put position if the price hits 13 cents. Any questions?
Are these fractions of a share?
No, in this case, these are options contracts. I'm buying strangles. So I bought SPY December 14 through 85 puts and SPY December 14 417 calls for 5 cents each plus commission. And I'm selling half of either side for 13 cents a share.
So the basis is this what the SPY index is going to do.
It's a strangle. The idea is that the price will move far away from the current price now.
Right. The price of the SPY, which is an index of several different.
Yes.
I bought the put side with you. I'm at 385 at 5 cents, and I'll go ahead and put my sell in.
You're on the put team with me.
On the strangle side, yeah, just to try to. I'm just gonna put my sell in at 10 cents. We'll see if it get a quick double or triple. I don't know. I don't know how. This is something I've never bought this far out of the money shit. I have no idea what's gonna happen.
Actually, no one's buying. Oh, that's why. Fuckers raised the price on me. All right, fine. So I'm in at 5.7 cents on the call side and at 5 cents on the put side. It's gonna skew my order a little bit, but that's okay.
Yeah, I've got my sell in at 12 cents on those. We'll see if who knows.
You guys ready? 2 minutes to go. I've got the press conference set up on the YouTube stream. Now just to hold your breath.
It's the final countdown.
Do-do-do. Do-do-do-do-do. I feel like everyone's so intimidated to say something right now.
I'm
Nah,
just
no
jamming to
fear.
this lounge music.
How about that crypto market?
Yeah, for those of you who are asking in the comments when you should sell, you should have figured out before you bought. Because there's no way you're going to be able to react fast enough to my saying when to sell.
I just want to give a shout out to all the veterans out there right before this big moment happens. Thank you for your service.
We're all going to be veterans after today.
For the people in the
It's
comments
been
that are
fun. It
confused
has.
why you can't find it, it's probably because you're looking on Robinhood, which doesn't have the option.
All right, it started.
For those who are asking, the strangle that I'm in at is, what is it, 385 puts and 417 calls.
Oh.
Though it might be a little late to get into that.
He hasn't started talking yet, so you've got a very small amount of time to get in.
Good afternoon. Before I go into the details of today's meeting, I'd like to underscore for the American people that we understand the hardship that high inflation is causing, and that we are strongly committed to bringing inflation back down to our 2% goal.
He's going to pull a Biden and not show up
Over the
until,
course of
like,
the year, we've
3:30.
taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt. Even so, we have more work to do.
Some of the Six Flags.
Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by a 0.5 percentage point. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we're continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive policy stance for some time. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed significantly from last year's rapid pace. Although real GDP rose at a pace of 2.9% last quarter, it is roughly unchanged through the first 3 quarters of this year. Recent indicators point to modest growth of spending and production this quarter. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.5% this year and next, well below the median estimate of the longer-run normal growth rate. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate near a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 272,000 jobs per month over the last 3 months. Although job vacancies have moved below their highs and the pace of job gains has slowed from earlier in the year, the labor market continues to be out of balance, with demand substantially exceeding the supply of available workers. The labor force participation rate is little changed since the beginning of the year. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on wages and prices. The median projection in the SEP for the unemployment rate rises to 4.6% at the end of next year.
Sold my 402
Inflation remains
contract
well
at
above our
$5.
longer-run goal of 2%. Over the 12 months ending in October, total PCE prices rose 6%. Excluding the volatile food and energy categories, core PCE prices rose 5%. In November, the 12-month change in the CPI was 7.1%, and the change in the core CPI was 6%. The inflation data received so far for October and November show a welcome reduction in the monthly pace of price increases. But it will take substantially more evidence to give confidence that inflation is on a sustained downward path. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food and has contributed to upward pressure on inflation. The median projection in the SEP for total PCE inflation is 5.6% this year and falls to 3.1% next year, 2.5% in 2024, and 2.1% in 2025. Participants continue to see risks to inflation as weighted to the upside. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 0.5 percentage point, bringing the target range to 4.25% to 4.5%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.25 percentage points this year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. Over the course of the year, financial conditions have tightened significantly in response to our policy actions. Financial conditions fluctuate in the short term in response to many factors, but it is important that over time they reflect the policy restraint that we're putting in place to return inflation to 2%. We are seeing the effects on demand in the most interest-sensitive sectors of the economy, such as housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 50 basis points today, a step down from the 75 basis point pace seen over the previous 4 meetings. Of course, 50 basis points is still a historically large increase, and we still have some ways to go. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 5.1% at the end of next year, a 0.5 percentage point higher than projected in September. The median projection is 4.1% at the end of 2024 and 3.1% at the end of 2025, still above the median estimate of its longer run value. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now. Our decisions will depend on the totality of incoming data and their implications for the outlook for economic activity and inflation. And we will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. We are taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the long run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I will look forward to your questions.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. You just talked about the importance of market conditions reflecting the policy restraint you put in place. Since the November meeting, the 10-year has declined by 60 basis points. Mortgage rates have come down. High yield credit spreads have come in. The economy's accelerated, and the stock market's up 6%. Is this loosening of financial conditions a problem for the Fed in its effort and its fight against inflation? And if so, do you need to do something about that? And how would you do something about that? Thank you.
So as I mentioned, it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place to bring inflation down to 2%. We think that financial conditions have tightened significantly in the past year, but our policy actions work through financial conditions, and those in turn affect economic activity, the labor market, and inflation. So what we control is our policy moves and the communications that we make. Financial conditions both anticipate and react to our actions. I would add that our focus is not on short-term moves, but on persistent moves, and many things, of course, move financial conditions over time. I would say it's our judgment today that we're not at a sufficiently restrictive policy stance yet, which is why we say that we would expect that ongoing hikes would be appropriate. And I would point you to the SEP again for our current assessment of what that peak level will be. As you will have seen, 19 people filled out the SEP this time, and 17 of those 19 wrote down a peak rate of 5% or more, in the fives. So that's our best assessment today for what we think the peak rate will be. You will also know that at each subsequent SEP during the course of this year, we've actually increased our estimate of what that peak rate will be. And today, the SEP that we're published shows that, again, that overwhelmingly FOMC participants believe that inflation risks are to the upside. So I can't tell you confidently that we won't move up our estimate of the peak rate again at the next SEP. I don't know what we'll do. It will depend on future data. What we're writing down today is our best estimate of what we think that peak rate will be based on what we know. Obviously, if the inflation data come in worse, that could move up, and it could move down if inflation data are softer.
Gina. Gina Smilik, New York Times. Thanks for taking our questions. The SEP, like you mentioned, suggests that the Fed will be making another 0.75 percentage points worth of rate increases in 2023. I wonder if you would foresee that being in 25 basis point increments, 50 basis point increments, sort of how you see the speed playing out going forward. And then I wonder what you're looking at as you determine when to stop.
Yeah. As I've been saying, as we've gone through the course of this year, as we lifted off and got into the course of the year, and we saw how strong inflation was and how persistent, it was very important to move quickly. In fact, the speed, the pace with which we were moving was the most important thing. I think now that we're coming to the end of this year, we've raised 425 basis points this year, and we're into restrictive territory. It's now not so important how fast we go. It's far more important to think, what is the ultimate level? And then at a certain point, the question will become, how long do we remain restrictive? That will become the most important question. But I would say the most important question now is no longer the speed. So, and that applies to February as well. So I think we'll make the February decision based on the incoming data and where we see financial conditions, where we see the economy. And that'll be the key thing. But for that decision. But ultimately, that question about how high to raise rates is going to be one that we make looking at our progress on inflation, looking at where financial conditions are, and making an assessment of whether policy is restrictive enough. I've told you today we have an assessment that we're not at a restrictive enough stance, even with today's move, and we've laid out our individual assessments of what we would need to do to get there. At a certain point, though, that we'll get to that point, and then the question will be, how long do we stay there? And the strong view on the committee is that we'll need to stay there, until we're really confident that inflation's coming down in a sustained way, and we think that will be some time. Now, why do I say that? If you look at you can break inflation down into three sort of buckets. The first is goods inflation, and we see now, as we've been expecting really for a year and a half, that supply conditions would get better, and ultimately supply chains get fixed, and and demand settles down a little bit and maybe goes back to services a little bit, and we start to see goods inflation coming down. We're now starting to see that in this report and the last one. Then you go to housing services. We know the story there is that housing services inflation has been very, very high and will continue to go up, actually, as rents expire and have to be renewed. They're going to be renewed into a market where rates are higher than they were when the original leases were signed. But we see that the new leases that the rate for new leases is coming down. So once we work our way through that backlog, that inflation will come down sometime next year. The third piece, which is something like 55% of the index, PCE core inflation index, is non-housing related core services. And that's really a function of the labor market largely. That's the biggest cost by far in that sector is labor. And we do see a very, very strong labor market, one where we haven't seen much softening, where job growth is very high, where wages are very high, vacancies are quite elevated, and really there's an imbalance in the labor market between supply and demand. So that part of it, which is the biggest part, is likely to take a substantial period to get down. The goods inflation has turned pretty quickly now, after not turning at all for a year and a half. Now it seems to be turning, but there's an expectation really that the services inflation will not move down so quickly, so that we'll have to stay at it, so that we may have to raise rates higher to get to where we want to go. And that's really why we are writing down those high rates and why we're expecting that they'll have to remain high for a time.
Buy the stocks that you really want. Now that they're
So
going to be really
someone,
affordable.
I have the transcript being generated right now of the press release, and someone did ask about the acceleration. He didn't explicitly say if he was going to do 25 or 50, but they're going to base it on the data leading up to the February decision. So if CPI continues to stay high or higher than expected, and if unemployment stays lower than expected, expect a 50 to 75 basis point move, which ties in rather nicely with the puts I want to double down on for Home Depot and other retailers that'll be reporting Q4. We need to figure out who the first one is, because they will likely drive the others. I believe Target is the first among retailers to report their Q4 earnings. So that would mean buying puts against the likes of Target, Best Buy, Walmart, not Amazon, because they're mostly e-commerce, and Home Depot, maybe Lowe's, the Home Depot competitor.
Hardy, what do you think about a possibility where Target might be a false identifier for the rest of the industry?
It doesn't matter
Like
if it's a false identifier. What matters is what the rest of the market thinks, their willingness to buy or sell.
So you think that, I guess what I'm asking is, do you think that there could be potentially two moves where you have positive news if Target beats, but then the other companies miss, and so we have like a correction? Or do you think just don't
That's
even worry
even
about
better
it?
for me, if that's the case.
I mean, that's where I want to front run Target, because I think Target is a good recession play, but I think that using it as a barometer for other retail stocks long term could actually create two opportunities where you like.
It's not long
play
term, it's just for the
Target.
Q4 earnings report.
So do you know like
Another example would be
Q4
Snapchat and Meta. Whenever Snapchat goes down because of they blame on iOS, Meta falls with them. It's not always
Oh yeah,
justified.
that reminds me. Sorry, that reminds me about social media. Isn't there's some legislation being introduced for like banning TikTok or something? So that would be bullish Meta and Snap.
It's rumor. You buy that. When the news drops, you sell it.
That's been the rumor for a while, though. That guy I was
Correct.
telling you about, the blackjack player that won't invest in stocks, has been saying like Meta is a play because Zuckerberg always wins long-term bets, but also the TikTok banning is imminent, so Meta is the play here. But I feel like
I'm of the
we're just
opinion.
speculating too much on TikTok.
I'm of the opinion Zuck's going to need to keep Snapchat afloat or Twitter afloat. in order to justify pushing TikTok out of the market for regulatory reasons and to avoid being called a monopoly. Sort of like what happened between Microsoft and Apple back in the day. Apple got an investment from Bill Gates in order to prevent the appearance of a monopoly.
Very busy. I thought Zuck just has Instagram and Facebook. I don't think. Does he control Snap and TikTok?
Zuck doesn't control Snap or TikTok. It's entirely possible Facebook or Meta is paying lobbyists to convince Washington to ban TikTok because Snapchat and Twitter are enough comparables in the social media space to say, hey, look, we're not a monopoly. Look at this thriving competition.
Speaking of other companies that we can use as a barometer for earnings seasons, are there any other sectors besides retail that you're looking at, Hardy?
Not specifically. The only reason why I'm paying attention to retail now is Q4 earnings. What was notable is that the Black Friday news focused strictly on the 5% gain in e-commerce sales. Now, when you put that up against 7.5 to 8% inflation, it's basically a wash. What's notably missing is the increase in retail brick and mortar sales. There doesn't appear to be one. And couple that with the friendly story we received that Home Depot has missed their Black Friday sales targets by, 15 to 20% or something like that. And then tie that into the rest of the quarter and how that's going. I was able to get a really good deal on a 6-tool kit, Milwaukee toolkit for a friend to give for Christmas, basically. And leads me to think that earnings for Q4 will not be as good as it could have been for retail, for specific brick and mortar retail. So using Home Depot specifically, if the earnings expectation has revenue growing year over year, so if the expectation for revenue is higher than, let's say, 8% growth versus last year, I pretty much would look to buy as close to 0 DTE puts as I can over earnings. Yes, Ivy's going to crush me, so I need to see how much the Ivy crush is. But a 20% miss on revenue may be enough to overcome Ivy crush. So that's something that I need to work out as we approach Home Depot earnings. Any other questions? Oh, tough crowd.
I was just checking on my Carvana puts that I put in earlier when we were discussing their spike, and then we were talking about how people were selling off. So it's coming down gradually. I don't know if anyone else went in on puts on Carvana this morning.
Yeah, I'd be careful with that. I mean, they've already hit like $4. I mean, I guess they could go to 0, but how much? I mean, they lost like 98% of the value already. There's plenty of other not well capitalized companies that are.
The funny thing about losing 98% of your value is you can do it multiple times.
Yeah, just get infinitesimally small.
Yeah, companies take forever to die off the market. Blockbuster.
I'm trying to find out which companies were hardest hit or what stocks were hardest hit by this.
I like to see the biggest. I like to see the biggest movers, and then go from there.
I feel like there was so much. I mean, let's not go down the Tesla rabbit hole, but like in terms of components of the SPY that people look at. Yesterday, when there was that pop in SPY, and Tesla was the only one down, I was trying to piece together in terms of the rally, how many people are taking money out of Tesla now to take the tax loss, knowing that it's just going to tank. And if we ever see a bottom in Tesla,
Well, that's
just based
partly
on
why.
not like the underlying opinion on the stock, but more of like a macro factor. Because then when I started thinking of like, where would I take my tax losses? Okay, I would take Tesla. I would take my losses in Apple, Google, like take all those now because I want to get back in as soon as possible within the 30-day period after the wash sale period's over. But what are other institutional investors doing? Where are they taking their losses? Where's liquidity flowing out of that's cratering the price?
Tesla wasn't the only one. I'm holding Norwegian, and they didn't go up at all yesterday. But anyways,
Ford got cooked during that meeting.
Norwegian went down because USB gave their opinion about them. But I look at it as a better, better price to buy it.
UBS by any chance?
USB. I'm sorry.
USB stands for Universal Serial Bus, unless you know another bank named USB. I know UBS.
I'm sorry, Hardy. UBS.
Okay.
Yeah, I've been building my position in Norwegian since October. And yeah, yesterday Norwegian took a hit from those UBS. Can you give us a little bit more insight on those, like those downgrades and whatnot? Because I know Norwegian got a downgrade from, was it Credit Susie? I might be pronouncing it wrong. A few months ago too. Can you explain that a little bit more?
My problem with analysts, anything, is they're basically professionally paid shills. So it's no different from the shill DD that we have on WallStreetBets occasionally trying to convince you that a company is a good buy at a certain price. And in exchange, companies will reward these analysts with fees that are paid to the business. So like you have a collection of banks who have analysts covering a company. Company might hire that bank to do like M&A deals, and bank will make fees on those M&A deals and then shill the company harder through their analysts. So I, for the most part, ignore analyst statements and price targets because they are often so very raw.
Yeah, I learned that when they first downgraded Norwegian, and like just based on everything I've looked at, I was like, it's a good company. Why would you downgrade it? And like it's crazy how Royal Caribbean was tied in with those analysts. Just based on looking up stuff online, you could find that out. So I was like, nah, I blew off that downgrade and I bought more. And then I went up, and then now with this UBS, I was just thinking about it. I was like, why is this happening all the time?
Just ignore them all. This is the short answer. The other way to see it is you can tell which banks hold a specific company as a client. I don't know if anyone recalls, but when GameStop had their at-the-money share offering through Jefferies price target for GameStop suddenly went to $175.
Yeah, so that's what happened with that credit.
$22 a share.
Yeah, that Credit Susie downgrade. I looked into it, and like the parent company of Credit Susie has like a real big position in Royal Caribbean. So I was like, no, fuck this analyst. Sorry. I was like, what the heck with this analyst? You know what I mean? And so that kind of right off the bat, I was like, I'm just going to ignore these analysts and just kind of go based off of my view of the company.
Sorry to correct you, but it's Credit Suisse, not Credit.
Yeah, Credit Suisse. I'm sorry.
Yeah.
UBS, Credit
Sorry
Suisse.
to correct you, but it's
Fuck
actually Credit Suisse.
Thank you.
Thank you for your insight, everyone.
It's pronounced Ibiza.
Do you guys think we got filled down on SPY today? To 395.
What are you guys' plays for tomorrow?
Tomorrow, I'm going to go back into Manhattan and enjoy a nice holiday party at the venture fund I advise. Should be fun.
Nice, dude.
Oh, yeah.
But yeah, I think I'm done doing speculative trading for the year. Liquidity is pretty much just going to keep drying up between now and end of the year.
Yeah, that makes sense. Manhattan sounds fun though.
It does.
I'm
What's
not doing
SantaCon?
much.
Did that already happen?
It's not gonna happen. I'm just gonna be watching my lucid puts for the rest of the year. I'm kind of just. Yeah.
Oh, I'm not. I'm talking about SantaCon in Manhattan, not in
I thought you said Santa Claus.
I had a question maybe for Hardy. I was just looking at some companies that do a lot of M&A as part of their business, snatching up, I guess, private businesses. And I wondered, based on what you heard today, is that improve conditions for that type of business or make it worse?
It's just a way for a bank to get more fees.
But if a company is primarily M&A driven for its growth, is what came out today regarding the Fed, is that positive or negative for that type of company?
Depends on to what extent they use debt to finance that growth.
Okay, thank you.
Well, I'm out of here. Thank you guys once again. We'll talk to you guys tomorrow.
Sounds good. On the brights, well, depends on who you are, but on the bright side, looks like this soccer game is going pretty well, or football, depending on who you are.
Going well for who?
Yay, sports ball.
Is the World Series still going on? Is that still a thing? Who's winning?
Yeah, today's the semifinals, and then we've got the finals Sunday.
And thank you for the confirmation, Jay Swats.
Confirmation on.
Home Depot earnings is before Target.
All right. Hardy, do you want to kick off some laid back jazz music? Good old waiting music.
I've got Uber arriving in a bit with some catering, so I'll be off for a while. I'll leave this running for you all.
Well, thank you very
I
much.
noticed that Uber is contracting with Walmart now. I got some groceries delivered, and it took 2.5 hours to get 5 bags of groceries. Like, I was excited by the opportunity of Walmart and Uber partnering together, but I was curious if anybody else has an experience using that service. I'll take that as a no.
think we're all kind of spent.
Yeah, it's like the orgy just ended and everybody needs a cigarette.
It's too bad we were so close to making it through the trading day, but that's all good. There's always tomorrow.
Has anybody picked up some grinder at this price?
Well, it was $5.99 before. What's it at now?
84.
$5.84?
Yeah.
Even better. How much grinder do you have?
I have none. I'm looking for a rock bottom price. Waiting for it to hit bottom out, so to speak.
Oh, see what you did there. I feel like you're trying to lure people into this play.
This is the first time I've mentioned it, but it has been mentioned before.
Grinder bait.
How See, if this stock was just launched like a year or two ago, would have been the perfect meme stock.
Grinder?
Yeah.
I mean, 2 years ago, it launching into the pandemic, God, like it would have done so fucking poorly when everybody was forced to stay inside, especially in the coastal cities with the higher density of like a gay population, like LA, San Francisco, New York. They had the like strictest lockdowns. Can you imagine trying to IPO your dating app into that market? It would have been a fucking bloodbath.
Didn't Bumble IPO close to the pandemic?
Yep. And actually more likely to meet somebody on an app in practice. I'm bearish on dating apps just because I don't know. I don't see why it's attractive to meet somebody online.
Yeah, Powell basically said dating's going to be expensive until 2025. So
So in theory, Grinder dates should be cheaper than Bumble dates.
100%. Matter of fact, this is bullish because people will be looking for quick hookups, not expensive dating processes that stretch out over the course of 2 months. Does anyone else get the feeling like we weren't expecting Powell to extend the runway out to 2025? Or is that just me feeling like, oh shit, this is going to last a lot longer?
Yeah, I don't think. Oh yeah, Lebowski, go ahead.
I was just gonna say, saying, forget how it goes. Something like say the worst, prepare for the best, or something.
Yeah, I don't think.
Anyone else get the feeling that the SPY kind of rebounding a bit today, and it's just going to tank for tomorrow and Friday, just to get everyone zero DT puts out of the way?
I'm sitting here looking at my SPX. Fuck, I can't say this stock ticker. SPXS. I'm looking at it, debating whether to wait because I feel like where we're sitting at, there's all this disappointment in the market. And then there's all this like people's expectations were met because they have been set for so long. So if we just chop sideways, I'm going to regret not taking my gains here. But then I'm hoping that there's this other situation where people digest what Powell said. The retail investors talk to their advisors at Edward Jones and they say, well, if it's going to be a rough 2 years, we probably should start taking this money out now.
Hey,
I'm wondering
I'm gonna
what those
stop you.
conversations look like.
I'm gonna stop you and tell you, take your gains, or at least take part of it. Okay. That's
Oh, I'm
financial
taking
advice.
gains now because it's more a matter of like, which gains do I take now versus which stocks are going to be insanely cheap in like a month and a half. Such as like, I'm going to be the guy that's going to be dollar cost averaging into Tesla the next 2 months. And then I'm either going to be very wrong when the price is at like 120 instead of 205, or I'm going to be happy because my average cost will be like in the 140 to like 175 range and I'll be getting out at like 215.
Okay.
I think we were talking about Tesla earlier, and I looked at the chart. The last low it had was March 2020 there with COVID, and it reached $28.
Yeah, I think the argument has been made that using the chart is kind of pointless because of all the overhype in the initial part of the chart, it's really hard to compare it to the realistic expectation setting in now. So it's almost like when you look at their like 1 year or 2 year chart, you see all these like levels of resistance that actually won't apply going forward.
That's just the last big low I see. So that's, it goes back down there to like 50 maybe. Like it's not out of the question. What would your scenario look like there if it went down to 50? You're just backing up the truck and buying as much as you can?
I've learned that if you're that wrong, then it's time to just like take a step back and reevaluate rather than doubling down. So I'd probably just like look at how much I'm down, because if it goes to 50 and my average cost is like 140, I'll probably be like, oh shit, this is clearly the wrong side of the trade.
Spy's trying to come back.
Yeah. I don't know. It's hard to say
Stay
where
you're at, Spy.
It's just in a clear downtrend, and it's going through the 200-day moving average.
Yeah, I was about to say, just play that bounce. Just hitting the 200 days, it's going to turn around and go right back down. So
Yeah, that's what when I was looking at the 200 day, I was like, well, what are we going to do going into the FOMC meeting? Because Tesla was getting hit before, like yesterday, like that 5 to 6% move up. It was clearly like, if you're going to get out of Tesla, get out now, because it's only going down further.
yeah, I agree with that. I think it's got a lot more downside to go. What is it like? It's like the bottom of the market is like what, 6 months after the Fed pivot. So I mean, obviously this is way, way down the road, and there's going to be lots of volatility in between then and now. But, especially if the Cybertruck is a real thing in this markets.
They're just going to do like, oh, sorry.
I was going to ask, does anybody know offhand if Tesla's board has the power to remove Elon?
Depending on how much shares he holds on to here.
Yeah.
Yeah, it's a really nuanced question. It's almost impossible to know without seeing what kind of shares. Are they common stock that the rest of the board has, or is it preferred stock?
Spy is running.
And it's going to turn back around and run back down. Rates are high and staying high. We're not even close to 5.1% Fed funds. Think about that. What are we at right now? 2 or something?
My thinking, it has to go to the terminal rate. It has to be higher than inflation. So, what was inflation peaked at? Almost.
But they don't have to peak. They don't have to get to the peak of inflation. They just have to be ahead of where inflation is in that moment. That's why they waited so long to actually. Because by the time they get to 5, inflation should be at 5 or below anyway. So that's kind of, The other reason they waited so long is because they didn't want to spike rates right as Bitcoin was peaking, because all they would do is force everybody to start buying Bitcoin. I mean, think about it. If they started raising rates like before or right as Bitcoin start running up, if all other markets are going down, they know that the whole Bitcoin thing is like a fundamental thing because of the rewards getting chopped in half. So
it could have. I was just saying with Tesla is moving forward, they're going to have to start selling cars for less because people can't afford cars. So their margins are going to be squeezed. And they're going to face headwinds with not being able to raise as much equity with stock as they used to, with Elon selling all these shares and stuff. So there's a lot of headwinds going on with Tesla, and like the competition is coming. So, like, I think they're the most valued. They at one point, or maybe they still are. They're more valued more than every other automaker combined, and that's unsustainable.
Yeah, I agree.
Does anybody know what a typical car loan interest rate would be under these conditions? Because I would think that cars are not going to get any cheaper, but with the rate added on to go into a dealership and get a loan is going to bump up your payment a lot if you intend to buy a new electric car. And I don't think the dealers would be able to issue sub interest rates. I mean, without the
government's just going
0%
to
interest
offset
rates.
the cost. The government will offset the cost nominally with either some form of a tax credit or some form of a discount off the sticker price. Like that's what it's going to be. Like with Tesla, the case that, they're going to have to charge less is kind of already baked into what they're doing now. Like at first, there's a lot of contention between the Biden administration and Musk in terms of the EV credits, but I think he is, with his like position at Twitter, has more of a megaphone to say like, hey, look at the favoritism of the administration. And I think that in the future, people will be able to afford a Tesla because they're getting some form of tax credit. Plus, they've reached economies of scale with the gigafactory to be able to produce it for cheaper.
Well, let's say they can make cars as cheap as Hyundai can make gas cars, and they can issue loans at, I mean, the loan rates have got to be pushing 10% on a car loan. I mean, what would they be next year? Like I know in Canada where I'm at, I mean, most people don't have a job to be able to afford a new car anyways. And all they've been able to do is buy secondhand cars or used cars. And with the rates being low, that makes the payment more comparable to a new car. And now I just think new car dealerships are going to have a hard time finding anyone that can afford a loan at the current rates.
Okay, guys, I've arrived to hear everybody's updates on SPY. How are we doing, folks? How are we doing? Unfortunately, I was out Christmas shopping and I was unable to execute on SPY, but I was able to clear out of my Bud puts, which I had bought this week on the dip at a pretty nice profit. So how's today treating everybody else? How's it going?
I think many here will tell you could be better. It's not couldn't. It could be better.
I'm honestly happy I didn't get fucked.
So people here thought we'd get the M and we got the W. As you can see, it's made a W pattern. It always makes one of those two after Pal Talks, or at least in the last 5 times FOMC has reported it's made one of those two shapes.
I'm still thinking we're not dropping too much today because just need all the options people are buying today to expire. And then once we see tomorrow and Friday, we're going to start seeing some red. Today is Wednesday, right?
Yes.
It's Wednesday, my dudes.
Just checking. I'm thinking red. I got my puts are till Friday, so I'm thinking they're in the money right now, but I'm going to roll them out. I sold the half, so figure I may as well see what happens these next 2 days. I'm thinking more red.
Did you know that if you search SPY on Bing, it comes up with the Wikipedia article explaining Spider S&P 500 Trust, and below it, when it says explore more, it refers you to iShares, Invesco, VanEck, and WallStreetBets subreddit. It is literally one of the 4 websites it says you can go to learn more about SPY.
What? That's
Oh, yeah.
amazing.
Yeah, on Microsoft Bing. Funny as shit.
Gates goes the way.
It's not what it shows me.
I feel like we're all just Googling it now.
It is Bing, not Google, but yes. Wow, look at
Wait.
oil. It's just moving on down pretty aggressively.
I stepped away for the last hour.
Well, they one of the things Powell did mention was they're updating their forecast for growth to 0.5% for next year. So that's probably why oil is dropping.
I think boil's natural gas, but yeah, I mean similar price action, right?
Oh, sorry, I thought you said oil, not boil.
Oh no, boil the natural gas one. It's down 15.2%. Jesus, look at it go. But yeah, just imagine that. Like you're on Bing and you're like, I should learn about SPY, and then it like recommends you to WallStreetBets. It's funny as hell. Oh, it's a good one.
I think it's just doing that because that's your search history, dude. When I search it, it brings me to like Invesco, Yahoo Finance, and some other stuff. It's nowhere to see. WallStreetBets is nowhere to Reddit.
Here, you guys don't spend enough time here then.
Yeah, to be fair, I just bought this computer and set it up for streaming, so it has no search history on it other than degeneracy. So that makes sense.
How's the broadcasting studio coming along?
It's coming along. I'm having a problem with one of my microphones right now. That's why I'm on my tethered headset, but I'll get it fixed.
What do you guys think oil is?
I can't believe nobody bought calls on the dip. 0 DTE calls. Something killer.
I was thinking about it, but I didn't because I'm an idiot. But I might short that 200. I mean, it's already kind of turned around. I'm off the 200.
Some people bought some calls on a strangle play.
Oh, Hardy's back. Hardy, how's SPY treating you today?
We don't ask those kinds of questions here.
Oh, I'm sorry.
It's a trap.
A bunch of us did okay on SPY.
Oh, that was so soothing.
That was very soothing.
You know that Mullen Automotive stock?
Mm-hmm.
I've been selling covered calls on those at a 30% profit or 30% return on investment.
Jesus.
Selling on a 30-cent stock. So I have 500 shares of Mullen. I sold 5 covered calls for $30. Shares cost me $98.
Yeah, there's some serious speculation around that stock, which I think is causing people to FOMO into the options. Glad to hear you're collecting the premium.
Yeah, the funny thing is if those options actually get assigned, it'll be 100% gain on the stock as well.
Hello, guys. How are you?
Hey.
I'm doing all right. I sold my Bud puts that I mentioned this morning. I sold them when we had that violent down movement. And I'm disappointed in myself because I was out Christmas shopping and was not able to play SPY. So I missed the boat on that one.
What would you play? I mean, WallStreetBet was full of calls, like full on calls.
Oh no, I was saying this morning that I was going to buy 398 puts, which had I bought them, it would have been incredible. Except then I would have gotten wiped out if I had held them till end of day. I'll pop back up, but
There was a bunch of posts yesterday about the inflation slowing down. And people didn't seem to get, like, we need a post up that explains that it doesn't matter that the inflation slowed down, but it's not like disappearing. Like everything is still gonna remain expensive. So they still need to hike the prices. So they still need to hike the interest rates.
You want to do a play and walk away, just put in a stop loss and a trigger sell too. Conservative sell. That way you don't lose money, and if it does go to where you think it's going to go, you'll make it. While not sitting there watching.
Yeah, but I wanted to buy SPY 0 DTEs like at like 1:58 p.m., like 2 minutes before the Fed release. I wasn't able to do it. However, OK Helicopter yesterday said that he was looking at 398 puts on SPY. So I wonder if he got into that position. And I wonder if he cleared out on a profit. Something to follow up on.
Black, wait, I'm gonna mute you. Your mic is out. So Skal, what do you say about the WallStreetBet NFTs? I think Reddit NFTs.
I think they're.
Yeah, how did you get one, Simple?
How did I get one? No idea, but I'm not happy with mine. So yeah, I'm in 1% of top. What is it? Let me see the Karma Cometer or something like that. It's a WallStreetBets.
Look like you're in Bull Gang with a Greek Delta hat. I don't know.
Yeah, I mean it's cool. It's kind of cool. But I wanted Wolf. That's what I wanted.
I'm pretty happy
Hardy.
with them.
Yeah, I'm hard. So Hardy, you didn't get one, huh?
I know, right? So weird. Oh, speaking of which, I'm off to Belgrade in January. You still in Croatia?
Yeah, but it's pretty far from Belgrade. Like pretty fucking far. January, yeah. I'm gonna
No,
be
but I
in
think that'll
Split.
be the closest I ever get to you.
Oh, you'll come on one summer holiday when Little Hardy is bigger.
That's a good 2-3 years away when he can actually talk to the border guard.
Who here also thinks they needed to get the NFT, but they didn't got it? I mean, if you boys have any other topic, we can talk about it, the stocks. But I see you're out of topics. I just wanted to hear the general opinion of people on WallStreetBet about it.
Simple, if you don't mind, I have a question for the group.
Go ahead.
Right. So, yeah, guys. So I am trading from India. I don't have access to options, but I do run behind the rally of SPY going down further. So my question was, do we are we still expecting a good amount of Christmas run? If not, I was hoping to play a short run on the ticker SQQQ. I mean, I wanted to buy more of that ETF and hold on and hope that the SPY would fall given the inflation rate that's going to get kicked in and all the other stuff we talk about.
You can if you want, but SQQQ's value, or the drop in SPY has to outpace the theta losses that SQQQ suffers.
Mhm.
So there needs to be a sharp downward catalyst, and you kind of missed that today.
No, I actually did play it. I made a very decent profit today.
Oh, okay, then.
So I was asking like, should I keep on holding on to it and or should I just wait for the end of the year and then try to pick up on it again after the rally of Christmas? That's what I was hoping to get answered.
Well, SPY is down on the year, which means higher tax loss harvesting than an up year, right? Then you have the Christmas rally, which is creating turbulence, and then you have an election year, which historically the markets are up on average 11% in the year following an election or a midterm election. So probably stand aside on this one, mainly because you need the decrease in price to be greater than the theta decay in order for SQQQ to keep going up.
Right. Thanks, Harry. That actually made sense. Thank you so much for your time.
And your accent is great. Like this is the best English from an Indian that I have ever heard. Like, really nice.
Scald, any updates on Silvergate?
I think Skull is out, so he's he's not gonna give you an
Oh,
update.
my bad. I just saw like 3 objects that look like his NFT, but I should have looked at the hat. My bad.
Yeah, those 2 are opinion.
It's a me.
Okay, well. Opinion, how do you see what's your achievement in the community? Like, is it just on your profile, or like how can I check Hardy's?
Anytime he makes a comment, just click to the right of their name, and you should see. So Hardy's, for example, is top 5% karma this month, prolific commenter, and avid voter. Which you love to see. We definitely need more avid voters.
Can I see for myself, like, what's mine? Or
Yes, you have top shit poster.
top what? Top gay poster. What?
Yeah, exactly.
Jesus Christ, that was Rush.
You have what, like avid voter, prolific commenter. Oh, the same ones as Hardy.
I'm very
Interesting.
prolific. Yes, yes. Prolific is my middle name.
These achievements are part of Reddit's attempt to kind of compete with Discord, one of many. It's very interesting seeing them enter the social media space. It's like a full-fledged app that can potentially compete with Discord or Meta to some extent.
Nice. Yeah,
If
but
you
it's
had
really
to put your money in, let's say Elon comes to you and says, you can take private equity in Twitter, but you have to hold onto it for 3 years. Or Zuckerberg says you can take equity in Meta, you can hold it for 1 year, but you have to take it at a 70% discount. Which would you take?
Meta
Oh,
all year.
Yeah, I'd probably take Meta. I mean, first of all, it depends how much equity you're talking about, but for each. But assuming it's like roughly
So
the
basically,
same.
he lets you buy preferred shares in terms of liquidation, but at the market price, but you have to take a 70% discount and you're locked up for a year.
Meta.
Max equity would be like 100,000.
Meta, 100%.
Yeah,
What is
definitely
Twitter
Meta.
gonna do? What is Twitter gonna do?
Well, even without that, it's like I feel like Twitter is a lot more risky. And even after 3 years, you have no idea what the liquidity is going to be like because it could still be a private company. Whereas Meta is a private company and it's unlikely that they're going to go private anytime soon. Sorry, it's a public company. It's not going to go private anytime soon. So you have the liquidity there. Not just that, but since you can easily value the Meta shares, maybe you can borrow against them or use them as collateral, use them for margin if you really want to. Whereas Twitter is a different story. So yeah, I'd be curious to hear from the Twitter side though.
I think the instant liquidity and instant valuation of your equity is way more valuable. Like you guys said, like there's so much speculation and uncertainty over a 3-year time period, even if it was a publicly traded company. But I think people get lost in like the future potential and they get lost in the idea of Zuckerberg versus Musk over, a 3-year time horizon.
So I'm just looking at the net profit losses for Twitter. Like, goddamn, I don't know what Musk is gonna do, but yeah, it really isn't looking great for Twitter.
It's interesting that you mentioned that liquidity, or echoed that liquidity is like a positive value, which almost everyone says it is, right? But there can sometimes be value in whatever assets you own, not being illiquid to the point where, like, you can't easily update their value. I can't remember the entire argument for it, but I think it was in part of one of Matt Levine's columns. So I'm going to try and find that.
Yeah, like if somebody said, "Hey, I'll pay you twice as much, but it's all going to be in gold bars," you're like, "Sweet," but this is super illiquid in terms of like my real world transactional value.
So a funny stat. So Twitter gender demographics is almost 70% male in 2021, which is I'm not gonna say surprising, but it is kind of surprising. 70% male, and we all know how much advertisement goes on women spending online, much more than men.
What do bots identify as though?
That's true. That's a very good point. Yeah. Okay, sure. We'll see. Maybe Elon blesses us with some actual stats at the end of the year or next Q.
Yeah, he removes all the bots and it's like 98% male, 2% female, just like Reddit.
Nah, I think you would be surprised with Reddit.
I'm being hyperbolic, obviously.
No, I know, but just because they're not here, like there's plenty of Reddit female subs that are huge, really huge.
Yeah, I think that's the beauty of Reddit is that you can kind of get lost in your own echo chamber, which can be a good thing.
I think you're breaking up, Degen. Was he breaking up only for me, or?
No, he was breaking up.
Yeah, he's gone. Yeah, we'll be curious to see. I don't know. Let's Google. Let's see if there's a demographic percentage on Reddit. Yeah, but you need to opt out on your profile to actually click your gender. I don't think many people do that. So it says here that 63% is male, but this is just a calculation. This is not an actual fact.
And where'd Simple go?
Oh, he fell asleep. Sniper's got him. I'm falling asleep too, but I gotta make it. We gotta make it to the end of the day. We got 20 minutes left.
20 minutes.
Yeah. I'm trying to close my mRNA vertical call, short call now.
Oh, that must have printed.
Yeah, I'm up 50%. So
That's really good.
2 days to expiry, so I might just let it go.
We had a pretty wild day today in terms of viewership of this Reddit talk. We're trending down, sub 300, and then Fed meeting. We jump back up to almost like 400 or something. And afterwards,
I think
everyone
we
just died.
cut it off at market close.
Yes, I agree. By the way, guys, if you want, I think the Reddit recap avatars are dropping now. So I just got number 540. So you should go check it out. Should just be in the official app on your profile in the top right. Not sure if they're worth anything, but worth a shot.
I think I have meme regime number 333.
Do you really? Wait, how'd you get yours before mine?
I redeemed before you did.
Oh, you heard about it before I mentioned it?
Perhaps. I'll
And
put
you
it in
didn't
a...
think.
Here you go. This is what I have.
I see. I'm still in queue to be minted, so I think it's still a toss-up as to what exact mint number it is. You posting something in the comments? Oh, I
It's
see.
in well, I think you found it.
Good thing. I
Hi,
think
guys.
they're all the same style, the exact same image.
Usually how these mints go.
Oh, there's no like rarity or traits and stuff like that.
Hard to say.
Because I think mine looks exactly the same as yours. But 333 is a pretty cool number. All right, let's take a look at the Morocco game.
I think the game is almost done. France is going to go through finals as always.
I was really excited for Morocco, first African country to make it to the semifinals ever. And obviously then no African countries made it to the finals. So they came really close.
Till half, really close, yeah.
Sorry?
Till the halftime, it was really close. Almost till 60 minutes, they were playing really well. There were a couple of close calls too.
Yeah, they had way more possession for majority of the game than actually even now they have like almost double the amount of possession as France.
Very impressive.
It's too bad. But the finals, I'll probably stream the finals in the Discord, so that we can all have a good time watching that. But I feel like people really enjoyed the fact that we streamed the Fed call. I don't know if you guys found it handy, like hopping on the stream and then watching it. Let me know, because we could always stream more stuff, like even earnings calls if we really want to. And then it's just easier through YouTube and Discord as opposed to through Reddit Talk, which is harder to stream audio to. Comments are pretty quiet as well. I think we're all just talking to ourselves.
I had a little bit of recommendation, if you don't mind. So you stream on YouTube, right? So in that, we also have Reddit Talk being streamed in the background, right?
Yep, that's correct.
Right. So it was like I was hearing the whole same thing. We have a little bit of lag on the stream, right? So I was hearing the same thing here on the Reddit Talk and over there too. So if we could like shut that down when we're streaming something, that would be like really awesome.
Oh, because in order to watch. Oh no, but like I muted the stream, I think. Not at the very beginning. I think there was like a short period where it was like.
Right. Yeah.
Okay. Yeah. Yeah, I'll figure out the transition to make it more seamless for sure. But afterwards, like maybe like 2 or 3 minutes into it, did you still hear?
No, it was only in the beginning. Yeah.
Oh, okay, perfect.
Right. Thank you.
Thank you so much for your feedback. Did you get that Uber delivery, Hardy?
It was delicious.
Hey. Actually, I noticed something about Uber. Very interesting. I accidentally allowed my, Uber One subscription to go 1 month too long. So I reached out to them, got a refund, and they charged me $9.99 US, which converted to about 13 Canadian. And then when they processed the refund, they gave me $9.99 Canadian, which is really only a $3 difference. But I was quite surprised. Makes me wonder if I could do it in reverse.
Yeah, you'd have to have an American account, order in Canada, and then process the refund in America.
Or even find a currency where, like, 1 unit of that currency is many US dollars.
So you're saying if you buy Uber One in the Mexican peso, you'll come out ahead?
Yeah. Yeah, I mean, if the same bug persists. I think most likely they
What
just.
about the yen?
I think they probably use. Actually, yeah, I don't know. Yeah. I assume it's worth the $10 to find out.
We could just go full SBF on this arbitrage.
Oh dear. Get everyone on WallStreetBets to do it while shorting Uber. Brilliant.
Opinion, you move to Japan. I'll stay in America. Hardy can move to Canada.
Wait, I'm already in Canada. Why can't Hardy move to
Don't
Japan?
argue with the plan, damn it.
All around me, URG. Yeah.
Oh, yep. The game is over. Looks like they're in overtime. Sorry, were you going to say something? I didn't mean to cut you off.
I was just gonna say I can put Hardy up, but we gotta cut out the Tim Hortons. You can't be eating that fast food crap all the time.
So before he shuts the chat down, any other last plays for tomorrow? Just gonna play a bounce, or I think it's going to keep falling? I personally think it's going to bounce.
S calls.
Gotcha.
My phone died looking for that dumb avatar.
So is SPY
No.
over 400 or under 400, do you think?
I think it's going to be awfully close.
What was yesterday's close?
Yesterday's SPY close?
It opened at 401.61 today.
It closed at 401.90.
Let's say 399.90.
I'm going 401.
Bruh. It's been so long without talking. This is maybe a world record for our Reddit talks. Let's take a look at what's going on in the world of finance. Yes. Interest rate. It's hiked. Oh, highest level in 15 years. Did not know that. Yeah,
It's pushing up against that 200-day moving average on the 3-month chart on the SPY.
Interesting.
It's just like resting on it ever so delicately, like a babe on a silk pillow.
Oh, yeah.
$399.90 is looking good there, DJ.
Yeah, I'm bearish, so it's easy to be biased towards under 400.
I'm long.
Oh, whoops, sorry. Didn't mean to cut you off. What were you saying, Diamond Handed?
Just saying, I got my spiders. I'm long for tomorrow. I'll probably let go of them tomorrow. If, when they go up.
Yeah, the match is done, guys. France is through.
Nice. So who are they playing now? They beat Morocco, so they'll play Argentina.
Argentina, yeah. That's on Sunday, right?
Yes, 10 a.m. Eastern. Eastern?
I'm not sure.
Yes, I think 10 a.m. Eastern. We'll stream that in the Discord. 10 a.m. Eastern on Sunday.
That's awesome. Definitely join in then.
Oh, try and join a little bit early because we have like a verification process that takes like 5 minutes or so. Or it's sometimes longer.
I'll do that, yeah.
Yeah. But it's pretty cool. We're looking to build more things in the Discord to make it more interesting. We've got a couple games in there, including like these loot boxes, which I always lose at.
Yeah, there's blackjack slots. Crash is pretty fun. I think there's a loot box there. So.
I don't know what strategy to use for Crash. I feel like some people just wait and they won't take it unless it's like a 10x or higher. Because that's how you get the really big payouts.
Yeah, I think Cardi explained that the longer you go, the more chance you have it crashing. So
that's true, but you get significantly more reward.
I haven't found the sweet spot yet.
How many credits is it going to take you to find it?
My guess is someone keeps changing the sweet spot.
Oh no. I genuinely have no idea what the curve looks like.
just don't bet everything at once because it'll insta crash on you when you do that.
Another secret is make sure your bets aren't correlated.
And my mRNA order got filled, so I'm out of that position for a 50% profit.
Very nice.
So when's the next bout of Fed news that's coming? Or do we have quite a ways before we hear anything new?
Next Fed funds rate is in February.
February.
Oh, sorry about that. My phone died literally just 2 minutes before close. I wanted to ask, do you guys think we're going to close above or below 400?
Awfully close. Could go either way. We'll find out in 10 seconds.
We had two guesses. We had 399.90 and we had 401 guess so far.
Oh.
I'm gonna go 401.
399.33 appears to be the official close.
Woo. And I can't believe we did another full day. Sorry, go ahead.
No, go ahead. I was just making a dumb joke.
No, all good. Yeah, made it another full day. I gotta stop doing this.
Yes, you do.
But I mean, hey, if you guys are still here, that means you still had fun. All 134 of you. Well, 133, including since I'm doubled up.
We should probably go back to cutting off morning tack as soon as market opens and then waiting for like real events 1 hour before to 30 minutes after.
I mean, I like the all day thing, so I don't mind chilling all day.
Yeah, it's a different mix. I mean, it's kind of nice getting the opening move in. Oh wait, can you guys hear me?
Yeah, we
No,
got you.
Can't hear you.
Yeah, maybe till like 10:30 and then do like the half hour or full hour kind of thing. Does that sound reasonable? Go till 10:30 and then if there's like an earnings call or a Fed meetings call, you do the 30 minutes prior, 30 minutes after.
Sure. We also probably should find a way to announce the talks separately. So, do people use Telegram or well, we can't trust Reddit notifications, right? So
Yeah. Well, what I was thinking about doing is setting up like a Reddit talk notification in the Discord, and then also setting up a regular calendar of all of our events across the whole platform or across all the WallStreetBets like platforms. So it's on the list, but as you know, the list is ever growing. So hoping to have that like fully figured out by Monday, and then some of the other stuff we talked about by today. It never ends. But the good thing is I've received a lot of feedback and a lot of people who are interested in helping out. So it's still continuing to reach out to those who have reached out to me. So thank you so much for all the interest. And just to recap, that was anyone who kind of wants to see WallStreetBets shaped a little bit differently or take a more active role in the community. You know, feel free to reach out to me via messages or chat. And I'll do my best to get back to you as soon as possible to see where we can get you guys all in. Thank you for the heart, gentlemen. Right back at you. Same with you, U.S. soldier, even if you might be a veteran.
actually,
Yeah, I
opinion.
was gonna
I
say
don't
he's
know
a
if we
veteran.
went over this, but the OpenAI released an open source transcription algorithm. So
Yes,
theoretically,
Whisper.
we can put this up on a VPS somewhere to transcribe all this stuff. Finally, make all the talks we've hosted since March, I think, searchable.
Oh, it goes back further than that. I think I've got it downloaded.
Right, but I don't know if they're downloadable unless you have them.
I think I have them. Let me see how far back they go. Well, I have them somewhere. I'd have to go dig for them. Oh yeah, it's not on this computer. But yeah, either way, like it's definitely something I want to do. My ideal end state for all that would be, hey, I want to read about Tesla. So you search Tesla, and then it comes up with all of the like segments where you can click into pre-market talk, and then just start listening to audio about people talking about Tesla. And sure, it might be like a year old, but then you can see what people thought about it a year ago, or read about it if you don't want to hear. So I think that would be pretty cool. So yeah, I don't know. Stay tuned, I suppose. That's just Whisper AI, but I want to have like a nifty little accessible UI, probably web-based.
Go ahead and rest opinion and the talk.
All right. Thank you very much for your permission.
Yes, you have it. You can go now.